distant memory, but it's in the rear view mirror now. 2 or 3 weeks have passed, markets have stabilized. But are we really going higher? If you look at last week's price action, it looks like it's more consolidative, right? I mean, key indices, you look at the Nifty, you look at the Nifty, actually not the Nifty Bank last week, but you look at autos, FMCG, some of the performing sectors, they're starting to consolidate at high levels. But rotation continues, and that's where the Nifty Bank performance comes in. Nifty Bank last week was up 3.5%, whereas some of the previously outperforming sectors, they pulled back a little bit. So this rotation is continuing. I mean, this Nifty Bank performance was led by, of course, the heavyweights, ICICI, Kotak, HDFC Bank, etc. And we'll talk more about this. There is also another big event here this week in India, which I think has an impact on financials over a period of time. I'll get to that in a bit. Focus is also starting to move towards budget expectations, which is not very far away now, about a month out. And of course, top of minds for market participants is if there will be something with regards to taxation in one way or the other. There was a story, for example, in the middle of last week in one of the papers essentially talking about how F&O income perhaps could be treated. So I think a lot of that stuff is going to come and occupy center stage. On global markets, again, neither here nor there. Friday was indecisive. Nasdaq was down a little bit. 10-year, the bond deal absolutely unchanged. Dollar index went up a little bit. We're closer to 106 than we are to 105. You had data, which is US PMI numbers, which beat expectations, both manufacturing and services. PMI surprised to the upside. So in any case, I mean, the market's kind of resigned to the fact that there perhaps is going to be only 2 cuts this year, Fed rate cuts this year. But will there be changes to that? We'll see as data comes through, and there is some important data this week as well. Oil prices absolutely flat, about $85 per barrel mark. That's Brent. Now, just a few things out of the US. There is the first US presidential debate will happen on this coming Thursday. What's top of mind for markets? I mean, the presidential hopefuls and their stance towards trade, tariff, China. I mean, I think those are going to be the big things. You also have the core PCE data. That's an important inflation indicator on Friday, which the market watches very closely. Actually, in terms of data, that's the big one. I'm not even mentioning the number of, speakers, Federal Reserve officials who will speak. Almost every day you'll get that sort of, this or that. But, as someone said, it's not it's the FOMC's Federal Open Mouth Committee. There is so much conversation, so much chatter, sometimes helpful, but mostly not. So I just sort of circle all of this back to levels. For the Nifty, we are, of course, at all-time highs. We made all-time highs. The immediate support, in case there is a bit of a pullback, is the 40 hourly exponential moving average, which stands at 23,474. That's 25 points away from here. That's the immediate number. And then the low of 23,206 comes into focus if the first sort of support level that I put out goes. And I think this is the more meaningful one as we sort of look ahead into the next couple of weeks. And the upside, of course, the highs are in focus. For the Nifty Bank, support comes in at the 40 hourly average, same sort of corresponding level, which stands at 50,792. And on the way up, of course, the break of the previous high, which is 51,957, will indicate a further up move. Nifty Bank, of course, in more focus because of the momentum that we saw last week. And sometimes, what is done well continues to do well before something else takes over. Rotation is a reality, but gains can continue beyond 1 week. Now, just a couple of other things before we before I hand it over to Rima and Mangalam. Monsoon progress is critical. June has been absolutely subpar, but the good thing is that the IMD, the Met Department, told us that June will be poor and then it will pick up in July and August. And of course, September as well. The season runs from June to September. June has been bad. Let's hope it picks up really. It needs to rain sort of all across the country. And I think markets will also be sensitive to this. The other thing is, of course, the fact that Indian bonds are going to be included in the global bond index, JP Morgan Global Bond Index, starting 28th of June. That is later this week on Friday. The process will start. And what that means is over the next, say, 10, 12 months, between 25 and $30 billion can come, passive money can come into government bond yields. The implication from a stock market perspective, and this is not 1 day, 2 days, but a sort of, process, is that cost of capital perhaps goes down. Because, you got the steady stream of money which will come in, which perhaps will keep prices in check. Which essentially, I'm talking about interest rates, which perhaps will be a little easier. The expectation in any case is that over a period of time, whenever rates have to go down, and I think this is another impetus in that particular direction. So we'll see how this goes, but that's a big, big event, which sort of many in the bond markets have been waiting for many years. It's finally going to come true. The GIFT Nifty indicating a 100-odd point lower start. So what I think, as I said earlier, becomes relevant is that 23,200, 210 kind of level where the last low was made. Rima.
Hi, Prashant. So, in fact, most of Asia is lower and pointing to losses.
Yeah.
So pull up Taiwan, that's down 1.5%. Hang Seng in China is currently down close to about 0.9%. Nikkei is the only outlier in the Asian APAC region, which is currently up. That's up about 0.25%. But most of Asia, as you can see, is under pressure. And that just ties in with the weakness that we're seeing in GIFT Nifty, down close to about 100-odd points. Just stacking up all the cues you need to watch. One, the market will react to the GST Council meet, which took place on Saturday. We'll talk more about it, the impact on railways, fertilizer, the progress of monsoon. Also, the June's RBI Monetary Policy Committee meeting, the minutes were out. And while it continued to show that, yes, there was a hold, the vote share has changed. So earlier it was 5:1 in favor of a hold. Now it's 4:2. Also, in terms of flows on Friday, the DII's net bought 1,237 crore. The FI's net sold 1,790 crore. Though for the full week, from Tuesday to Thursday, the FIs had pumped in money. And for the entire week, we're looking at an inflow of 9,100 crore by the FIs last week. US markets flat finish, as Prashant pointed out. But for the week, we had gains of about 1.5% for the Dow. Today is also the first session of the 18th Lok Sabha, which begins today, and you largely see oath-taking by the newly elected members. The Sensex's semi-annual rejig is also effective today. In a nutshell, Adani ports in, Wipro out. But this week, apart from the JP Morgan bond index, which we were talking about, there is also the telecom auctions, which begin tomorrow. You've got the June monthly expiry. So on the F&O front, Thursday is going to be a very crucial data. US economic data, core PCE is most important, but you also have the final Q1 GDP data, the jobless claims, PMI, consumer data, and there's also primary market action because tomorrow Allied Blenders and Distillers, it's a big one, 1,500 crore of an IPO, which opens for subscription tomorrow, and then a smaller one, Vraj Iron and Steel, also a main board IPO. They're looking to raise about 171 crore rupees, and that also opens for subscription this week.
So primary market action is something that we'll be watching out. For me, in particular, I'll be looking at what happens when the GIFT Nifty's dip comes by, because if you look at the way the market has moved over the last 3 trading sessions, there has been supply coming in, and this week is likely to be no different. From an F&O standpoint, the most important thing is that the June series expiry week begins, and this is also the week where there won't be as many events as what we're expecting in the July series. So consolidation likely ahead of event-heavy July series. What exactly is it that the market's been doing? Over the last 3 trading sessions, there has been supply coming in as soon as the Nifty crosses that 23,600 mark, around 23,664. So the day's high over the last 3 trading sessions, around 23,660, and from the highs, we've seen corrections of almost 100 to 150 points. What's more important, however, is that the day's low has been maintained around that 23,400, 23,350 as well. And that's a crucial zone to watch out for. In fact, if you look at the way the option writers have positioned themselves for this week, the 23,600 call is extremely active with a premium of 84 rupees. And at the lower level, you have the 23,500 put, 23,400 put equally active for a premium of almost 100 rupees if you must. What does this explain? That the Nifty congestion is likely to be between 23,650 to 23,700 and the support zone between 23,350 to 23,400. Not much change in the F&O positioning by the FIs as well. They went big long last week, so the longs are now at 57%, shorts at 43%. On Friday, it did not change much from Thursday itself. What can move the market out of this range or below this range? Of the Nifty Bank, because it broke out last week. 3.5% was the up move that we saw. There was profit taking on Friday. The big question, can the breakout sustain on the Nifty Bank or not? The other couple of things that we'll be watching out for, the big triggers for July series will be the union budget. Then you'll have the Q1 FY25 update season and then followed by the results season. And the monsoon spread, of course, is something that we'll be watching out for. So this week, likely to be a week of consolidation ahead of the event-heavy July series.
Okay, thank you very much for that. I think the Nifty Bank has recorded gains for the 6th consecutive week with the 3.5% up move that we had. On the equities front, Chetan Seth of Nomura says the near-term focus for the markets will be the US core PCE coming week, which will likely show another month-on-month deceleration according to their economists. If this indeed is the case, They think that it will continue to support risk appetite until at least the non-farm payrolls report, which is out on the 5th of July, and it's likely that Asian stocks may even overshoot their fundamentally derived fair value estimates. However, as we get closer to the US election, Nomura believes Asian stocks are likely to be range-bound, with gains likely capped amid an uncertain US election outcome.
Okay, well, let's get you some money market views here. On the rupee, we've got B. Prasanna of ICICI Bank, who says that relatively weaker economic data, dovish central bank commentary versus the US Fed and election-related uncertainties in Europe and UK made the dollar stronger in the near term. Asian currencies broadly weakened, led by the Chinese yuan. However, rupee is expected to outperform its peers owing to impending bond inclusion flows and better domestic macros. RBI will continue to smoothen volatility either side, and he sees the rupee trade between 83.3 to 83.7 to the dollar this week.
On the bonds, B. Prasanna says global yields consolidated after breaking lower from the near-term range as incoming economic data continued printing softer numbers. Locally, positive demand-supply equation dominated the market sentiment, and yields rallied ahead of the JP Morgan Global Bond Index inclusion kickstarting on the 28th of June. He expects positive momentum to continue with the 10-year benchmark bond yield trading in a range of 6.9 to 7%.
Right, a lot of stock-specific action as we kickstart this week, and we'll get to it in just a bit in our special top 10 segment. But the stocks that we're broadly looking at from positive news point is Sun Pharma, Lupin, we have IGL, Garden Reach Shipbuilders, Inox Green Energy, and Prestige Estates. Stocks on the back of negative news flow would include the likes of CarTrade, where a big, large trade is impending, Cipla, Ujjivan SFB, and some others.
Okay, well, let's get some perspective on the global stuff first. Jeffrey Dennis is independent emerging markets commentator, is joining us right now to take some questions. Jeffrey, great to have you with us here. Good morning. Thanks for your time. Foreigners seem to be returning. There's a lot of room to return because, if you look at banks, for example, which is the sector here in India, which they used to own in the most sort of large fashion, there was a lot of selling, especially in banks, and banks have started to perform again. What's your sense, Jeffrey, on the stance of foreigners towards emerging markets and, of course, the best performing amongst EMs, which has been India?
Well, I think if you look at the overall data, clearly emerging markets are having a decent year. They're not having a great year. They're up about 5 or 6% in terms of the overall index. But I was just updating my numbers just before the call, and all of the increase this year, or virtually all of the increase this year, is accounted for by two markets: Taiwan, which of course has a lot to do with what's going on in the US tech sector, and now India. Now, I think if we look at India, obviously, given who I'm talking to, it's very good to see this nice recovery that you've seen, steadiness and then a modest recovery since the election sell-off. And I think there is a lot of optimism still about the Indian market, and that is clearly coming from what is still a very, very good macroeconomic outlook. I think we're not far away now from interest rate cuts in India, assuming the currency continues to hold up, which it's doing. And one of your colleagues was mentioning the inclusion of India in the JP Morgan Bond Index, which would increase fixed income flows, which will have some sort of spillover effect into equities as well. So I see the emerging market picture overall being a little bit cloudy, with the dollar's rally really hurting a lot of markets. But within that, I think India looks very good indeed.
What's your own expectation? When are we going to see the first rate cut from the Reserve Bank of India?
I don't really forecast that, but clearly inflation's coming down steadily, slowly, to be fair. Real interest rates are sitting around 2.5%. I would have thought we should get a rate cut within the next 3 months or so. I don't really have a formal forecast of that, but certainly we should be moving in that general direction, because one of the big stories in emerging markets one of the big stories in markets over the last few weeks has been the strength of the dollar overall, as the ECB has started to cut. 1 or 2 other central banks have started to cut. We've had to push out some expectations of when the Fed is going to cut first time, which I thought was July. It's probably now going to be September. And what that has done is push the dollar up, which is typically poor for emerging markets. And yet within that the rupee's held up relatively well. Now, I think the budget situation will be something that the markets will watch and the central bank will watch, the RBI will watch. But the inflation trend, the steady dollar, gives me hope that we'll see interest rate cuts within a few months in India.
Well, you spoke about two things. One, you said that the future for emerging markets in the very near term looks a little cloudy, and in that India still looks relatively better. If you could give us a sense of, your expectations of returns from the emerging market space as a whole, and in that India. And in India as well, what are the sectors that you believe are poised to grow faster?
With respect to emerging markets overall, I think assuming that the Fed does start to move in September, as I say, I hoped it would be July, but it's probably too late for a rate cut in July. The economy is clearly slowing a bit now. The unemployment rate at 4%, I think, is a signal the Fed will be cutting before too long. Plenty of commentators think that the Fed is probably risking a steeper slowdown if they don't move quickly. Once the Fed starts to move, I think you'll see a weaker dollar, and that will provide some support for EM. My call for EM for the year as a whole is up 10%. We're up 5.5 to 6 now. I'll stick with that 10% call, frankly, at this point, which probably means we will underperform developed markets in 2024. As far as India is concerned, in terms of sectors, I still think investors should be focusing on domestic sectors. You mentioned banks a few moments ago. I would certainly focus on banks. Given the economy still growing at 7% plus, some of the other leading domestic sectors that would look interesting for foreign investors. And I think there's always going to be a lot of foreign investor interest in some of the technology names, some of the pharma names as well. And so that would be the way I would tend to look at it. Although I don't really have a formal model portfolio, but those would be the themes I would focus on.
What's the call on developed market returns? You said 10% for emerging markets for 2024.
Like, unless the US has a big sell-off, which I don't think is coming, it's probably going to be in the 14 to 15% range, I would think. I think the US is going to slow down. I think it will still go up. I'm still bullish the US. But I think logically it'll slow down for a period of time until we get some more clarity on when you start to see a rate cut, and is there a risk to the economy. I still think the soft landing is intact. The other big driver of developed markets has been Japan, which has lost a bit of steam lately. And so I think up 10% or so at the moment. I suspect it'll be up about 15% for the full year. The risk to that would be to the upside, I think, depending on how strong the US. But I think the US will lose a little bit of momentum now until we get much, much more clarity as to when the Fed is going to cut rates for the first time.
All right. And India, just a word. You said EMs would be 10%. How much would India be?
Oh, sorry, forgive me. India's up about 14% now in dollar terms year to date. And I think that's going to go up to probably around 20 by the end of the year. I'm not super bullish about markets from here. I'm just positive generally, modestly positive. And I think the Indian market in dollar adjusted terms, which is obviously what I focus on as a global, as a global commentator, I think it's probably going to be up something like close to 20% for the full year.
Okay, well, Jeffrey, we'll leave it there. Thank you very much for your time. Great speaking with you. Appreciate you joining us here on CNBC TV18. We'll take a break. We are back. Lots of stocks to discuss with our research team. We are back with that in just a bit. Stay with us.
$25,000 crores and counting. That was the amount of block deals which have happened. And again, this week was largely dominated by MNCs, right? 3 large MNCs have sold big chunks into the Indian subsidiaries. So to start with, Indus Tower, Vodafone PLC sold 18% stake in a single day, and they've raised 15,000 crores by selling that 18% stake. They've very clearly mentioned that they will use the proceeds to pay off or to repay the lenders. They'll still be holding 3% stake in Indus Tower. That was a large block deal. The second block deal was ZF Commercial. WAPCO, which owns 75% in the Indian arm, they sold nearly 7.5% stake in a single day and have raised close to 2,800 crores by selling that stake in the Indian arm. So that was second large block by an MNC. The third was Gland Pharma. In Gland Pharma also we saw Fosun, which is a Chinese parent company. They sold nearly 6.5%, nearly 6% stake, and they've raised close to 1,800 crores by selling their stake. They were owning close to 57, now will be close to 50%. So these were the 3 large block deals where MNCs participated for this week. But that's been the trend as well. It's not the first thing, or maybe it's not the last thing as well. If you remember, I highlighted in the past as well, if you look at the past few large block deals from MNCs, Timken stands out in May 2024. The parent company sold nearly 6.5% stake. They sold a second tranche as well very recently. So Timken was a large block. ITC was another large block where BAT sold 4% stake, and they've raised almost to 17,000 crores by selling that stake. So that was another large block. And the last was Whirlpool. In terms of size, that was the largest. 24% stake was sold by MNC in an Indian arm, and they raised close to 4,000 crores. So
Welcome back. It's time now to apprise you of the top stocks to watch this Monday morning. This is CNBC TV18's list of top 10 stocks for the day. Our entire team is here, and let's kickstart that with the first stock of the day, and that's the fertilizer after the GST Council meet, which took place on Saturday. Sonal, what were the key takeaways?
Well, it is something very different from what the street had estimated. There was an expectation that there could be a cut in terms of GST rates on fertilizers, but it was just a discussion. And after this, the GST Council has referred the proposal to exempt fertilizer sector from the 5% GST. It has been referred to a group of ministers. Additionally, the committee has also proposed reducing GST rates on nutrients and raw materials. So an actual cut hasn't come by. It is just referred to a group of ministers. And remember, on the back of this possible announcement, the stocks had rallied a lot. We did indicate earlier as well that even if a GST cut comes, it will not be a big benefit for all these fertilizer names. It could not impact their P&L so much. So see some profit booking in the fertilizer names because they had run up already so much ahead of this GST meet.
Take that point entirely, Sonal. Thanks a lot for that. A 30-40% up move is what we saw in a lot of fertilizer stocks. Though there were signs of profit taking on Friday, may continue today as well, as there was no meaningful relief coming in for that space. Let's move on to Vivek now. He joins in with the block deal of the day. Vivek, CarTrade.
Absolutely right. So block deals continue. So today it's the turn of CarTrade to see a very big block deal. The base size of this particular block deal that we're discussing is 10.4% of the total equity with an upsize option of another 2.5%. So who are the sellers? As per the term sheet, Warburg Pincus affiliate, which is Heidel Investment, is looking to sell close to 7%. They have an upside option of another 1.7% total equity. And Temasek Holding affiliate, which is McRitchie Investments, they are likely to sell close to 3.5%, and they have an upside option of another 0.9%. So what is the total size of the block? 400 crore will be the base size with an upsize option of 100 crore. Floor price is 820 rupees a share, which is 4.3% discount to the last closing that the stock saw. The lock-in period, for further sale of shares is just 75 days. So there could be an overhang as far as further sale of shares is concerned. Why are we saying that? Because Warburg Pincus, that's Heidel Investment, held almost 17.4% stake at the end of March quarter, and Temasek, that is McRitchie Investment, held 16.3% at the end of March quarter. So two large private equity investors, both of them are looking to trim their stake in today's block deal.
Okay, thank you very much for that. CarTrade Tech up 20% this year, up more than 70% in the last 1 year, but still trading well below its issue price, which was close to 1,600 rupees. So the stock has been a bit of a big underperformer. But let's focus now on the pharmaceutical space. Lots of stocks on our radar. Ekta is joining in. But Ekta, first, let's start with Sun Pharma.
Well, yes, Sun Pharma is in focus because they've announced the outcome of the phase 1 trial of a drug under development, which is GL0034, which is utriglutide. Now, that is basically a GLP-1 inhibitor. To understand this better, it basically belongs to the same class of drugs such as Ozempic and Wegovy by Novo Nordisk, as well as Mounjaro and Zepbound by Eli Lilly. Now, GLP-1 drugs, as you know, are used to treat type 2 diabetes as well as obesity. In 2023, the sales for GLP-1 inhibitor drugs were $50 billion, and it's estimated to grow to $100 billion by 2029, though some believe that that's actually an underestimation of the size. The impact for Sun Pharma, the drug is still in very early stages of development. It's just phase 1, which they've conducted. But it gives you an indication in terms of the prospects that they have for their specialty business. You can expect the stock to probably be in the green.
All right. On the other side, Ekta, Ciplas, the US FDA, the 483 has come.
We just have news that the US FDA has inspected the Goa facility at this point in time. It was inspected from the 10th to the 21st of June, and they've been issued 6 observations to the Goa plant. Now, remember, this is important because the Goa facility has been under warning letter since Feb of 2020. And remember that the Indore plant has also been under warning letter since November of 2023. So now we don't know what those 6 observations could be. But, topping it up after a warning letter gives you an indication that maybe it could be a tougher road ahead for them to resolve the issues. Now, remember, for Goa, the cancer drug Abrixon is likely to get now pushed out because it's filed from that facility into late FY26. Elara, for example, estimates that they could have made $25 to $30 million from the drug in FY26, but now it's probably going to be pushed out much later, along with more competition, so that opportunity is likely to be diluted.
And finally, Lupin?
Well, Lupin, it's normal course of business. They've received an establishment inspection report for their Somerset facility in New Jersey. They had received a VAI, or a voluntary action indicated status, for the plant. It was inspected from May 7 to May 17. And at that point in time, the US FDA had issued 6 observations, but they've managed it well. And now they've received an EIR with a VAI, which gives it a green signal to basically supply to the US.
All right, let's talk about the financial space now. Abhishek joins in with an update on Ujjivan Small Finance Bank. Abhishek.
Well, Mangalam, they held an analyst or investor day on Friday, and the key takeaways is that stress is increasing in the MFI or microfinance sector. We had highlighted in May that provisions and NPS for the microfinance sector had increased in H2 FY24, and this is continued to be seen that asset quality will deteriorate and credit costs will rise for these players. So they have guided for credit costs to increase to 1.7% from their earlier guidance of 1.4 to 1.5% for FY25. Remember that in FY24, the credit cost was just 1%. Loan growth guidance has also been tapered down to about 20% from 25% that they envisaged earlier for FY25. And ROE target hence has been reduced to 20% for FY25 versus 25% that they had given out earlier. They had also mentioned in the investor or analyst meet that they will apply for a universal banking license in FY25, probably in next 6 to 9 months. Back to you.
Thank you very much for that. Let's now go back to Sonal for more on IGL and the price changes that we've seen there. Sonal.
Well, yes, IGL has gone ahead. They have increased CNG prices by 1 rupee with effect from 22nd June. While it would look like just a 1 rupee hike, remember, just before the elections, there was a price cut of 2.5 rupees per kg. And there was an indication that the regulators want these city gas distribution companies to cap their profit margins and ensure that there's suitable pricing as well. Now, remember, this has come on the back of lower APM allocation and rising global costs as well. Morgan Stanley says they have an overweight rating on the stock, but they say that amid global gas shortages and decreasing APM gas allocation, IGL has hiked CNG prices, but still CNG remains attractive to petrol and diesel, and this hike could support margin normalization, and that's why they're positive on the stock. They remain overweight, but investor confidence on growth should return as the EV policy overhang unwinds, and that would be one major trigger to watch out for going forward.
All right, take that point. So, Sonal, thanks a lot for that. Let's wrap it up with Vivek then. He has a bunch of stocks that he's watching this morning.
Well, that's right. Quite a few stocks with news flow, that's come in post Friday market close. First on our radar is Garden Reach Shipbuilders, a significant order win coming in for this particular company. The company has received an order for construction of delivery of 4 multi-purpose ship vessels. They are of 7,500 DWT, that's deadweight tonnage. The company also has an option to go ahead and build another 4 ships in the near future. This particular deal was signed between the company and a German-based company, CarTrade. Now, the total order size is close to 450 crore, that's almost $54 million. The next stock on the radar is Inox Green. Some positive news are coming in. The board meet has been scheduled on June 26th, and this is to consider a fundraising proposal. And lastly, Prestige Estates Projects. 2 weeks ago, we had indicated that there was a likely chance that the company could go in for a value unlocking as well as a fundraise. So along expected lines, in the board meet that was scheduled on Friday, the company has gone ahead and approved a fundraise via the QIP route up to 5,000 crore rupees. And separately, the company is also looking to unlock value in the hospitality segment, which the name of that particular arm is Prestige Hospitality Ventures. That could be either via primary or secondary issue. Most likely it will be going for the IPO route. That's what our sources indicate to us.
Thank you very much for that. A quick recap then of the top stocks this Monday morning. Stocks with positive news flow are Sun Pharma, Lupin, IGL, Garden Reach Builders, Inox Green Energy, Prestige Estates. Stocks with negative news flow are fertilizer companies, CarTrade, Cipla and Ujjivan Small Finance Bank. And I guess we could throw in Delta too, because the street was hopeful of some rationalization in the GST Council on the online gaming route, but I think that's not happened.
Well, we did see a couple of days of positive reaction. Thereafter, on Friday, there was some money taken off the table. So, in any case, had that come by, that would just been a sentiment positive as well. So, let's see how that pans out too. But Manisha Gupta joins in for a roundup of all things commodities. Manisha, not much changing in the oil space, but the other commodities that you're tracking?
Well, yes, but I'll start with the crude oil prices because I want to tell you that in the last 2 weeks, the prices have seen 7% gains there. And yes, at this point in time, the reason that you're looking at flat moves is because there is strength in US dollar. That seems to be weighing onto the prices. But on the other side, there are various reasons that you still have 85 holding for crude. One is that there are escalating geopolitical tensions in Israel, which is where the troops are advancing further into Gaza. Ukraine attacks on Russian oil facilities continue, and the U.S. Demand seems to be improving because there is a decline in inventories. So is the reason that 85 continues to hold here. The strength in US dollar, the high bond yields, the strong business activity data at a 26-month highs is definitely weighing on other metals. So whether it's about precious metal prices where gold and silver are trading into the negative, it's a similar scenario for the industrial metals also. So whether it is iron ore, which has continued to decline for 4 weeks, or the steel prices, which are trading near 2-month lows, we also are looking at pressure coming in for copper, which is also trading at a 2-month lows. It also is a decline in aluminum, zinc. So basically, many of these metal commodities have opened Asia Monday on a negative note.
Thank you very much for that. Get into a break. On the other side, we'll talk more about the setup this morning. Prakash Diwan will join in with some stock talk. We'll also have Naresh Patel, Executive Chairman and Managing Director at Ami Organics.
Blocks where MNCs participated, but even in general, a lot of promoters, a lot of strategic investors and PEs have sold large chunks in the last few months.
The valuation is just the score, is the way we call it. So we are all about playing the game. And our game is accelerated computing and building a platform. So for us, generative AI is the killer application among other applications for accelerated computing. And so, we've been doing deep learning since 2012. Jensen, presented to OpenAI the first DGX in 2016. So that's a very, very long and deep involvement with all of the ecosystem associated with generative AI.
So no overnight success, which is what people sort of suddenly, where did Nvidia come from? To the layperson, I mean, it's just a phenomenal story that's taken shape in the public perception over the last few years. But there's a lot of work that's gone in over the past 2 decades in building it out to be what it is today.
Yeah, I mean, we've been working on this for many years. We always work with all of the developers and all the research laboratories and universities, all of the startups,
Welcome back. You're watching us here on Bazaar Morning Call. In case you've just tuned in, the GIFT Nifty indicates a cut of almost 100 points at the start. The lower end of the trading range of the market would be tested today. What also will be tested is whether the Nifty Bank completes its or continues its breakout and how the mid-caps perform. Let's welcome Prakash Diwan now. Prakash, good morning. Good to see you in. The thing that we're watching out for today would be the fertilizer stocks. On Friday, we saw a big cut in all these stocks after an even bigger move in the previous 2 trading sessions. A lot of hopes were on some sort of GST rate rationalization. That hasn't happened now. So do you think all of that up move will be undone in the next couple of days? At what level do you buy them?
Good morning, Mandam. So I think what we saw on Friday was primarily a bout of profit booking after that, very sharp run-up that was there in the previous few days. The anticipation on the GST, of course, was one of the triggers, but there are lots of other positives, as I shared even last week, that could start working in favor of the fertilizer companies. Number one, you probably have gas pricing, which is expected to be benign. So a lot of the naphtha-based fertilizer units, which are primarily into urea, would probably start doing well. The assumption is that the positive monsoon will also be, something that the government might leverage to increase farm incomes or farmers' incomes, and that means that fertilizer usage would probably get much more balanced, if you will. It's not something which is today so easy to kind of calibrate, but the government definitely will do something where it's a win-win for the consumer and for the companies. And the third thing, if you really ask me, fertilizer companies have really been a pocket of largely PSU-owned segment, but hasn't got kind of re-rated. So there's this whole thing that there's some positivity that would rub off if things continue on the PSU spend. So yes, there could be some sentimental setback because there's this anticipation of the GST Council recommending a cut of that 5%, but it really doesn't move the needle much at this point in time. I would believe after that profit booking, you'll again see some portfolios start wanting to build it for the longer term.
Prakash, morning. Any thoughts on TBO Tech, the recent listing? Issue price 920, blockbuster day one. The stock is already at over 1,500 rupees, which means a 70% return from issue price. And today you've got a note from Goldman Sachs where the target price is, I think, 1,970. So a lot more upside even from current levels. Where do you stand on this travel platform player?
Good morning, Rima. Yes, you're right. It's kind of very stark that today you get a report even after that 17-18% of an up move, which gives you a 24% upside. And if you read through that very clearly, it's talking about a lot of reset on the PE expansion. It's not, of course, there is an element of some sort of an earnings growth and all, but it indicates that large brokerages have started moving slightly lower on the market cap ladder to find opportunities because most of the stuff in the top 500 maybe is probably fully valued. And this is going to be a trend, Rima. I'll come down specifically to TBO Tech, but I'm just telling you, this will be a case where fresh paper will probably start getting re-rated by most brokerages in a favorable way because of the fact that some of them are coming at a time where valuations are probably moderate enough and not this. In this case, I believe the valuations are getting into stretch territory very soon. And even if, let's say, you were to buy at these levels of 1,600, wait for that 25% upside, which is a price objective, it may take fairly long. So, it'll also go through consolidation. You'll probably see exits come up 30 days and 90 days. All of those exits have to get absorbed. And at these levels, there'll be very, very high levels of temptation for anybody to be able to book profits of almost close to about 70-80%. So I would refrain from buying at these heady valuations at this point.
Do you have a view on CarTrade, Prakash? Because, the market cap of the company about a year ago was close to around 2,500 crores. They had cash of almost 1,100 crores. Now the market cap has moved all the way up to 4,000 crores. They still have the benefit of the cash that they have on their books. There is a large trade today, so the selling overhang gets out of the way. The stock is still about a 50% distance away from its issue price.
Yeah, so the view is this where you see the price, Bangla, it's justified for the simple reason that this is a business that is waning. It's not something for the simple reason that it's fairly competitive. B, you really don't have the ability to scale up just because you started off at a time where there was novelty around it. The other thing is that most companies themselves have started doing a lot more work on the pre-owned cars and the segments, the premium segment that are selling. You look at even the largest player like Landmark on the distribution side, on the car dealership side. They've also started focusing a lot. Listen to their con calls very clearly. Their focus is on pre-owned cars. So that's something where these apps or these platforms probably haven't been able to give you that disruptive edge, and hence probably they won't receive that premium. So I would believe stay away. This is the same thing which happens in a lot of companies. We had a map company the other day, CE Infosystem, doing so well because of a re-rating and some upside that was brought in. But you have a Genesis now wanting to get into the same space as well, and they have enough data to back it up. So you never know what's going to probably slow down the anticipated growth in some of these companies which are trying to disrupt. So then you will have probably some other disruptor coming in and making things very different, look different. So I would look at much more sobering and boring businesses than some of these.
A quick word on Ujjivan Small Finance Bank. I don't know if you had a chance to go over the investor call takeaways, but they are talking about initial signs of stress in the MFI segment. And therefore, they've pruned down their growth guidance. So earlier it was 20 to 25%.
Yeah.
Now they're talking about a growth of 20%. They've increased the credit cost guidance too. And one, Axis today, by the way, has downgraded Ujjivan Small Finance Bank to a reduce from an add. One, your thoughts on Ujjivan Small Finance Bank, and is this going to impact any other stocks? Because the stress areas are Punjab, Haryana, Gujarat, Kerala and UP. So which other players get impacted?
No, absolutely. I'm glad you brought this very good observation. The fact is, any kind of a move towards farm loan waivers might not impact the MFIs directly as much as they do to some of the PSBs. But the culture out there definitely kind of starts getting very difficult for them to be able to grow at that pace with collections getting into the same, balance in the same way. It usually doesn't happen. We've seen that in the past. And what the recent announcement would trigger is you'll probably have some of the more states, more likelihood of, states like Maharashtra and Punjab and all also kind of going through that. So it's going to be fairly stressful because this overhang will always kind of keep valuations in a little bit of a softer band. Now, what happens to other companies that are there? A lot of the MFIs and small finance banks which have been growing in rural pockets or trying to build their strengths in rural pockets will definitely get impacted. Especially the ones who are primarily focused onto agri loans. So, Grameen is one of them, which has a fairly large portfolio. Of course, it has its own strengths, but they will also get impacted. But I would believe there will be a shift because NBFCs offer you a lot of alternatives. There will be a shift to smaller, businesses like Five-Star Finance. I keep saying, look at the segment that these guys cater to. It's so promising and it's fairly resilient as compared to this thing. So while credit access might probably have this thing a little bit of a shake off, you'll probably have businesses like Five-Star Finance which will do well because they have a fairly decent size and an assortment of products which are not absolutely agri focused and more SME. So that's where you have to see that shift. But this is bound to be slightly more. I'm sure we'll talk about this in the weeks to come. It's not going to end just with the day's change on Ujjivan's re-rating.
All right, Prakash, hang in there. This is a conversation that you might want to listen into, and we'll come back to you with your views on this space as well. Ami Organics is the stock on our radar. The company will raise about 400 crore via QIP, will use the proceeds from their debt repayment and capex plans as well. To discuss this and more on their business outlook, we have Naresh Patel, who's the executive chairman and managing director, joining in now. I guess it's late night or early morning in Europe where you are right now. Thanks a lot, Mr. Patel, for taking our call. Just one observation. Your borrowings are close to around 100 crores and you're raising 400 crores. You've announced a capex of close to around 300 crores already. So this basically makes you net debt free. And at the same time, the capex that you have of 300 crores, what could the asset turns on that be?
Thank you very much. Good morning, everyone. This QIP and pref was done to leverage our balance sheet as well as new capex in terms of expanding the capacity for electrolytes additives, as well as for making ourselves available for new opportunity like electrolyte solutions, which we are doing. Just announced a subsidiary company called Nomura Organics, and where we can able to go for CMO production for manufacturing electrolyte solutions. So it's a multiple task. For that we raise this fund, and capex asset turn somewhere around 2.5 to 3 in that.
What's the overall capex number for FY25 and even for the next 3 or 5 years for which your plans have been formed?
So FY25 we are targeting finishing our pending capex of Pharmaceutical Unit 2 as well as capex for electrolyte additives for enhancing our capacity. So that will be somewhere around 100 crore from our preferential share allotment. And Next couple of years, we will be remain, if new opportunities start, that will be a new capex. Otherwise, will be remain as a consolidation of our capex into the manufacturing capability.
All right. And what about, FY25? FY24, we did see some revenue growth. Margins were under pressure. How's demand currently in both your advanced intermediates and chemicals business? Is the pricing pressure behind the company?
No, pricing pressure is almost consolidated and growth is very tremendous. We are guiding around 55% growth in this year with volume as well as top line, and the margin will be remain as this year is a consolidation year for Unit 2, which will coming as a new site in our portfolio. So it will be remain around 20% somewhere in the margin side.
Okay, just to get the number right, 35% top line growth and 20% margins for FY25.
25% top line growth, 25% in the volume as well as in the revenue.
Okay, so 25% revenue and volume and 20% margin. And can you break up the top line growth in your two segments, advanced intermediates and the chemicals business?
See, basically we stopped last year, decided to give all, because all are chemicals, so we decided to have a consolidation guideline. But pharmaceutical will be grow at somewhere around 25-27%, whereas our specialty chemical grows around 35 to 40% in that sector.
All right. You know, this 300 crore capex that you've announced, you said that the asset turn would be close to around 2.5 to 3 times. That makes your revenue potential from these plants by about 750 to 900 crores. Just wanted, an update on by when does this flow into your overall revenue stream? And what's the update on the battery chemicals business?
So revenue will be start in electrolytes from second half of this year, and it will be go into maturity by 27. Whereas the this JV will be start build up end of this year, and it will be 1 year will be the construction time, and after FY27 it start generating the revenue.
And this year, no revenue from battery chemicals, because a lot on the street were penciling in about 200 crores.
No, battery chemical revenue, electrolyte additives is a part of battery chemical one.
Okay.
So this year, half year will be generating electrolyte additives. So there are two segments. One is electrolyte additives, and second way is the electrolyte solutions, which is a CMO. CMO is not yet started, whereas electrolyte additives already we have contract in our hand. We already started commence the production for that, and by half year of FY25, it will be start generating revenue as well. And we are also incremental capacity to make sure that by FY26 it will be.
How much will that revenue be? How much will that revenue be, sir? Will that be 200 crore this year?
No, this year will be the it's a first year, but from next year it will be jump significantly.
Okay, thank you very much, sir, for joining in. Need to get into a very short break. On the other side, we'll talk about market technicals, the setup. Mitesh Thakkar and Sudarshan Sukhani will join in. Stay tuned.
As well as mid-size and large startups, and all of the global research centers, global capability centers, and major ISVs. It takes a long time to build a market.
It does take a long time to build a market. Umesh, let's talk about what is faster, leaner, better now at Uniphore. Since we're talking about what generative AI can potentially do. I mean, how has life changed for you at Uniphore?
Well, first of all, great to have you back in Silicon Valley, Shireen. Much like you were talking to Shankar about these things are not overnight success. I founded the company, hard to believe, 16 years ago. We've been at this for 16 years, and sometimes I meet customers who think AI was born after the GPD moment.
Right.
But some of us have been at this for a decade and a half and more. But what's truly shifted in the last couple of years, which has been truly profound, we today serve some of the biggest companies, not just in North America, but around the world. These are large banks, large telecom companies, large retail companies who've been using AI, but now with GenAI, what's profound is AI is now a boardroom topic. It's being discussed in every board meeting in a publicly traded company.
Yeah.
Wall Street is measuring companies on their AI strategy, and the stock prices are being shifted up or down, depending on what companies announce. And for that reason, CEOs and CIOs are now singularly responsible. A lot of the customers that we've been dealing with, prior to GPT, AI was being bought as part of a software as a service application. Something in marketing, something in contact center, something for sales. Now AI is an infrastructure that no company can ignore not having.
Okay, welcome back. There's 10 minutes to go for the pre-open session. There's an important story, of course, which I think has gotten a fair bit of traction online, social media, etc. as well. This is a money control story that SEBI, the market regulator, has conducted search and seizure operations at Quant Mutual Fund. This, of course, has been one of the best performing mutual funds over the last many years, really ranking at the top of the sort of ranking tables, league tables, year after year across categories. So there's a lot of interest around this. We have N. Mahalakshmi, who's joining us, the veteran at Money Control, to tell us, take us through the details of what she's picking up about this. Mahalakshmi, morning.
Good morning, Prashant. Yeah, so this is all the story is that over last week there was, SEBI conducted search and seizure operations in Quant offices, one in Bombay and one in Hyderabad. SEBI, as you know, has been absolutely on the ball on irregularities across the system, whether it is market manipulation, in mutual fund front running, in PMS and all of that. And they have been actively using this search and seizure approach, which before Madhvi became the chairman, this was not really the route that SEBI would take. They have been active on search and seizure for the last 2 years. And this is part of that. So the nature of allegation in terms of exactly what has happened is not very clear. I think the whatever they get from the search and seizure will, give them whatever conclusive evidence they are looking for in terms of irregularities that they have already spotted, and which is the trigger for these searches.
Mahalakshmi, this word front running has also been on social media, etc. Right? I mean, it's been loosely thrown around.
Yeah.
The point is that it's a very loaded term, but the thing also is that there is a difference between, and I think for our viewers also it's important to understand what it means. In the typical parlance, what essentially that word means is, before the funds order is executed, somebody who receives the order does transactions for himself or herself and then executes the funds order. So which means that the funds unit holders are shortchanged to that extent because the price moves up, right? And that is, of course, clearly illegal. In this, but the important thing is, first of all, we don't know if this is, as you said, the nature of allegations. And second, I think it's also important to notice, when you read stuff like this, remember that there is a difference between a fund house front running its own orders and somebody front running the funds orders. Because the orders are executed at brokers. I mean, empaneled brokers across the board. And I think that is an important kind of clarification to make. As Mahalakshmi said, we don't know the exact nature of observations. We're just only clarifying this technicality, since it is really all over and there is a lot of speculation, etc., which is going on. So I thought we should kind of make that clear at this point in time. Mangalam.
What will also be on our radar is what happens to the stocks that Quant MF holds, because of its outperformance and the kind of attention that it has generated over the last 12 months, etc., and a little more than that as well. Could there be an impact on that, even if it is sentiment for nature? So let's bring in Sonal. She has the Quant MF top holdings. So those are also stocks that one should keep on their radar.
Thank you for that. Well, before I talk about the stocks in detail, let's talk about the AUM number, because we've seen that the big rise in the AUM of this particular mutual fund. The AUM, this is as per May 2024, was at 84,000 crore rupees, folios at 79 lakh, and 97% of the total AUM was in equity. And if we look at the assets under management, how they have risen in last couple of years, in December 2019, it was just at 166 crore rupees, rose to 488 crore rupees in December 2020, then levels of 5,455 16,005 crores in December 2021. Then it was at 17,000 crore rupees. And now in May, as per their latest fact sheet, it is at 84,000 crore rupees with 79 lakh folios, which have increased from just around 19,829. Now, growth since 2019 in AUM is at 46,285%. And the total funds under the mutual fund are at 27. Now, let's talk about the top holdings. This is again according to their May fact sheet. The top holding is Reliance Industries, 0.95%, where the value is around 7,500 crore rupees, followed by Adani Power. There's Jio Financial Services. HDFC Bank is the other big name at 0.34%. There's Aurobindo Pharma, Tata Power at 0.26%. There's Steel Authority of India Limited, LIC at 0.24%. Samvardhan Motherson at 0.23%. Britannia at 0.21%. There's JSPL. Container Corp is the other big name at 0.17%. RB Infra, Hoodco, Aegis Logistics, and TCS is the other one big name that the fund has at 0.14%. Now, what does it mean? Well, SEBI probe could weigh on the fund till clarity emerges, but they do have enough cash in their portfolio as well. So liquidity is not a problem here at all. But yes, these are some of the facts that we just wanted to put forward when it comes to Quant MF.
I think that's Sonal. Thanks very much for that. So nuance is important. As Sonal said, this is, I mean, just an indicative list of the stocks, etc. We're not saying that there is any. We don't have any information whatsoever that there is any redemption requests or anything of that sort. This is just the value of and of course the quantity that they own in various stocks as far as the quant portfolio is concerned. I think just going back to Mahalakshmi's earlier piece, the story. The nature of the allegations, right? I mean, that is still yet unknown, and we'll have to see what really happens. As we said, it's of course really been one of the top performing fund houses, and all really retail driven, not distributor driven, but retail driven. We'll take a quick commercial break here. We are back. The pre-opening is going to be upon us. We'll also, of course, be joined by Mitesh and Sudarshan to discuss their trading strategy. Stay tuned.
Service by way of hostel accommodation is presently not exempt, which are being provided for students if they are outside of educational institutions. Am I right? If they are within an educational institution, they are already exempt. Now, hostels which are for students but outside of an educational institutions are also getting exempt. The measure of relief for students and working professionals, Council has recommended to exempt accommodation services having a value of supply up to 20,000 per person per month. The condition, of course, is those provided these services are supplied for a minimum continuous period of 90 days.
It is a tough time for the Education Ministry as the future of lakhs of students that appeared for NEET and UGC NET exam is in doubt. While the government was caught in the mystery surrounding the NEET examination, the cancellation of NET exam added more fuel to fire. Will the Union Education Minister, Dharmendra Pradhan, has taken full responsibility for the cancellation of the UGC NET exam and also informed
Welcome back. This is Open Exchange live from CNBC-TV18 Motilal Oswal studio. Bracing ourselves for a bit of a cut. The GIFT Nifty is down close to about 100 odd points. But through last week, we did see positive consolidation in our markets. The Nifty and the Sensex ended with gains of about 0.4% for the week gone by. So there was positive consolidation. Banks outperformed, up 3.5%. So what's the setup looking like today? Let me invite our guests on the show, Mitesh Thakkar and Sudarshan Sukhani now. Gentlemen, good morning and thank you very much for joining in. Sudarshan, first, how do you see the setup for the day and even for the week?
Good morning. Well, we've had a very decent run in the Nifty. The market continues to be a strong bull market, but even bull markets will take pauses. So I think that the Nifty is now ready for a process and period of consolidation. After a long time, this is no longer a buy on dips market for the short-term trader. The key word here is the short-term trader. You don't have to buy on a dip. It's best to leave the Nifty alone. The dips may not actually work out for the time being. This consolidation will get over, and again we will go into a buying mode. But currently, it's best to avoid the Nifty completely. There is a buy on dip strategy still available on the Bank Nifty. Keep tight stops, 150 point stops from your entry. If there's a sharp dip, look to buy the Bank Nifty and avoid the Nifty.
All right, look to buy the Nifty Bank and not the Nifty. Mitesh, your call on the index?
Morning, Manu. My sense is that the Nifty is looking slightly shaky on the hourly and the 2-hourly chart. I think Sudarshan was also highlighting that between the two indices, the Bank Nifty looks stronger. I would second that. And on the Nifty, the levels which I'm watching, 23,400 on the spot is the first level, and we might open around that area because we are seeing the GIFT Nifty, show a 100-point kind of a downtick. So if that doesn't hold, then I think we might look for another 150, 160 point kind of a cut, and 230, 240 zones could be tested. So I would want to wait for this dip to play out and then see if the market reverses from there. And we'll go into long positions. Even on the stock side, with the Nifty showing signs of correction, I think we are now more looking at one, exploring shorting ideas with tight stop losses. Two, I think cutting down and taking profits on the long positions.
All right, and stock picks, what would you have? Individual stocks?
I have a mix of buys and sells. Indigo is on the buying side. If it starts getting past 43.30, it's closed at about 43.10. Then keep a stop at 42.85, look for targets of 44.25. Bandhan Bank, and I think, as I said, we agree that is the financial name which looks stronger. So Bandhan Bank on a mild decline around 207, 206. Buy with a stop at 200 for targets of 218. On the selling side is Adani Enterprises. Keep a stop at 32.51, look for targets of 30.30. Canara Bank is also on the sell side with a stop at 122, look for targets of 113.
Sudarshan, your stock recommendations?
Well, there are some buys and one sell, but the important point is that even for the buying ideas, there's no need to rush into the buy at the open itself. You must wait for intraday dips to go long in these stocks. PI Industries is a buy with a stop under 35.90. ICICI Bank can be considered for buying on a dip again with a stop under 11.50. Ultratech Cement is an intraday short. Short selling should be done only intraday, stop above 10,960. And surprisingly, I have the exact opposite. Adani Enterprises is a buy for me, again on a dip with stop under 3,045.
Okay, thank you very much for joining in. Prakash is still waiting by with us. Prakash, we were just discussing this entire Quant mutual fund saga. In the circles, in the market circles, how are they reading the implications of this on our market?
So, it's quite early days, to be honest, to figure out what's the extent of potential damage that could happen. You'll probably have to wait to ascertain what's gone wrong and what's the extent of that stuff that's gone wrong. And if you go to the precedents that we had from another mutual fund where this happened, so as Prashant rightly said, it will depend on where the culpability lies, whether it's at the broker's end, whether it's one of the team members in the fund itself. So till that's there, we really can't figure out. But my sense is, markets don't respond to these kind of things in a panic mode. What it does is it gradually erodes the level of confidence on some of the systems, some of the processes that the fund follows. And you'll probably see some discerning investors not vacillate towards the fund in the future. But if you really ask me, I don't see any, except for a sentimental sell-off which some people might want to do. There's not a panic that's expected. So we'll probably, we'll have to wait for more details to be able to pinpoint specifically where things could kind of be more impactful.
No, absolutely. Point well taken. And, guys, the point about Quant is, I think there is so much attention sort of on Quant also because it is
the best performing.
I mean, its performance has been through the roof, right? Yeah. I mean, so it is so far and beyond sort of the normal, whatever average you want to compare the benchmark or even the second sort of best performing fund or the third. So I think that is the reason why there is. Otherwise, I mean, I think sort of SEBI regularly asks for information. Yeah. They've stepped up surveillance. They've done, and it happens at the broker level, it happens at the fund level, it happens at the exchange level. So I think one needs to keep that in mind and really not blow it out of proportion as at least it's happening. I'm seeing some of the stuff on social media. I think really irresponsible to sort of jump the gun and say, well, this is wrong or that is wrong, etc., etc. I think we've got a very responsible regulator. They will let us know when stuff really comes out. And as Mahalakshmi pointed out, we don't know the nature of the sort of investigation which is on at this point in time. So. That's my 2 bits here. We'll sort of come back with more on this one, but the impact of AI will be greater than mobile and cloud. These are the words coming in from Amit Bajaj, President North America at TCS. In an exclusive chat with my colleague Shireen Ban, he said that clients are in a wait-and-watch mode ahead of the US elections. Here are a few snippets of that conversation.
We're at the spanking new office for TCS in Santa Clara in Silicon Valley. And joining me now is Amit Bajaj. Amit, what an absolute pleasure. Thanks very much for giving us access to the new TCS office. It's great to be here.
Thank you, Shireen. Thank you for having us and hope you're having fun days in the Valley.
Well, I have to say it's a lot of work, but it's been fun to understand what's going on, especially with AI. But I'll talk to you about that in just a second. This is really the mother market for you, Amit, and you've been here over the last few years running the North American business. What's the sense that you get in terms of business confidence, in terms of a return of discretionary spending capacity, discretionary spending power? Is it looking any different today from the last time that you spoke at the end of the quarter?
I think the overall confidence is quite robust, I would say, Shireen. But in the short term, we're going through an election year. There is fair amount of tailwinds that we have from good employment rates, good consumer demand, but there are also sense of headwinds with government spending, with inflation, with interest rate environment. So I think while the demand is holding up and businesses' top line is quite strong, they are still taking a cautious approach, investing, but being measured.
And when you say investing, is it incremental investment or is it really redeploying capital from one area to the next?
I would say the latter. So AI is very, very real, and it's everyone wants to invest in that.
So where are they pulling money out of and putting it into AI?
And the AI has both an applicability on the growth side, but also on efficiency and cost side. So at the near term, you can deploy the technology in business as usual activities and fund your innovation and growth cycles from there.
So pause for now, you believe at least through 2024 till the US elections are out of the way, which is November. So it pretty much takes care of this calendar year.
Yeah, I would say measured. We are going to see spending, but there's going to be a dislocation of spend. And it's going to be, in certain ways, self-funding, at least for now.
You talked about the strength of the U.S. economy. You also talked about the fact that consumer confidence continues to be fairly strong, even though we've seen inflation still running fairly high, and we haven't seen those rate cuts, or at least a rate cut trajectory, which is what the markets want at this point in time. It looks like it is going to be, longer for rates to start to fall. But how do you see that impacting spends even post the election period? Because is there more trepidation and nervousness on the large deals, or will it continue to be cost rationalization?
So in certain ways, it's like a Goldilocks situation, right? Like you are somewhere in the middle. You're not in a recession technically, where customers are really thinking about large cost cut and cost-driven big initiatives. On the other side, while technology promises a lot of innovation, it has its own adoption cycle. So the technology innovation is exponential, but the adoption is linear.
Yeah.
So, one has to deal with people change aspects of technology adoption, governance aspects. So on the growth and innovation side, it is fairly a linear journey. So we are somewhere in the middle, so you're not seeing a very strong breakout either ways.
Conversational breakout, of course. This is the buzzword. Everyone's talking about it, whether inside the boardroom or outside the boardroom. But you're saying that at an enterprise level, adoption is going to take time before it gets to any kind of scale.
Yes.
In your conversations that you're having with your clients here, and of course, people that you collaborate with, you co-create with, where do you believe we're going to see adoption really kick off? Where do you believe that the pace of adoption is going to be faster? Which sectors, which industries, what kinds of companies are likely to move faster, be the early adopters at scale?
So I think, first of all, the opportunity is very real, and everyone believes in the opportunity. We recently did a global survey across all the businesses, and over 50% mentioned that the impact of AI, both on predictive and generative side, is going to be more than that of mobile or cloud, which has really driven the last 15 years of growth and innovation. And so it is very, very real. And they're already using it in certain use cases, scenarios. So, whether it's on the customer service side, whether sales and marketing, content generation, campaigns is another area in marketing. On sales side, sales co-pilot, sales buddies, responding to RFPs and generation of those standard content. So the generative aspect and where a large amount of content assimilation needs to be done, summarization, some insights. So all those pilots are already happening on the claim side. So I would say more growth focused. And then we see on the cost side, how do we reimagine back office, mid office using GenAI, right? It's essentially a people and process centric business on that side. So how do we make it a tech first business? How does IT adopt AI in its own running? That's an important theme, and TCS has launched, was pioneer in that category. We launched the AI Ops category with our flagship platform, Ignio. So it's a lot of action happening, but technology is going to be deflationary in that sense, right? So we're creating the funding for the growth and transformation side.
Right, AI investments are the need of the hour. That's the word coming in from Amit Bajaj of TCS, President of North America. You can catch the full conversation today at 7:30 p.m. and 9:30 p.m. only on CNBC TV18. Okay, a few minutes away from trades now. Let's get in the 9-10 calls out of the way. Mitesh and Sudarshan back with us. Mitesh, you go first.
I'll go with a sell on Canara Bank for targets of 1 month.
Sudarshan?
Well, consider an intraday short in Ultratech Cement with a stop above 10,960.
Okay, those were some trading ideas for 9-10. Let's get to the stocks you should have on your radar. Abhishek joins in with more on ICICI Bank. Abhishek.
Well, Motilal Oswal has written a note on ICICI Bank wherein they have a buy recommendation. Target price has been increased to 1350 from 1300 earlier. Now, they met the management and, management do say that loan growth to remain robust for them. Net interest margin to remain range bound given the fact that term deposit rates are elevated and also, repricing of term deposits will be on the higher interest rate. So that will factor in the net interest margin to remain range bound. Now, transformation under the management has been very good, and that is leading to sustainable growth. They estimate gross NPA and net NPA ratio of about 2.2% for FY26 and about 0.3% in terms of net NPA for FY26. Credit cost as per Motilal Oswal is expected to rise to 0.6% by FY26. So they estimate ICICI Bank to deliver an operating profit and profit CAGR over the next couple of years at 16.7% and 13.7% respectively, and hence they are estimating an ROA of 2.2% and ROE of 17.7% for ICICI Bank. Back to you.
Right, Abhishek, thanks a lot for that. Let's go back to Ekta for a quick recap on Sun Pharma. Ekta.
Well, yes, Sun Pharma is going to be in focus because they've announced the outcome of a phase 1 trial of GL0034, which is the drug utriglutide, which is basically a GLP-1 inhibitor drug. It's in the same class of drugs such as Ozempic, Wegovy, as well as Mounjaro and Zepbound. Now, these GLP-1 drugs are used to treat type 2 diabetes and obesity. Remember, it hit $50 billion in terms of sales in 2023. Expected to grow to around 100 billion by 2029. For Sun, things are still very nascent at this point. It's just a phase 1, but it gives you a sense that they are looking at GLP-1 drugs and, it could probably add to their specialty business eventually.
Okay, all right, Ekta, thank you very much for that. So there is a lot to track as we begin this new week, this Monday. Lots of individual names, even actually on the banking side, something that we've not discussed, and we'll see if there is any impact. Telangana guys over the weekend, right, announced a farm loan waiver. So I'm not sure if banks, we will see any impact there, but MFIs, I mean, typically those are the first ones which sort of start to see some pressure, etc. So we'll see if that is true. In Tamil Nadu, there was another report just related to banking, where they said that the government there is going to build, some lakhs of houses. I don't remember the exact number, but they're going to the idea is to do away with all huts and make pakka houses that is in Tamil Nadu. So housing finance companies. I mean, you'll hear a lot of this at a state level as well. And I think the budget, of course, is also around the corner. So at a central level as well, are we going to see any new schemes, etc.? We'll see. The market open is indicating 120 odd points. Okay, I think that's the start. 23,381 is where the Nifty is starting at, and the Sensex is starting at about 76,777. So yeah, 140 lower on the Nifty, about 420. 393, 370 odd points lower on the Sensex. So it's a lower start, as expected, maybe a little steeper than what the GIFT Nifty or the pre-open indicated. Where is the pressure coming from? I mean, indices. Nifty Bank is down about 0.75%. 51,300 is where the Nifty Bank is at. Look at the advanced decline there at the bottom, but it's very early to sort of draw any conclusions of that. But it's more advanced, more stocks up than more stocks down, at least right out of the gates. IT index is down about 0.6%. And we look at a few others as well in a bit from now. But this is the first rates on the indices, frontline indices, which are coming through. It's a 0.5% cut at 9:15 on the Nifty, 23,378.
With the opening today, the Nifty is even lower than last week's low, which was 23,398. So at the opening level, the Nifty is taken out that lower low. The top loser is Cipla, down close to about 2%. Ekta was talking about it. Sectorally, the biggest drag is coming in from the PSU banking names. State Bank of India is under pressure in the frontline bank. Metals is weak. The Nifty Metal Index is a cut of over 1%. And here, the notable losers include Tata Steel and a JSW Steel. So Tata Steel is down close to about 1.7%. Banks too are dragging their feet. The Nifty Banking Index is down 400 points right now. The big loser is IndusInd Bank, so that's 2.3%. It's overtaken Cipla now as the top Nifty loser, but HDFC Bank too is under severe pressure. On the gaining side, you've got strength in Sun Pharma, ITC, Wipro. Remember, there is that Sensex change which is taking place, so Wipro is going to be out. But Wipro is up close to about 0.5%, and there is a little bit of an underperformance that you can see in the broader markets too. So the Nifty small cap index, I think when I last checked, it had a cut of close to about 0.6%. So a little bit of an underperformance, and the advanced decline ratio is in favor of the losing side. But lots of individual stocks in the broader market.
A lot of individual stocks in the broader markets. In fact, now as we speak, the advanced decline has moved in favor of declines. About 1,200 stocks in the broader markets lower as against 880. We opened with an equal number of stocks advancing and declining. And straight off the bat, the usual suspects which are expected to decline, we have the fertilizer pack. All of those fertilizer stocks are lower in today's trading session at the open itself. So you pull up something like a fact which is down about 5%. We are seeing a cut in RCF, Dhanuka Agritech, GNFC, all of them down anywhere between 2 to 5%. Remember, these had already seen some selling on Friday, and that continues even now. Delta Corp is down about 6%. There wasn't, any significant relief that came in. In fact, wasn't even on the agenda. That stock's lower. The reason why metal stocks perhaps could be lower is also because of the strength that we saw in the dollar. As Manisha pointed out, that's weighing in on commodity prices. So as a result of which, something like a Nalco, SAIL, all of them are lower too. Pharmaceutical pack is doing relatively better. So we have Alembic Pharma as among the top F&O gainers. And Sun Pharma too, like Ekta pointed out, has been doing well. This on account of the outcome of their phase 1 of their obesity drug trial. Another bunch of stocks which are actually active in today's trading session. Garden Reach Shipbuilders up 6%. A big order coming in on that one. And we do have Suzlon, which continues its up move. We are seeing the up move continue on a couple of these themes like rail, where Titagarh Rail Systems is up 5%, Railtel is up around 4%, and paper stocks as well. Something's definitely underway in the paper segment or the sector where prices are increasing, because we have names like JK Paper, which are up around 37-38% this month itself, and another day of an up move of around 4% on that stock.
Well, it's a okay kind of start. 90 points lower. It's a lower start, and about 250 odd points. So from the day's low, we've recovered about 50-60 odd points. But the first initial a few rates which are starting to come through. What do we have? You've got, as I think Mangalam said, Garden Reach, which is the biggest volume-led gainer on the NSE now. It's up 6.5%. Suzlon is at the number 2 position with big gains, about 4.5-5%. Stocks at about 56. There is, I think we mentioned Railtel and Titagarh. Both are up 5 and 6% respectively. Shakti Pumps is coming up with huge volumes. It used to be a very small company with very little volumes, but it's had a one-way move, circuit to circuit, 5%, and it's coming up as, I think, the 5th or the 6th largest volume traded name, at least right now. There is TBO Tech, which is a recent listing where I think Goldman has initiated coverage. And that's interesting, right? I mean, I think you're starting to see some of these marquee foreign brokerages going down the market cap curve. I think last week we had them initiating coverage on MapMy India, which is CE Infosystem. Stock went up 20-25%. And they've done this, something similar on TBO Tech now. What else? KSB is up about 4.5%. We've got Uflex, which is up about 3% or so. Repco Home is up about 4.5%. That's essentially what's going up. And on the downside, I think HFCL is down about 3%. There is a SAIL, which is down 3%. Fertilizer stocks, all I think, as Rima and Mangalam mentioned, RCF and NFL and FACT and GSFC, all of them are down. Delta is down about 6%, 133, 134 on Delta. I think Delta had a bit of a move on essentially what the expectations really. But I'm not sure if this is just unwinding, or this is a view being taken now that nothing is going to happen, because I don't think that is exactly the correct interpretation. We'll talk more about this. IndusInd is down about 2.5%. AU Bank is down 3%. DLF is down 2%. There is Swan Energy, which is down about 4.5%. Cipla is coming up with a 2% cut. Hindustan Copper is down about 2%. ABFRL is down 1.5%. Policy Bazaar. Actually, there is a lot more volume on the downside today. If you look at the volume-led sort of list, it's more on the downside than on the upside, really. But on the Nifty, it's down about 94, 95 odd points. Maybe just a quick look at the small cap index as well. Small cap index is down about 0.4%. And we'll just look at the mid cap index as well, where there's a 0.4% cut as well. We have Sanjay Parekh, who's with us. He's founder and CIO at Soham Asset Managers, veteran really at asset management. Sanjay, great to have you with us here. Good morning. Thanks for your time. Appreciate it. What's the feel of the market like? I mean, as we kind of now look ahead into this new parliament session and the budget finally, as we sort of go into it, what's your sense? How are the markets likely to behave? It's a sort of near-term question to you, so maybe a little unfair. But what's your sense?
Yeah, so I mean, as we all know, structurally we are very, very positive because all the balance sheets are in place. But valuation is what discomforting to all of us. But having said that, it could be a time correction or 3 to 5% price correction, and after such rise, it is very normal to have. Having said that, in mid and small cap, as we know that the valuation, overvaluation in certain segment is very high. So it will be stock specific that we need to go, and also we have to keep in mind that there are few events like monsoons initially is below normal on an average. The Vahan data on auto also has not been great, and of course the Telangana farm loan waiver. While normally the states have to bear it, but it certainly doesn't augur well from a overall banking system perspective. So when a state government decides to do such populism, it does have a ripple effect on the banking system, even if it not directly. So certainly we have to keep all this in mind because pre-elections there were impact on demand in the first quarter in certain segment, as we hear even in the first or 2 months in cement. Autos, we are already visible. So, we'll have to keep these expectations right. And then, as I said, structurally we're very positive, but we could have a pause or a reaction as well.
Sanjay, morning. In your portfolio or recommendations, did you have any stocks with exposure to the MFI sector where the stress is now increasing and companies are talking about it bringing down their growth forecast? And is it time to turn cautious? Which would be the stocks which could get impacted because of what we've heard from Ujjivan and Small Finance Bank?
So, yes, as they did say, all of them are talking about gradual increase in credit costs. It's just that, whether the credit cost remains in a band, because the ROAs after even the credit cost, if it's in the band, are still very good. So if, let's say, they can manage it at 3% or so, and you then get an ROA of 4.5%, then it's fine, it's worth the business. But if it escalates, which is because it's an unsecured piece, and due to such announcement by the state, as I said, it directly doesn't get affected, but on the credit culture, it does have an impact. So hopefully it is not pervasive, and hence we will have to watch. And such state government's populism, particularly from, because this is not from the BJP government, it's from the Congress government, there's little that can be done, It's the state exchequer which will bear it, hopefully. And there will be certainly an impact on credit culture. So we'll have to watch it as it comes. And hopefully, these companies can maintain the credit costs in a band.
Right, just keep an eye out on a couple of these defense-related stocks. Mazagon DOP, for instance, is up around 4% right now. It's been a big mover and continues to move higher. This one could be attributed to some of the news reports that are there this morning, where they could be in advanced talks with regards to Kalavari submarine deal, which could be worth anywhere between 35 to 36,000 crores. These are newspaper reports, so that stock is buzzing around. But Sanjay, I just wanted your thoughts on this entire rail and defense theme, because everyone's been speaking about how they've run up ahead of expectations, ahead of what the street is, what the fundamentals could be, etc. But there is still no stopping this rally. And day and again, there are new news pieces, order wins coming in. How much is too much? Right, we'll just try and repatch that connection. Meanwhile, we're speaking about that, rail and defense. Look at Ircon, up around 4% right now at the high point. We have RVNL, which is up around 4%, again at the high point. Defense-related stocks, Paras Defense, for instance, up around 3%. When you're looking at Mazagon Dock, you also look at their twin, which is Cochin Shipyard, because both of them move in the same direction. Cochin Shipyard has moved higher. We were talking about Titagarh earlier. Look at Texmaco, that's too higher by about 2.5%. So a bunch of these stocks continue to do well and continue to make the highs of trade, even when the broader markets definitely, are looking a little shaky, with more stocks declining than the number of stocks which are advancing.
No, absolutely. RK Forging, Mangalam, I don't know if there's any news flow. 7% pop there. We'll have Sanjay back with us in just a bit, but look at RK Forging. It's a sharp move on very large volumes on that one. There is a Glaxo, which is showing up. Some of the new stuff which was not there in the mix in the morning at 9:15. Glaxo is up about 5%. There is actually, volumes are picking up now on the upside as well. I was talking about how volumes perhaps a little bit more on the downside than up on the upside, but I think it's picking up. Raymond is up about 4%, 26.25 on Raymond coming through. There is what else? JK Paper, I think I saw that in the, right at opening, 5% higher. So yeah, that's essentially broadly the list that we have. Mangalam, I think we have Sanjay back with us.
We do have Sanjay back with us. Sanjay, you were talking about how some of these broader market plays are looking like they've done their course, but price is telling you a totally different thing. I'm looking at the defense and railway related stocks.
Yeah, so, Mangalam, valuation again, we participated way early in one of the companies, Jupiter Wagon, and we sold it as well. And from there, it's up 70%. So, valuation is which I think most of the mature participants are not comfortable with. And I think, again comes this retail, active retail, with 15 crore demat accounts and 4 to 5 crore active demat accounts. And each of them have individually, as a bunch of together, are a phenomenal power. So, that is where I suppose, both railways and defense, the theme, because they would not really discuss too much on valuation. And hence, they would more give importance to the price, which is done very, very well. And the momentum is there. Having said that, now valuations for a lot of them are discomforting, and that's where we are staying away from them.
Got that. By the way, to your portfolio, Sanjay, from the last time that not from the last time that we spoke, but in the, have there been a few new additions? I mean, publicly disclosed in what you've kind of picked
Not much actually. We've just added one name in the infra space, but otherwise, nothing that may have changed major.
Did you see this, the announcements with regards to GST, the changes, etc., which were made, but also the changes which were not made? There was a lot of expectation that maybe they will sort of moot the proposal of bringing gas under the ambit of GST.
Right.
Petrol, diesel, etc., maybe more contentious. But any thoughts on these areas?
No, it does. I mean, it looks difficult because, there are impact on exchequer as well. So there is impact on input credit tax credit that one today doesn't get, but later on they may have to give. So I think the petroleum products is a contentious, even if it is on the gas side, it's not easy, to get a consensus, and then the impact on exchequer as well. So that piece, we are also less hopeful. So that's a view we have on the GST. The rest, of course, the rest of it have not followed.
You're quite underweight on oil and gas, right, Sanjay?
Yes.
Across all the categories?
Yeah.
Refiners, oil marketing companies, gas, etc.?
Yeah, so we had HPCL and BPCL and we made significant money, and then we said, so when we bought, it was really cheap and people were overly worried on, the deregulation, whether it'll happen, not happen. And at that time, it was really dirt cheap to buy in. And then, of course, they moved in 70-80%. And of course, we also got the dividends at our cost. The dividend yield we got was 6-7%. But then the risk return did not turn so favorable. And having said that, we've seen the outcome of the elections, and it is not a very clear mandate, as we know. We have coalition government, and hence, at least we believe that it will not be easy to have regulations with a total market-led pricing for petrol, diesel, given the mandate they've got. We'll have to see how they manage this and navigate it. But that is one area where, let's say tomorrow crude goes up $10, whether the oil companies will be allowed to be market-driven, given inflation was a very big issue in the rural India. And hence, we want to watch this before we take a call, and hence we are underweight on it.
Let's quickly wrap it up then with your view on the IT space. I mean, there are two schools of thought. One, that it is in for structural derating, or secondly, it's a value bet, the only place where you will get good stocks at reasonable valuations.
Yeah, so we were underweight almost 2 years, significant underweight at just 5% weight. We recently, last a little more than 1.5 months, we increased our weight a bit, but our underweight is still there. So here now, they will have a tough year this year, but the long-term story of can they be at 8 to 10% dollar revenue growth with ROEs and ROCs being so good, payout ratios being so good, and at this juncture of market, the risk return, if your expectation is you make 10 to 12% return and 2, 3, 4% dividend yield, if that suffices, it makes sense to increase the weight bit. Having said that, we are still underweight, and we will look at, because this year is going to be challenging, is what we strongly believe, with a low growth. And last 2-3 years also has been mediocre growth. So one has to be gradual, but the character of the business is very, very good. So once the growth is back, certainly, stocks can move up. And that's how we have cautiously increased our weight in 2 of the large caps.
Okay, Sanjay, you've given us our cue to invite the next corporate on our show. Thank you very much for joining in. Let's talk about technology now. Happiest Minds. Now, HDFC Securities, very recently, they've projected that the company's revenue growth will be 35 to 40% for FY25. The company also has an aspiration to hit $1 billion of top line by FY31. How's the demand environment? Just last week, we had Accenture reporting their numbers. We have with us Venkat Raman Narayanan, Managing Director and the CFO of the company. Venkat, morning. This is Reema here. First, if you could categorize the demand environment for us, what has changed in the last 3 months, according to you? You're on mute.
Yeah, sorry. I'll talk specifically about our company. We started this year on the back of a decently strong year of FY24, where we did about 11.5% dollar growth. So that's the base on which we are now planning to build FY25. We've also started the year with 2 acquisitions, which are now in the process of getting integrated. So that's something that we are working on. And our organic growth engine, which is what contributed to the 11.5% last year, is continuing to fire. And we are looking at all of this put together, helping us achieve that number of about 35 to 40%, which I have called out as an estimate. I've not called it out as a guidance because there are certain puts and takes when you talk about acquisitions. So that's where we are for the year. Coming to the demand environment, we are seeing slow pickup, like other companies and what analysts have been saying. There could be a nice revival in the second half of this year. Like I've always been saying, you can't stay away from technology investments for more than 18 months at a max. You saw this during the COVID period. After COVID, investments into tech came back with a bang, and you had companies do brilliant growth. It's a similar situation. I think the recessionary talk in the US, the dull business outlook of UK, the European region, and the interest rate scenario in the US. This has been what has been, taking all the headlines. And it's in that backdrop that IT companies have also not been given the credit for the growth that they have done in such a scenario. So a company like us, focusing largely on India, largely on US, but we have a disproportionate share in India, about 18-19% coming from India. We are well positioned, to participate in the return of growth, and also in the meanwhile continue to grow organically and inorganically.
35 to 40% estimate that you have, and not guidance, it includes, or it factors in the sort of growth that you are expecting in the second half of this year, right? Or could there be an upside risk to this?
No. This is something that we are estimating as of where we stand today. So it includes both organic and very reasonably good inorganic growth bundled into it. So which is how we have always been giving our estimates. We have not broken our numbers.
And the PureSoft acquisition, because you said that this growth range is subject to completion of these acquisitions. Has that been closed completely? Because you were expected to close it by the end of last month.
Yeah, we have closed both the acquisitions. One is in the middle of last month, and the other is end of last month. So, from an accounting standpoint, that gets us close to 1.5 months revenue for one acquisition and about a month's revenue for the other. So both the acquisitions have closed. We have also intimated that to the exchanges. So now they are integral and they are a part of Happiest Minds, and they are doing decently well.
No, that's good to hear. And, gentlemen, morning, Mr. Narayanan, we're talking about being estimate 35-40% growth. You look at, I think when we talk about IT industry, we kind of paint a broad brush, right? You've got for some of the larger companies, we're talking about quarterly numbers, 2-3% kind of constant currency growth estimates, but you got, your kind of growth rates as well. So, there's I guess it's a big market, and you got potential to grow, to scale, as you've said. I think you've got a slightly longer term guidance of about $1 billion, right?
That's right.
And yeah, but that's of course many years out. Why do you think, and this is of course not just about Happiest Minds, where there is of course just the size is small, so there's many years of very strong growth. But why do you think growth will come back? Is it just the cyclicality of it in the second half, or are you actually seeing that? And can we extrapolate that for the industry as well, or is it specific segments where you operate in, more discretionary, etc.? Go on.
Like I said, companies today are more tech-oriented. Technology is the company. It's no longer, one of the staff functions of a business. Technology is what makes a company. So if you look at it, healthcare has become health tech, manufacturing has become manufacturing tech, education has become edu tech, and so on. So, technology is now a binding factor, and it's a reason for companies to exist and grow. That aside, like I said, you can't stay away because technology obsolescence is so quick. You can't stay away from the market for more than 18 months. So when people talk about tech spend, they are talking about lights on kind of work. So what you have, you maintain, you try to fix it, you try to get the maximum out of it, ROI and investments that you put in, you try to eke out of it. But if you have to grow, the companies, our customers have to grow, they have to, go deeper into technology, adopt AI, adopt analytics, adopt AI plus analytics, and quite a few of the new tech that's available to make sense of, the ever-changing customer requirements. So to that extent, you can stay away for about a period of 18 months. Now, like I said, macroeconomic factors have made sure that they did not cancel any contract, but they started prioritizing. They looked at more lights on contracts, what is their core business, and that's what they were investing in the last 1 or 2 years. But 18 months now into this kind of trend, you have to open up new investments into tech because obsolescence comes in. The new business that they want to seek out needs that kind of tech investment. So it's only a matter of it coming back. I'm not so sure whether I should use the word cyclicality, like the infrastructure and the capital business. But yes, there are reasons. If there is a reason to hold back technology investments, there are very good reasons for the floodgates to open as well. So that's what I take
that point, but in the second half of the year is also the US election. Does that in any way impact the way clients will look to spend, or will they hold back till the verdict is out?
Politics and economics, they are getting disassociated largely. And this has happened in large markets, and it's happening in India. And you will see more of it. So there will be some sort of, noise, and there could be something on immigration policies and the like. But largely, businesses drive their own agenda, and they have to make investments. They will make investments irrespective of the political dispensation. So yeah, there could be some small sort of disturbances, but that's for the now and here, but not for the long term.
Talk about generative AI, because unlike peers who've predominantly set up a center of excellence, Happiest Minds has made GenAI a business unit. What is your expectation from generative AI? Will you start, classifying it as a separate revenue line item? Will you be able to quantify the revenues coming in? And you've also got plans to ramp up hiring, particularly for the GenAI business unit. So take us through those plans.
Yeah, so unlike other companies, most of them have set it up as a COE. You're absolutely right on that. But we said, let's be slightly different from others. We are putting it right in front of our business, making it a BU, leading it with an executive board member leading it. Our CTO is the CEO of that business. So the kind of investments and the market presence that we want felt is what we have tried to build up through the setting it up as a BU. That's one. Second is, when it's a BU, it gets a lot more of attention and focus from the customer side. I'm not saying the COEs don't get it, but from a customer side, you see that exposure. There's a direct exposure, and that's kind of helping us, because most conversations today with customers and prospects start with GenAI. While we talk about all our other businesses, they do want to know what we can do to help them with GenAI. So that's something that we are seeing. GenAI as a standalone, project is not what we are looking at. There will be wraparound projects with analytics. There could be other automation built around the generative AI solutions. So all of this will feed into the BU that we have set up, and we will be calling out separate numbers for that, because that's the way we are viewing our business, and that's the way we'll also have to publish our results. So calling it out as a BU will obviously make it incumbent upon us to disclose those numbers. So these are the
How soon before you will be able to quantify the revenues from GenAI, and what is your own expectation? Because you have a guidance for this year, you have a $1 billion guidance for the next 6 years. How much will GenAI contribute? And again, on hiring, if you could give us specific plans.
So we currently are about 100 plus people in the generative AI, the BU, close to 80 going to 100 very soon. We'll also be adding the analytics and AI into this as we disclose our numbers. Disclosing numbers, we'll make an attempt this quarter, or it'll be the next quarter that we'll come back to, because we are just getting all our reporting alignment done, and those 2 acquisitions also need to be classified appropriately. So that will take us a quarter or 2. And what we are saying in terms of sizes, the moment you call it a BU, it has to be a certain size. Otherwise, it doesn't gather attention. Today, PDES is about 80%. IMSS is about 20%. So GenAI, if it has to become, it has to grab that attention from the customer side, and also from us internally. It should become 10% over a period of time, 10 to 15% over a period of time, and in course of time, it becomes part of the mainstream business like IoT. So that's a number that I would like to hold out.
Okay, final question before we let you go. The $1 billion revenue target that you have, if you could break that up into the revenue contribution coming in from sectors, because you are moving away and increasing your weight towards BFSI as well as healthcare. So from the current mix, what is the target ideal mix going forward?
Yeah, so EduTech is about 24% today. BFSI and healthcare is about 14%. Post this acquisition, BFSI, EduTech, and healthcare would be of equal size or near abouts that. So they really become the lead story for our growth. Along with that, we are doing pretty well on manufacturing and consumer CPG, retail and CPG. So all of this will be the growth story. So high tech, manufacturing, CPG, retail, along with the 3 lead verticals of EduTech, BFSI, and healthcare would be what we'll be focusing on as we go forward. And as far as a target, that's more of a aspiration that we have put out there. It requires us to do about 22% growth CAGR. Last year we did 11, and we are thereabouts in that number, and we want to keep that kind of growth thrust going forward for the next 5-6 years.
All right, so we'll leave it there. Thank you very much for joining us, and good luck. And we'll sort of, have you back soon once again as we track that recovery for IT services, as you outlined, perhaps starts next in the second half of this financial year. We'll take a quick commercial break here. Markets down about 100 odd points. We'll have the management of Adani Wilmar join us on the other side to discuss their business outlook. Stay tuned.
Welcome back. You're watching us here on Bazaar Morning Call. The Nifty now down about 100 points. We have the mid-cap index lower by about 400 points as well. The Nifty Bank is the one which is leading the decline, but it's still contained as far as the first hour of trade so far is concerned. Let's talk about the edible oil space now, because in the fourth quarter, we did see, after a big decline in prices, there was a surge in the fourth quarter for palm oil prices, soy oil, seeing a near double-digit surge as well. So what's the outlook, the demand out here, and also what companies are planning? We have Angshu Malik, who is the MD CEO of Adani Wilmar, joining in now. Thanks a lot, Angshu, for joining in. And that really is the first question. There were increases in prices that we saw in the fourth quarter. How have they panned out in the first quarter so far? How is demand? And in light of that, what's your outlook?
The demand in the first quarter has been, I would say, quite robust. And the industry is also growing, and we have also done well. Double-digit growth is what is expected in Q1. The industry is also growing at that. The prices, although it has gone up, it has come up from the bottom. So consumers still feel the prices are comfortable, and we see good consumption coming in. That is what is the primary observation.
And how much have the prices increased by in the first quarter?
Almost 5% to 8%, depending on different oil. In mustard oil, it has been almost 8%. Palm has been steady or a little more. Cottonseed oil has grown up, but sunflower oil has grown by around 2%, 3%. So different oil has changed in a different manner. But overall, the basket has gone up by 5 to 6%, you can say. And consumption has not been hit.
Okay. And you expect this price increase that we've seen to sustain going forward? And also, if you could help us with the volume growth estimate for FY25 or what we've seen so far in Q1.
See, we are talking of volume growth, and we expect AWL to do double-digit growth, although the industry is growing at around 6 to 8%. That is one. Two, going forward, the prices are likely to stabilize. There is a supply chain issue, so the prices have gone up. I think with the Argentina and Brazil shipping becoming much more easier, things will improve. One. Two, we are all looking forward towards a good monsoon, although the monsoon so far has been a little delayed, but I hope July, August, September it catches up. And Kharif crop is a big crop because we look at cottonseed oil, groundnut oil, and soybean oil. So these are the three big oils that we expect from October harvest.
All right, so let's talk about margins then in the very near term and the end of this year as well. In the very near term, because of increase in prices, I'm sure you'd benefit from the low priced inventory that you have. So in the first quarter, what are the kind of margins that we can expect? And for the full year with stabilization in oil prices, what's your target?
See, normally the stabilization of oil prices leads to better brand sales, and that we are seeing. Brands, Fortune as a brand has come back into full, I would say the full quantity that we used to sell earlier. And we are seeing good growth in Fortune as a brand. That is one. Two, I think the margins are likely to improve over the last year, Q1, Q2. And that is surely we are seeing. And going forward, I think FY25 should be better in terms of margin, in terms of volume growth, and stability in terms of overall business environment.
So your volume growth guidance is double digit. Do you have a number in mind what you can hit in terms of margins this year?
Margins will be difficult for me to say upfront, but I can always say that it is better than last year, same period.
All right. What about things that you can say then? You know, food and FMCG, how much will that be as a proportion of your sales? You were looking to take this up to almost 20% at one point in time. And your market share, because the market's growing mid-single digits, a little more than that, you are growing double digits. What's your end of the year market share aspiration? So on food, FMCG and market share, what are the two numbers that you can give us?
See, as a company, we expect double-digit growth in edible oil. Food and FMCG basket has been growing at 20% plus, and we hope we will continue with that 20% surely. Industry essentials, particularly oleochemical business, DOC and animal feed business, plus the castor oil, all this put together, we expect 10 to 12% growth. So overall, as a company, the volume growth will be higher than 10%. Then comes to the stability part of it, or the market share part of it. We are growing faster than the industry, that is for sure. The brand Fortune and edible oil, refined oil consumer pack, we are growing. Nielsen says we have grown at 9% against 6% of the industry. So you can assume that actually the trend will be a little higher. In Atta, we have done well, and the market share has grown from 5% to 5.9%. Basmati rice, we are still not able to grow as fast as the industry, and we hope to catch up soon because of the strategy that we are lining up. So overall food basket, besan, nuggets, all these are growing at strong double digit.
In light of all of this, have you decided on the plan to meet minimum public shareholding? Because, some of the other group companies are looking to raise funds. So I just wanted to understand whether Adani will be the one reducing its share, or will it be Wilmar? Currently, promoter stake is about 88%. You have time till Feb 2025.
See, as part of the mandatory thing, we have to dilute 13%. So that we are working on, and hopefully in coming months, we will go to the public or whichever way the organization or the promoters decide. But surely we have to dilute 13%.
By we, you mean the promoters at large, both Adani's and Wilmar, right?
I think yes.
Yes. So, no, I just wanted to know, will it be 6.5% by both of them, or will it be 13% by one of the partners, or one of the partners will look? I'm just trying to understand.
That I think the promoters will have to decide. We as professionals have not much of say. Promoters will decide whatever is best for the company.
Okay, well, we'll leave it there, sir. Thank you very much. Good speaking with you, and good luck. It's a pleasure having you with us here. Well, now let's talk about the outcome of the 53rd GST Council meet, which took place over the weekend. In terms of key decisions, GST Council has decided to roll out Aadhaar-based GST verification in a phased manner across the country. The issue of rate rationalization on fertilizers has been referred to the group of ministers. And of course, I mean, there is stuff which has been done, stuff which has not been done, and we'll talk about both. Pratik Jain is partner at PwC India. And we also have MS Money, partner, GST at Deloitte India. Gentlemen, great to have both of you here. Thank you very much for joining us. Prashant this side. Pratik, if I can start with what is top of mind, which is online gaming and casinos, right? Now, there was a fair bit of a lot of newspaper headlines which essentially said that there has been no relief. Nothing was discussed, no relief for this particular sector, where there was clarity which was awaited. But I just wanted to get a sense from you. Is that how you would read this? Because, they are essentially introducing an amendment in Section 11A, a clause which enables the waiver of retrospective taxes. How will that, is that not some a glimmer of hope, relief aimed at not just one sector, but which perhaps enables relief for not just online gaming and casinos, but other sectors as well? Just explain this for our viewers, please.
No, absolutely, Prashant. There is a glimmer of hope. More than a glimmer of hope, I would say. I think the government is perhaps contemplating to use that provision to provide relief to certain sectors, perhaps online gaming as well. So what has happened in this council meeting is that they have now approved the enabling provision, which allows the government to provide retrospective exemption. That kind of provision was there in a pre-GST era in excise laws, etc. That was not there in GST law. Now that provision will be there once the amendment is passed, which is likely to happen in the budget session. After that, the government can provide a retrospective exemption, and perhaps the online gaming would also find favor at that point in time. Of course, government will need to take a decision. In this council meeting, nothing has happened on gaming per se, but once the enabling provision comes in, I see a possibility of that happening.
No, so this will now have to be, so this is a process, right? This will have to be taken through the parliament?
Yes,
Pratik?
this will have to be taken through the parliament because amendment in the act. And of course, once that happens,
it
then,
comes back to the council, and then I think they'll have to take it up sectorally, right? I mean, they'll have to apply this.
Absolutely, correct.
But so names like Delta Corp, etc., right, which runs casinos, has been under pressure. It's a. Would you? Again, I mean, without sort of talking about specific stocks or some companies, would you say, you said this is more than a glimmer of hope. So it is material in that sense.
Yes, I mean, look, ultimately, whether the government wants to provide relief to the online gaming or not, that's for the government to decide. What I'm only saying is that after the enabling provision comes in, then government can not only do gaming industry, they can provide, there are things about, foreign airlines, shipping lines, and so on, right? So now they will have power to provide retrospective exemption. And I think that power will be used. Now, whether it will be used for, online gaming or not, that remains to be seen. But what we were reading in the media is that the government was contemplating. So if the intention is to provide that exemption, then that provision is likely to be used once the act is amended.
Mr. Money, is it a bit of a, as Pratik and I was discussing, is too much a leap of faith to expect? I mean, one can argue and say that if they did not want to provide relief to the sectors which were affected, why would they introduce this amendment? Is that the right way to look at it?
I would actually go one step behind that, Prashant, to say that more than anything, what the amendment is that there is a genuine desire now on part of the government to recognize trade practices and business practices which may not be aligned with GST. And trade practices, business practices are unique to each industry. Online gaming has had certain, manner of calculating, whether it is the gross gaming revenue, whether it is anything else. Each sector has had a different way of operating. And those practices have been in vogue since a very long time. It's too much to expect the business, all businesses across a sector to change their trade practices just because the GST law cannot be interpreted in a straitjacketed manner. So having a provision which says that we henceforth will recognize trade practices, business practices, provided it is uniform, is to me a great step that they have taken this time. As far as online gaming is concerned, I don't think there is any reason to feel doubtful on whether it will be applied or not applied. As Pratik said, we will obviously have to wait and watch in terms of what exactly is the notification and how they interpret this for them. But on a broad basis, this also is an issue that has arisen because the business practices are not aligned to the GST law. And now that they have taken the power to recognize various trade practices through obviously separate notifications. Insurance is one of them where they have already given a clarification for the future. And they have also said that the existing matters will be dealt with on as is where is basis. But even that will require a recourse to Section 11A at some point of time. So to my mind, this is a step that ideally should have been in GST when it started. But the fact that it at least coming now is fantastic for all businesses.
Yeah. Do you expect, so two things. One, I was telling Pratik, a lot of the newspapers, over the last, yesterday, today, etc., as well, no relief for online gaming, etc. You would disagree with that, right, Mr. Money?
I would say that an expectation of an instantaneous release, an immediate gratification for online gaming companies was possibly not, in place.
Maybe that was, that was not a correct expectation as well.
But
so that brings me to the second point. Now we got. Do you expect this to be taken through the Parliament this session?
Absolutely. So my sense is that the reason why this GST Council meeting took place on the date on which it took place is because the legislative amendments that they wanted to propose, they could take up during the budget session of Parliament.
Immediately.
Together with the finance bill. And therefore, once the finance bill is passed at that point of time, they will be free to introduce the new sections and all the other legislative amendments that are required.
Okay. Now, Pratik, two questions to you. One is anything else which stood out to you from the council meeting with important implications? And second, there's expectation of gas being included brought under the ambit of the GST. Now, again, it's not come through. It's not, they've not ruled it out. They said they will try, right? That's what the finance minister said. Your thoughts?
Yeah, so the first question first, I think 2-3 things will stand out. One is that there is some sort of amnesty scheme that government brought in for GST past demands for years 17-18 till 19-20, where if you pay tax, then interest and penalty will not be charged. I think that's very significant, particularly because there was a Supreme Court judgment in case of Northern Operating, after which a lot of companies had to pay GST on secondment of people coming from outside. There, a lot of companies have paid tax, but not interest and penalties. Now, interest and penalty will be waived off, not only in that case, but any other case where there is no fraud, etc. is involved. So that's important. Second is anti-profiteering provisions. There is a sunset clause which has been introduced. A lot of us were having a view that anti-profiting provision was supposed to be there only for a short period. And it's been almost 7 years since GST has been implemented. It helps the businesses to decide the pricing and let the market forces apply. So anti-profiting provision is extremely important. The last in my list is rate rationalization. There is a group of ministers which was constituted earlier for rate rationalization. Now that GOM is being sort of reconstituted because a lot of changes have happened. Now Bihar Deputy CM is going to be chairing that. And I see a hope that in the next 12 to 18 months, the GST rates will be simplified. As far as gas is concerned, I think that there is a good chance that ATF and natural gas will be included at some point in time in GST. Hopefully, some of those structural changes will be discussed in the next GST Council meeting and subsequent. There was a larger consensus on gas, I think, which is emerging. We'll have to see how much time will it take, but it should come in GST sooner than later.
Got that. Fair enough. Ms. Mani, you want to add anything to the list of what Pratik already mentioned?
Yeah, a few more things. One is in terms of intent, it was very clear that the objective was to really simplify GST. And a couple of data points in that in terms of the fact that the government is really sincere about really making GST simple for businesses. One was the statistics that was mentioned, which said that less than 2% of the effective taxpayers have been issued a notice. It's not that there are notices issued to everybody. The other is the fact that I'm seeing for the first time that there is now a threshold limit faced for the tax authorities to file an appeal. So they have come out with 3 different threshold limits for appeals and for High Court and for Supreme Court. And below that, they will not be able to go ahead and file an appeal unless there is a malafide which has occurred. So the mechanical manner in which the revenue authorities would go for increasing the litigation and choking up the entire litigation process will now come to an end. I just wish there were something similar where businesses did not need to appeal up to a certain threshold, where there were repetitive matters. But the fact that they have looked at it and they have looked at various other measures to really simplify the ease of doing business, to me says that the next phase of GST, as we move into the 7th year of GST, is going to be about how do we make it simple for all businesses, how do we take away the pain points, and how do we really listen to what the industry and trade is saying and then act on that. That, to my mind, was the biggest takeaway.
All right, gentlemen, thank you so much for joining in and adding value to the GST meet that was this weekend and giving us a lowdown on exactly what the intent of the meet was and what we can expect going forward as well. Meanwhile, there has been a recovery from the lows on the Nifty. The Nifty is now down just about 67 points, which tells you that there has been a recovery of almost 70 points from the lows. 23,350 is where the low of the day was made on the Nifty. And the Nifty Bank, while it is still underperforming, we have seen some support for the Nifty come in from the auto space. Some of the auto stocks are doing extremely well. We have some traction seen in FMCG as well. Monsoons are back, so the auto index has moved to the high point of trade, and some of the FMCG names are doing extremely well in today's trading session as well, with a gain of almost 0.25% at an index level. So good time to get in Mitesh Thakkar for trades at 10. Mitesh.
Mangalam, I think the index has managed to hold on 23,400, but the recovery doesn't look very convincing to me, so we are still not going long there. In fact, on the stock side, I have a sell on DLF with a stop at about 852 for targets of 820 on the downside. And the other one is Federal Bank, which is a sell with a stop at 175 for targets of 165.
Okay, thank you very much for that. Get into a break. On the other side, Manisha will put the spotlight on commodity markets.
To cancel the exam was taken only after the Indian Cyber Crime Coordination Center under the MHA informed Education Ministry about the question leak. The Indian Cyber Crime Coordination Center informed Education Ministry that many questions of the NET exam were available on the dark net and the same were also available on Telegram. He said that the government has a zero-tolerance policy for paper leaks and government cares about the future of students, hence this swift decision was taken. Education Minister also accepted that the question paper leak of UGC NET is an institutional failure of the NTA. However, despite giving several assurances about securing future of the students, there were several nationwide protests organized by the Congress. The student wing of Congress, NACOI, organized protests in several cities outside BJP state offices demanding a probe under the supervision of a sitting Supreme Court judge. On NEET, the Education Minister said that the Bihar police is investigating the matter and it has got many leads. Bihar police is expected to submit a final report to the central government. Minister also made it clear that whoever is a culprit, he or she will not be spared even if they belong to the National Testing Agency or the NTA. CBI also registered an FIR in connection with the UGC NET exam on Thursday. Minister Pradhan said that he does not want to do politics around this matter and requested the opposition to not do politics around NEET and the NET exam. He also informed that a committee will soon be formed that will give suggestions around the betterment of NTA. The ministry will soon inform about the re-examination dates of the NET exam.
The valuation is just the score, is the way we call it. So we are all about playing the game. And our game is accelerated computing and building a platform. So for us, generative AI is the killer application among other applications for accelerating.
Welcome back. As promised, let's shift our attention now to the commodity markets. Manisha is now with us. Manisha, hi.
Hi, and thank you for that. Well, I'm looking at metals as an overall sector, but within that as well, copper specifically, because we've been looking at prices continuing to decline with the kind of declines that we have seen for the month of June. We've basically cleared out what we saw as in sense of gains for the month of May. So the prices have declined to nearly 2-month lows, and this is on the back of strength that we've seen come back in case of US dollar. Not just dollar, the bond yields have been on the higher side. The US business activity data came in at the highest in 26 months, and that's seeming to put some pressure on various dollar-denominated commodities. When you look at dollar itself, well, we have seen the Chinese yuan decline to a 7-month lows versus the US dollar, and that is pretty much the case in various other Asian currencies. We saw rupee hit an all-time lows in the previous week. You have the Japanese yen, which is trading at an 8-week lows versus the dollar, and the pound sterling as well has continued to decline. That one is trading at a 5-week lows as well. So when you look at the copper prices itself, we're down 1% on the week already. Last 1 month, it was 8.5% of a decline coming in. From its all-time highs of $11,000 a ton, we're down by 13% right now. As I said, the way the copper prices have been in the month of June, we've erased all of May's gains and much of April gains as well. The markets clearly seem to be reacting to this one thing. So when you look at the surplus, Jan to March of a quarter, the surplus was 299,000 tons. For the month of Feb alone, it was 191,000. We are looking at the surplus quantity continue to go down. So when you look at March and when you look at April at 13,000 tons, you really do know on why copper hit all-time highs in the month of May, because by then we saw the surplus continue to decline even further there. Well, the future trend does seem on the higher side, because if you look at the markets, the demand on the longer period does seem very important. 115% more copper is going to be required for next 30 years. This includes conventional, and then of course you have EV demand, hybrid car demand. All of that is going to use a lot of copper there. Availability of ore is going to be one thing. That is something that the markets are talking about. If you want to see the kind of demand that we are looking at and in sense of supplies, you'll perhaps need 55 more mines, and that is the premium we're looking at in sense of prices right now. There are operational setbacks in Chile's Codelco. There is a smelting output that has seen a decline of 5 to 10% come in for China. That has been supportive. And the markets do believe that with the kind of fund movement that we've seen in case of copper, the longer term, especially, the copper prices will stay supported at around $9,500 a ton going forward as well.
Okay, Manisha, thank you very much for that. Copper always making headlines there. Get into a break. On the other side, we'll connect with Shiva Ramakrishnan Ganapati, VC MD of Gokuldas Exports, to discuss the India textile exports picture and also the strategic investment that the company has done with BRFL Textiles.
And so, we've been doing deep learning since 2012. Jensen, presented to OpenAI the first DGX in 2016. So that's a very, very long and deep involvement with all of the ecosystem associated with generative AI.
So no overnight success, which is what people sort of suddenly, like where did Nvidia come from? To the layperson, I mean, it's just a phenomenal story that's taken shape in the public perception over the last few years. But there's a lot of work that's gone in over the past 2 decades in building it out to be what it is today.
Yeah, I mean, we've been working on this for many years. We always work with all of the developers and all the research laboratories and universities, all of the startups, small startups as well as mid-size and large startups, and all of the, global research centers, global capability centers, and major ISVs. It takes a long time to build a market.
It does take a long time to build a market. Umesh, let's talk about what is faster, leaner, better now at Uniphore, since we're talking about what generative AI can potentially do. I mean, how has life changed for you at Uniphore?
Well, first of all, great to have you back in Silicon Valley, Shireen. Much like you were talking to Shankar about these things are not overnight success. I founded the company, hard to believe, 16 years ago. We've been at this for 16 years, and sometimes I meet customers who think AI was born after the GPD moment.
Right.
But some of us have been at this for a decade and a half and more. But what's truly shifted in the last couple of years, which has been truly profound, we today serve some of the biggest companies, not just in North America, but around the world. These are large banks, large telecom companies, large retail companies who've been using AI, but now with GenAI, what's profound is AI is now a boardroom topic. It's being discussed in every board meeting in a publicly traded company.
Yeah.
Wall Street is measuring companies on their AI strategy and the stock price.
Welcome to It's the Economy. Actually, it's a bit of economy as well as a corporate radar story we have. The May export data that came out last week indicates that India's textile exports have jumped 11.2% year on year. This is the highest in 18 months. That is, it's the highest jump year on year since November 2022. Now, to get a handle on whether things have improved in the entire textile export market, we have with us Mr. Shivramakrishnan Ganapati, the Vice Chairman and Managing Director of Gokuldas Exports. But more importantly, which is the corporate radar element, the company has announced a strategic stake of 350 crores in the first tranche in BFRL Textiles. So equally for both, Mr. Shivramakrishnan, thank you very much indeed for joining us. Let me first begin with the macro story. This turnaround in textiles, all of last year we had this month-on-month numbers indicating a minus. Calendar 23. Things have decisively turned the corner. So I think you're on mute. Okay, go ahead, sir. Go ahead. Sorry.
I'm sorry. It has. And I think it's also partially because of the base effect. So what had happened in calendar 2023 was that there was excess inventory from excess buying in calendar 2022. So if you look at US imports in calendar 23, it was down almost 22-23%. If you look at European, buying or imports in that year, it was down 16%. UK was down 28%. So all the big markets were buying less because they had excess inventory. But in calendar 2023, the retail sales were up over calendar 2022. So brands managed to get rid of their excess inventory during the year, and now they're coming back to buy more. So on a lower base of 23, of course, you will find that brands are buying more. So there is an upswing in demand, and that is playing out. So that's point number one. Point number two, I am increasingly seeing that the diversification away from China has started with a little more aggression. And that's because, when they were buying less, the brands were buying less, there was very little to diversify away from. But now that, they are buying again, they're looking at, increasing the allocation for Indian region. Bangladesh is also kind of maxing out, and there is some degree of preference for India. So there is all of these macroeconomic moves, which I believe is helping the country.
So what kind of a substantial, as far as May exports go, some 11,000 crores is a bit of a record, because normally in May, you guys have done whatever, 10,000, 9,000 in the past. But then in February, March, in the post-Christmas and post-Christmas months, you all normally do, 12, 13,000. So what is the scope? Do you think we can do a full year of double digits?
So I'm hoping for that, right? Especially after falling. If you look at the last financial year, the Indian exports were down compared to the year before. So obviously we'll have to recover that and hopefully grow over it, right? So my sense is that if things go well for spring summer, which for which the exports will start from somewhere in October all the way through till March, I think we should see a reasonably good traction from India. So my presumption is that the growth should be strong. It's hard to predict at a macro level for India. Individual companies will certainly do well.
Okay. What's your own share split of exports and domestic?
So ours, we focus only on exports. So our domestic sales would be low single digits.
Okay, fine. So let me come to this BRFL. Is this Bombay Rayon?
That is correct. Bombay Rayon Fashion Limited, correct.
So then it is a major turnaround story, I would assume. Can you just give us some, perspective on how big this acquisition is for you?
So it's not an acquisition. We are investing in the company primarily to ensure that we have a raw material linkage. So given the size where we are already, I mean, you would have seen that our last quarter's revenue was almost 800 plus crores. And we will be run rating, over that very soon. So we are a big buyer of fabric ourselves. And given our size, we need to now have a much bigger, value chain play as opposed to mere garment manufacturer. So with that in mind, we set up our own knit fabric mill in South India, which is coming on stream as we speak. And then we said, since we are a large wovens player, and wovens is more than 80% of our portfolio, we would require a woven fabric capability ourselves. So with that in mind, when this opportunity came our way, we thought we will invest in BRFL. We will make sure that we have a much stronger value proposition for our customer so that we can turn things around faster for our customer. One of the things that is important in the fashion business is that if you're able to go with much better fabric development as well as much shorter lead time, you have a stronger presence in the market. And being vertical always gives you that added advantage with the customers. So with that in mind, we have invested in the company, and there is a possibility that at some time in the future we may even acquire the company going forward. So that option exists, and we will evaluate it as we go forward. But this definitely ensures a much stronger vertical capability for Gokuldas.
Okay. No, I wantonly use the word acquisition, knowing that it is only a strategic stake that you have picked up. But I looked up in the listed stock is hardly trading. It's about a 2 rupee share. And you all have put in 350 crore. So that of course, it's an optionally convertible instrument. So what does it give you in terms of stake and when?
Okay, so this is not the BRFL Limited, which is listed.
Okay.
This is the Tarapur processing facility, which is their state-of-the-art good facility, and that is not part of BRFL. So that was separated out, and it was owned. They had multiple shareholders, but JMARC being one of the big shareholder there. Okay. And we only have invested in BTPL, which is a separate entity from BRFL Limited. This is BRFL Tarapur, Textile Limited, which is a separate entity, not the listed entity of BRFL.
Okay, so can you give us an idea in a longer term time frame? You said that you are open to even putting in, I think, more money, another 150 crore. So what will it do to margins? What will it do to your output, your scale, top line, say over a 2-year period, 3-year period?
Sure. So this I view as a strategic move for us. We if we have to go to $1 billion in top line, that's the kind of directional run that we are in. we will have to have a vertical presence. So this certainly helps us in that direction. So having a fabric mill allows us to expand more faster on the garment side. And then when we had two options. One was go set up greenfield or acquire or invest or something like that. And here we had an opportunity to invest and secure a fabric linkage for ourselves with the option of acquisition going forward. So this made a lot of sense for us from a strategic perspective, because it gives access to woven fabric mill. It has got a 400,000 meters per day capacity, which is a fairly substantial capacity. It's a very versatile mill with a lot of different products that it can produce. It's one of the most versatile mills in the country, and it's a mill with a lot of modern machines there. And that allows us to do a lot more product development for our customers. So with all of this, I think this will accelerate our growth going forward. So having this presence will speed up what we were doing so far.
Okay. To just get to numbers, what can it do to revenues this year? What can it do to margins this year? Or if the impact is going to be next year, if you can give me a 2-year perspective of both. See, when you say 1 billion, you are now at what, 2,200 crores or something. So it would be, you're looking at a quadrupling. How long will it take?
So last year we were at 2,400 crores. That is FY24. But if you look at our fourth quarter, we were over 800 crores. So that itself is run rating to about 3,200 crores. And we will have some growth in FY25 as well. So currently we are we are run rating at well over 3,200 crores. So 4,000 crores or 4,000 odd crores is not too far away given that, and that would be $500 million, right? So if I'm looking at $1 billion, then I'm looking at little over doubling from where I am from a run rate perspective. So that's point number one. And that,
that is a 3-year view, doubling?
I think 3 to 5 years. I don't want to comment on it because there's a lot of moving parts here. Obviously, we would like to grow faster, but then there are many unknowns in the markets given how they are, right?
Fair enough. So, if you were telling me about margins this year.
Right. No, and before I come to margins, this entity will not add any revenue to us because we have just invested in OCDs, optionally convertible debenture. So there's no revenue expectation from this investment at the moment, except for interest revenue, the debenture investment. As and when, we find it is strategic and we acquire them, then it will become a revenue accretive and, margin accretive business. But that's something I would look at in FY26 or FY27. So at the moment, it's merely an investment that we are looking at in BRFL. BRFL Textile. So that's the point. As far
that's
as
a fair
margins
point,
go,
but go ahead, sir. Sorry.
As far as margins go, that is for Gokuldas itself. Since we have acquired 2 entities in the fourth quarter, we expect some degree of margin dilution because the acquired entities may not be performing at the margin levels that we are. We perform at a margin between 12 and 13%, but then the acquired entities are more at 10.5%. And our expectation is that they will take a year before they reach about 12%. So in FY26, we will hope that, combined entity will cross again 12% margin. In FY25, we would be somewhere between, 11.5 odd percent margin. That's the current expectation. Clearly, we would try to push our margin because we're very, very margin conscious, and we would try to push it as much as possible. But this is where we are expecting it to trend.
Okay, got that. You're referring to Atraco and Matrix. That was the acquisitions you all made lately. Just a quick word now on, you said 3,200 crores this year. If you go extrapolate the 812 crores that you all reported in the just concluded quarter, do you think that it can be better in the coming quarters simply because it looks like the global economy is more receptive to Indian textile exports, or at least you all are carving a larger niche? So should we expect even this year to be way above the 3,200 that you referred to?
100%.
Okay.
It will definitely be above that.
Okay, give us a ballpark. What should we cling on to?
I wish I could say the number. I would stop short of speculating on it, but it would be a good growth over it.
Okay, we'll leave it at that. We'll hopefully have when your results come, more clarity from you in terms of the kind of growth that you're expecting. But okay, this year the margins could be dulled down by the two acquisitions, only to be perhaps made up in the next few years, both in terms of volume and margins. Mr. Sivaramakrishnan, pleasure speaking with you. Thank you very much for spending time for us on that optimistic note in a market that's a little downbeat. We wrap up on Bazaar. Chartbusters coming up.
Or down, depending on what companies announce. And for that reason, CEOs and CIOs are now singularly responsible. A lot of the customers that we've been dealing with, prior to GPT, AI was being bought as part of a software as a service application. Something in marketing, something in contact center, something for sales. Now AI is an infrastructure that no company can ignore not having within itself. And for the last couple of years, we've seen tremendous traction. Matter of fact, we grew our top line a little over 60% last year, which was an acceleration from the previous year, and we're seeing the same trend continue now. So I'm seeing an insatiable desire at the C-suite around the world about how do we become AI natives? How do we keep our sovereignty when it comes to AI? How do we not share our data with somebody else? And what kind of
दिवस गौरवमय है। यह वैभव का दिन है। आजादी के बाद पहली बार हमारी अपनी नई संसद में ये शपथ समारोह हो रहा है। अब तक ये प्रक्रिया पुराने सदन में हुआ करती थी। आज के इस महत्वपूर्ण दिवस पर मैं सभी नवनिर्वाचित सांसदों का हृदय से स्वागत करता हूं, सबका अभिनंदन करता हूं और सबको अनेक अनेक शुभकामनाएं देता हूं। संसद का ये गठन भारत के सामान्य मानवीय के संकल्पों की पूर्ति का है। नए उमंग, नए उत्साह के साथ नई गति, नई ऊंचाई प्राप्त करने के लिए ये अत्यंत महत्वपूर्ण अवसर है। श्रेष्ठ भारत निर्माण का, विकसित भारत 2047 तक का लक्ष्य, ये सारे सपने लेकर के, ये सारे संकल्प लेकर के आज 18वीं लोकसभा का प्रारंभ हो रहा है। विश्व का सबसे बड़ा चुनाव बहुत ही शानदार तरीके से, बहुत ही गौरवमय तरीके से संपन्न होना, ये हर भारतीय के लिए गर्व की बात है। 140 करोड़ देशवासियों के लिए गर्व की बात है। करीब 65 करोड़ से ज्यादा मतदाताओं ने मतदान में हिस्सा लिया। यह चुनाव इसलिए भी बहुत महत्वपूर्ण बन गया है कि आजादी के बाद दूसरी बार किसी सरकार को लगातार तीसरी बार सेवा करने के लिए देश की जनता ने अवसर दिया है और ये अवसर 60 साल के बाद आया है। ये अपने आप में बहुत बड़ी गौरवपूर्ण घटना है। साथियों, जब देश की जनता ने तीसरे कार्यकाल के लिए भी एक सरकार को पसंद किया है, मतलब उसकी नीयत पर मोहर लगाई है, उसकी नीतियों पर मोहर लगाई है, जनता जनार्दन के प्रति उसके समर्पण भाव को मोहर लगाई है। और मैं इसके लिए देशवासियों का हृदय से आभार व्यक्त करता हूं। गत 10 वर्ष में जिस परंपरा को हमने प्रस्थापित करने का निरंतर प्रयास किया है, क्योंकि हम मानते हैं कि सरकार चलाने के लिए बहुमत होता है, लेकिन देश चलाने के लिए सहमति बहुत जरूरी होती है। और इसलिए हमारा निरंतर प्रयास रहेगा कि हर किसी की सहमति के साथ, हर किसी को साथ लेकर के मां भारती की सेवा करें, 140 करोड़ देशवासियों की आशा आकांक्षाओं को परिपूर्ण करें। हम सबको साथ लेकर के चलना चाहते हैं, सबको साथ लेकर के संविधान की मर्यादाओं का पालन करते हुए निर्णयों को गति देना चाहते हैं। 18वीं लोकसभा में हमारे लिए खुशी की बात है कि युवा सांसदों की संख्या अच्छी है। और हम जब 18 की बात करते हैं तो भारत की परंपराओं को जो जानते हैं, भारत की सांस्कृतिक विरासत से जो परिचित हैं, उनको पता है कि हमारे यहाँ 18 अंक का बहुत सात्विक मूल्य है। गीता के भी 18 अध्याय है। कर्म, कर्तव्य और करुणा का संदेश हमें वहां से मिलता है। हमारे यहाँ पुराणों और उपपुराणों की संख्या भी 18 है। 18 का मूलांक 9 है और 9 पूर्णता की गारंटी देता है। 9 पूर्णता का प्रतीक अंक है। 18 वर्ष की आयु में हमारे यहाँ मताधिकार मिलता है। 18वीं लोकसभा भारत के अमृतकाल की इस लोकसभा का गठन वो भी एक शुभ संकेत है। साथियों, आज हम 24 जून को मिल रहे हैं। कल 25 जून है। जो लोग इस देश के संविधान की गरिमा से समर्पित हैं, जो लोग भारत की लोकतांत्रिक परंपराओं पे निष्ठा रखते हैं, उनके लिए 25 जून न भूलने वाला दिवस है। कल 25 जून को भारत के लोकतंत्र में जो काला धब्बा लगा था, उसके 50 वर्ष हो रहे हैं। भारत की नई पीढ़ी इस बात को कभी नहीं भूलेगी कि भारत के संविधान को पूरी तरह नकार दिया गया था। संविधान के लीरे लीरा उड़ा दिए गए थे। देश को जेल खाना बना दिया गया था। लोकतंत्र को पूरी तरह दबोच दिया गया था। इमरजेंसी के ये 50 साल इस संकल्प के हैं कि हम गौरव के साथ हमारे संविधान की रक्षा करते हुए, भारत के लोकतांत्रिक परंपराओं की रक्षा करते हुए देशवासी संकल्प लेंगे कि भारत में फिर कभी कोई ऐसी हिम्मत नहीं करेगा जो 50 साल पहले की गई थी और लोकतंत्र पे काला धब्बा लगा दिया गया था। हम संकल्प करेंगे जीवंत लोकतंत्र का, हम संकल्प करेंगे भारत के संविधान की निर्दिष्ट दिशा के अनुसार जन सामान्य के सपनों को पूरा करना। साथियों, देश की जनता ने हमें तीसरी बार मौका दिया है। ये बहुत ही महान विजय है, बहुत ही भव्य विजय है, और तब हमारा दायित्व भी 3 गुना बढ़ जाता है। और इसलिए मैं आज देशवासियों को विश्वास दिलाता हूं कि आपने हमें जो तीसरी बार मौका दिया है, 2 बार सरकार चलाने का अनुभव हमारे साथ जुड़ा है। मैं देशवासियों को आज विश्वास दिलाता हूं कि हमारे तीसरे कार्यकाल में हम पहले से 3 गुना ज्यादा मेहनत करेंगे। हम परिणामों को भी 3 गुना ला करके रहेंगे। और इस संकल्प के साथ हम इस नए कार्यभार को लेकर के आगे चल रहे हैं। माननीय सभी सांसदों से देश को बहुत सी अपेक्षाएं हैं। मैं सभी सांसदों से आग्रह करूंगा कि जनहित के लिए, लोक सेवा के लिए हम इस अवसर का उपयोग करें और हर संभव हम जनहित में कदम उठाएं। देश की जनता विपक्ष से अच्छे कदमों की अपेक्षा रखती है। अब तक जो निराशा मिली है, शायद इस 18वीं लोकसभा में विपक्ष देश के सामान्य नागरिकों की विपक्ष के नाते उनकी भूमिका की अपेक्षा करता है, लोकतंत्र की गरिमा को बनाए रखने की अपेक्षा करता है। मैं आशा करता हूं कि विपक्ष उसमें खरा उतरेगा। साथियों, सदन में सामान्य मानवीय की अपेक्षा रहती है डिबेट की, विजिलेंस की। लोगों को अपेक्षा नहीं है कि नखरे होते रहे, ड्रामा होते रहे, डिस्टर्बेंस होता रहे। लोग सब्सटेंस चाहते हैं, स्लोगन नहीं चाहते हैं। देश को एक अच्छे विपक्ष की आवश्यकता है, जिम्मेवार विपक्ष की आवश्यकता है। और मुझे पक्का विश्वास है कि इस 18वीं लोकसभा में हमारे जो सांसद जीत करके आए हैं, वो सामान्य मानवीय की इन अपेक्षाओं को पूर्ण करने का प्रयास करेंगे। साथियों, विकसित भारत के हमारे संकल्प को पूरा करने के लिए हम सबका दायित्व है। हम मिलकर के उस दायित्व को निभाएंगे। जनता का विश्वास हम और मजबूत करेंगे। 25 करोड़ नागरिकों का गरीबी से बाहर निकलना एक नया विश्वास पैदा करता है कि हम भारत को गरीबी से मुक्त करने में बहुत जल्द सफलता प्राप्त कर सकते हैं। और ये मानव जाति की बहुत बड़ी सेवा होगी। हमारे देश के लोग 140 करोड़ नागरिक परिश्रम करने में कोई कमी नहीं रखते हैं। हम उनको ज्यादा से ज्यादा अवसर जुटाएं, इसी एक कल्पना। और हमारा ये सदन वो एक संकल्प का सदन बने। हमारी 18वीं लोकसभा संकल्पों से भरी हुई हो, ताकि सामान्य मानवी के सपने साकार हो। साथियों, मैं फिर एक बार विशेष करके नए सांसदों को बहुत बहुत बधाई देता हूं, सभी सांसदों का अभिनंदन करता हूं और अनेक अनेक अपेक्षाओं के साथ आइए हम सब मिलकर के देश की जनता ने जो नया दायित्व दिया है उसको बखूबी निभाएं, समर्पण भाव से निभाएं। बहुत बहुत धन्यवाद साथियों।
All right, that was Prime Minister Narendra Modi addressing the media ahead of the first session of the 18th Lok Sabha, which starts today, will conclude on July 3rd. In this session, of course, we will first today see, the oath taking of all the newly elected members of Parliament. And thereafter, there would be a lot of discussions. The Prime Minister calling on the opposition for improved quality of debates and encouraging bipartisanship as well as the hallmark of democracy. But speaking about hallmarks, the hallmarks of a bull market are definitely, lows from the day being bought into, and as a result of which the market moving off the lows. We've seen a good recovery. So if you've just joined in, you would say the Nifty is down 20 points, but it's a near 130-point recovery from the lows on the Nifty, led by the Nifty Bank, which is up almost 350 points from the lows, and the mid-cap index, as we speak, has just about moved into the green. I'm Manglam Malu, with me Hormas Fatakia. We'll take a short break, come back and continue our coverage on the markets.
And technologies do we need to make this all happen?
Speaking of startups and high tech, the Wall Street Journal has a front page today on comparing what you did with Cisco and what's happening at Nvidia today.
Yes.
And Cisco was in 2000 the most valued company in the world on the back of the big transition that we saw then with the internet. And that's what we're seeing happen with Nvidia becoming the most valued company. As people draw these comparisons,
Yes.
what's going through your mind?
Well, first of all, it shows you that technology moved from something that the techies did to impacting every one of our lives. So with the internet, changing the way you work, live, learn, and play, when I said that in 93, most people said, no, it's techies talking. It clearly did. As you watch, there's new generations of leaders about every 10 or 20 years. And I think it's very healthy. So it's Cisco for the internet, then about 4 or 5 players for the cloud, and now Nvidia is clearly leading in terms of AI. And they're kind of like the indication of the infrastructure of AI. If you want to know how AI is doing, look at how fast Nvidia is growing. And it is growing great. What is it, 540% in the last 2 years. Today, if you're not into AI and if you haven't got a good AI strategy, well, implementation, investors won't invest in your company, even if you're a manufacturing company or a semiconductor company, etc. The pace of change, however, is different. It's about 10 times faster and can be 10 times bigger than what we saw just a few decades ago.
So, you've been a big champion and a big believer in the India story, but there's a long distance still to go to fully realize the potential of this partnership and this relationship. Where do you believe it's being constrained today?
As the largest democracy, watching your elections just occurred, and congratulations to Prime Minister Modi. It was a smooth election. There was no issues in the market, and I think that's a model for the rest of the world's democracy to follow. And now you're seeing the country lead in innovation. My challenge is don't be satisfied with just what we're doing. We've got to dream bigger in terms of the overall approach. So this is what I really think about in terms of where we are today. I think we've got to look at where we go. I do think it will be the century for India. I think it will be also the decade for India.
The latest challenge that you're up against is the US government looking at whether, again, there is a violation of policy and whether there are sort of fees that are being collected without consent or, explicit consent and so on and so forth. I mean, how do you deal with something like that?
Well, you first go back to the principles and the facts, and the reality is that it was the government's case is misguided, and so we will fight it and we'll refute it in court. I think if you take a step back and you think about what Adobe has pioneered, the subscription economy and the digital economy is everywhere. I think when I try and read your content, it's probably going to be available through a paywall as a subscription.
Yeah.
We have open and flexible policies where some people can pay for it up front and get a discount, and others pay for it on a month-to-month. So having flexibility makes sense. But, it's something.
You're watching us here on Chartbusters. There's been a stellar recovery from the lows for the frontline indices. The Nifty about to break into the green. The Sensex too, seeing a fair amount of recovery led by the Nifty Bank, and the mid-caps, of course, are in the green already. So in a market like this, let's get you some ideas for profit coming in from our colleagues at Money Control Pro. We have our colleague joining in with a stock that they've been tracking very closely.
Today's idea is Mediasys Healthcare Services, the third-party administrator for insurance companies that got listed in Jan 24. The company's revenue is linked to premium under management of the health insurance companies that it services, and hence it offers a unique opportunity to participate in the growth of the health insurance industry. Mediasys premium under management stood at around rupees 19,000 crores in FY24. The bulk of it came from the group business. Mediasys enjoys a market share of 20% in terms of industry's total health insurance premium. Its market share is even better in the group business and stood at around 30%. The company has delivered EBITDA margin in the range of 23 to 25% historically. However, the margin dipped to 21% in FY24. The company did 3 acquisitions in the past 12 to 15 months. Margins came under pressure primarily because of acquisition-related cost and amortization of the intangibles. As per the management, it will take another 3 to 4 quarters to realize the synergies from the acquisition and for the margins of the acquired companies to improve. The stock has risen 40% from its IPO price and is currently trading at around 30 times earnings estimated for FY26. Valuation is rich but is justified given the annuity-like revenue, high operating leverage and dominant market position in the growing industry. Given the sectoral tailwinds and Mediasys' vantage positioning, the stock could be a long-term compounder. Long-term investors should accumulate this stock on dips.
All right, then, with the market having recovered the way it has, it's a good time to get in a technical check on the markets. Then Shivangi Sharda of Motilal Oswal is joining in. Shivangi, good morning. Thanks a lot for staying by. With the market having recovered, the dips are getting bought into, but do you believe that the Nifty has enough strength on the upside to cross the previous highs first of 23,664 and then move higher towards 23,800, maybe even 24,000?
Very good morning. So we're seeing that any small declines are being absorbed, and the supply pressure is totally being absorbed by the bulls. And we are seeing a very quick and smart recovery at the lower level. So definitely we are looking at the recent lifetime high of 23,667 and then 23,750. And on the downside, support exists at 23,350 levels. So buy on decline to continue for the Nifty index. Now, Bank Nifty has also seen a catch-up rally in the last week. Today the IT is also performing. So overall, the strength is coming from all the indices. Now, looking at the levels for Bank Nifty, we are looking at 52,000 immediately on the rate-sensitive index with a support of 51,000 levels. Good part is that some of the heavyweight banking counters and the smaller banking names are contributing to this upside move. Good amount of short covering move can trigger this upside move over here. Now, stock specific action, we've seen that the auto space has been one of the most strongest, and Nifty Auto has risen from the last 14 months consecutively despite the market volatility. So first, of course, is escorts from this space. The stock has shown consistently, buying interest from the last 3 consecutive months and trading in an upward sloping channel on the weekly frame. Of course, this entire sector is sure to continue and to outperform. So recommending a buy here with a target of 45.25 with a stop of 42.65 levels. Now, the second pick is Havells. This stock has seen over 45% open interest addition on the long side and is coming out of the consolidation of the last 11 sessions. Good follow-up buying is seen intact after the 1900 marks in this stock, which indicates strength is to continue in this white goods space stock.
All right, Shivangi, thanks a lot for joining in and sharing with us your views on the index and specific stocks as well there, Shivangi Sarda of Motilal Oswal. But time for a short break here on Chartbusters. Up next, we get you more on the markets and specific stocks. Stay tuned, back on the other side.
But we certainly believe that we have been flexible. We offer customer choice and we're completely transparent about this. When you subscribe to the plan, it says annual bill monthly. And it's an annual plan. And so, but at the end of the day, for us, what really motivates us is the fact that we're impacting and innovating. And I think if people didn't feel like we were innovating, they wouldn't be subscribing to our services. And that's what we have to keep focusing on. Well, first, I'm really proud of what our team has done. When you think about the content authenticity initiative, something that we pioneered, over 3,000 companies have now signed up with it. While people understand that AI has all this power, I think it's fair to say there's some heightened sensitivity around what does this mean to me? And so, that I wouldn't call it trust deficit as much as questions about what that is. And a company like Adobe has a leadership role that we need to play, not just for ourselves with our customers, but for the industry at large about our terms of use. I think there were some questions, and legally everybody who looked at that understood that the content belongs to them. We're not training our models based on that. But I think perhaps in English we could have done a simpler job of clarifying it. So, which we have. And so, we've rolled it out. We are creator friendly. I think the product innovation that we're delivering, Shireen, it always, warms your heart when you look at the amount of innovation that we're delivering. And I think we've talked about this in the past. AI is going to be this incredibly enabling technology that allows us to, target a broader set of customers. And so I guess it's the era of AI. Now we can create campaigns, we can create content, we can address the content supply chain. So I'm completely convinced that AI, while I acknowledge it'll be disruptive, at the end of the day, it's going to be a massive enabler and a tailwind.
We have got majority of lender approval. We are in the process. NCLT take time and go through a whole process, which process will take place, and then it will be merged.
Okay. So by the end of this fiscal year, we could have the units separated, 6 listed entities of the Vedanta Group?
I think so, because certain things are in my hand, certain things are not in my hand.
Okay.
It is in the hand of NCLT. NCLT normally takes 3-4 months time, but sometimes they can take 1 or 2 months more also.
Love for cricket, the passion for cricket, which you...
Welcome back. A lot of the broader market stocks are buzzing around in trade today. One of them is actually Tidewater Company. Tidewater Oil should actually come up for you. They've informed the exchanges that one of their promoters, Standard Greasing, will go ahead and buy 3.5 lakh shares over the next few trading sessions. That's increasing their stake by about 5%. So a promoter intimating the stock exchanges of an impending purchase of about 3.5 lakh shares has that stock excited in today's trading session. But the other one which is doing well is TBO Tech. Remember, the IPO came just about a couple of months ago, and from there itself the stock has seen a big rally. Today it's up 4%. Goldman Sachs has initiated coverage on TBO Tech with a buy rating and a target price at 1970. What is it that they like about this company? This is a play on the travel B2B space, and a lot of people are obviously bullish on the travel trends going forward. So that's one of the reasons why they like this stock. And going ahead, they believe that operating leverage is something that will do well for them. They expect the free cash flow to net profit ratio to stay above 100% for the foreseeable future. How does operating leverage play out for them? they expect revenue growth of upwards of 20%, about 21% in terms of a compounding over the next 4 years. And that will actually result in 30% compounding on EBITDA and 33% jump in the EPS or the net income of the company as well. The only thing we need to be mindful of are a couple of risks. The one would be, of course, change in supplier terms because it's an e-B2B business, non-value accretive M&A if these companies do that, and slowdown in global travel. Less likelihood of the third risk playing out given the sort of increase that we're seeing in travel. The above two would be something that one would pay a little more weightage to, but nevertheless Goldman Sachs thumbs up, takes the stock higher today.
Higher indeed, 80% higher now from its IPO price, and 920 was the issue price, already at 1650 is TBO Tech, so good going there for the stock as well. But with that, it's a wrap on this edition of Chartbusters. From Mangalam, myself and the team that put this show together, thank you so much for watching. Trading Hour takes the action forward.
Whole bunch of your other tech friends brought to the US. I mean, you were in New York for the big match between India and Pakistan. I mean, what does it feel like to have actually managed to bring cricket to the US?
Well, first, I mean, I'm fortunate enough. I've been to many tennis finals, the US Open final. I've been to Wimbledon. I've certainly seen a lot of Super Bowls. The Warriors here in the Bay Area have won the NBA finals. But the excitement that I had, and I went with my son to watch a World Cup cricket in New York. And, every Indian CEO that I knew was either going to be watching it live or watching it in person.
In person, either owning a team or at least supporting a friend's team.
And so it's a passion. And, I don't know that we have enough of a farm system here, Shireen. I mean, I think if you look at what happened with soccer or football here in this country, Major League Soccer, what happened was you had a great farm system. So you had passionate fans, like we have passionate fans in cricket. But the question is, how do you encourage that farm system? And so, whether it's Satya or me, we love cricket and we'll continue to champion and passionate it. We're coming up with our second season of Major League cricket here, and I'm part of the San Francisco Unicorn team, and so it's fun.
So the Hyderabad Mafia is not just taking over tech, it's bringing cricket to the US as well.
I think we'd like to say we're paying it forward, I mean, rather than, in this case, the Mafia. This is all about a passion, and cricket's a global sport. And actually the funny thing about sport just brings together people like no other activity. And, just the amount of excitement. But now we have to go win it all, right? I mean, we've just got to the, Super 8s. And unfortunately, the India-Australia match, I have a board meeting on that day. So it's going to be...
Big conflict.
No, the board meeting is going to take priority. But, I'm going to perhaps sneak a look now and then at what's happening.
I would imagine.
Poor oral health wreaks havoc on daily life, causing pain, disability, loss of productivity, and low self-esteem.
In India, you see a lot of gum disease, which is also promoted by things like tobacco and supari.
Poor oral health is linked to serious systemic issues like heart disease, Alzheimer's, digestive problems, bacterial pneumonia, preterm delivery, and cancer.
If your teeth, the way they meet, what we call occlusion, is not proper, it can lead to other damage to the joints, to the gums. We have bone loss around the teeth.
Use a
Good morning. Welcome to Trading Hour. I'm Reema Tendulkar. With me is Sonal Putra. And it's a pretty good intraday recovery that we've seen this Monday morning. We started the day with a cut of about 150 points on the Nifty. The Nifty went down to levels of about 23,350. But from that level, there has been a recovery of 120 points. Currently, 23,490 now. It's picking up. And I think it's on the verge of breaking into the green. The mid-cap index already is now back in the green. The advanced decline ratio has turned in favor of the gaining side. So there are more stocks advancing compared to the declining stocks. But looking at that trajectory, it looks like any moment it will be green on the index.
Oh yes, and you know, every dip that's getting bought into, that's been the story in last couple of trading sessions as well. The banking index, that's the one which is supporting the Nifty right now, courtesy HDFC Bank. That stock is at the day's high, so that should come up for you on the screen because banks have been a support. And today as well, there is some buying from the lows that we are seeing in HDFC Bank. Kotak Mahindra Bank is the other one. It is in the red, but it still is seeing some recovery from the lows. The other names which are seeing recovery from the lows are Hero MotoCorp, we have Adani Ports and Adani Enterprises. There is an AGM which is going on for Adani Enterprises. But yes, a lot of these individual names, and Nifty absolutely flat with some negative bias right now. Sensex has turned into the green. So Rima, as we were pointing out, there is definite recovery from the lows. Nifty is virtually at the day's high and it's picking up pace and how. So we'll have to see whether that continues or not, or we see consolidation at these levels. But a lot of stocks which are on our radar today, and one of them is Sun Pharma. It is in focus after it released the outcome of the first phase of its obesity drug trial. Ekta is here with the details. Ekta.
Well, yes, Sun Pharma is in focus on account of positive news. They've announced the outcome of the phase 1 trial of their drug GL0034 or utriglutide, which is basically being studied for obesity. Now, it is a GLP-1 inhibitor drug. It belongs to the same class of drugs such as Ozempic and Wegovy, which is semaglutide by Novo Nordisk, or Mounjaro and Zepbound, which is by Eli Lilly. Now, remember that these GLP-1 drugs are used to treat type 2 diabetes and obesity. In 2023, they generated sales of around $50 billion. By 2029, it's estimated to go around to $100 billion. So for Sun Pharma, the impact for this is that, yes, the drug is still in very early stages for Sun. It's going to take some time to probably scale up. There are many other phases that they need to go through before they can even market the drug or it can come to market. But the fact is that they've thrown their hat into the ring when it comes to GLP-1 drugs, and it adds to the prospects of Sun's specialty business in the longer term.
Okay, what about Cipla? The company has received 6 observations for its Goa facility from the US FDA. Tell us more.
Well, yes, the US FDA has inspected Cipla's Goa facility. It was inspected from the 10th to the 21st of June, and they've issued 6 observations to the Goa facility. Now, remember that the Goa plant was under warning letter since Feb of 2020. So that means that after that, this inspection has now, they've been given 6 observations post this recent inspection despite having a warning letter. So the street is assuming that maybe if in case the 6 observations are adverse or difficult to solve, then the warning letter will stay. And what will happen will be that key drugs which are filed from the Goa facility will get pushed down further. So for example, there is a cancer drug, Aprixon generic, which is likely to now get pushed beyond, into late of FY26. It was estimated that they could make around $25 to $30 million from the drug, and it is assumed that that number could now probably become smaller if in case there is a delay in the launch and there's more competition in the drug as well.
Okay, all right. Thank you so much, Ekta, for joining us with all those details. By the way, Nifty is in the green, up around 2 points as we speak. But in the broader markets, there's one more stock which is in focus, Ujjivan SFB, after it cut its guidance for FY25. Abhishek Kothari is joining us with all the details here.
Well, it looks like stress is weighing on, companies or lenders with MFI exposure. We did highlight in May 2024 that, MFI portfolio is seeing deterioration in asset quality and provision over there is rising. So stress is increasing in the MFI sector. With Ujjivan's outlook, this looks to be true. They have increased the credit cost guidance to 1.7% for FY25. They had an earlier guidance of 1.4% to 1.5%. Loan growth guidance has been reduced, so they had an earlier target of 25% YOY loan growth in FY25. Now it is stated to be at 20% YOY. Even their return on equity target has been reduced. It is now reduced to 20% from 22% earlier that they had given out for FY25. In terms of one of the key positive highlight is that Ujjivan Small Finance Bank will be applying for the universal banking license in FY25. So in another, let's say, 6 to 9 months, we may hear from Ujjivan Small Finance Bank with respect to them applying to RBI for the universal banking license. Back to you.
Thank you very much for that. Moving on to CarTrade Tech, that's also sharply lower. 13% equity changed hands today in the morning via big block deals. Vivek joins in with the details. Vivek.
Well, that's right. 13% of equity was actually the upsize option as per the term sheet. So whatever, the sellers wanted to sell, everything has been absorbed and has been sold in the block deal today. Now, who are the sellers? As per the term sheet, Heidel Investments, which is actually a Warburg Pincus affiliate, and, has sold almost 8.7% with the upsized option. And the other seller is Temasek Holding, who sold almost over 4%. Again, they had an upsize option of 0.9, so 4.3% is what they've sold in today's trading session. Total size of this particular block is over 500 crore rupees, so quite a large block deal as far as CarTrade Tech is concerned. What is the overhang on the stock? Remember, the lock-in period for further sale of shares is just around 75 days, just 2.5 months. And along with that, Warburg Pincus held 17.36%, so they continue to hold some more stake, and Temasek Holding held 16.3%, so they also will continue to have some stake post today's block deal.
Okay, Vivek, thank you so much for joining us with those details. Well, let's cut across the fresh visuals of Prime Minister Modi taking oath at the first session of the 18th Lok Sabha. The oath taking, the process has been completed, but we'll keep getting you more details on what's happening in the Lok Sabha session. For now, we'll do one thing. We will slip into a short break. Up next, we'll discuss what's buzzing in the commodity space with Manisha Gupta.
Destroy your brush, don't destroy your teeth. Brush in a vertical or elliptical motion, not horizontal.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever.
Welcome back. You're still tuned into Trading Hour on CNBC TV18. Well, in the green, up 8 points on the Nifty. It's almost a 150-point recovery that we are seeing from the lows of the day on the Nifty as well. And the mid-caps are shining through as well, 120 points higher on the mid-cap index. And the advance decline ratio is comfortably in the favor of advances as well. Bank Nifty is the one which is supporting, of course, right now. The support's coming in from the lower levels on the likes of HDFC Bank, Kotak Mahindra Bank, etc. And a lot of moving parts in the Nifty pack and the broader markets as well, which we'll keep discussing in greater detail. For now, let's talk about the commodity space. A lot of action there as well. Manisha Gupta is joining us now, and today we are focusing on pulses, Manisha.
Oh, well, yes, because there is big news coming in here, and this is a notification that came in on Saturday, which tells us that there is now a stock limit that has been imposed in a couple of pulses. I mean, when you speak to the pulses as a sector, and there are a lot of FMCG companies there as well, they tell us that there are at least 12 notifications that have come in last 16 months in this segment, and that really has made their industry or work upside down there. When you look at the pulses inflation itself, well, that has been increasing more than other commodities, and that clearly has been impacting. So the latest is that there is a stock limit now that has been imposed with immediate effect until 30th of September, and this is on a couple of pulses like pigeon peas and chickpeas. So this is chana and tur, for better understanding, that we have seen in these pulses. There are stock limits already in various other pulses already. So now these stock limits have come in, is applicable immediately, and this is for all chains, retailers, big retailers, processors, millers, exporters, importers. This stock limit has come in for everybody. So if you are an importer, you can't keep the pulses for more than 45 days. The inflation numbers should come in on your screens there. So when you look at the month of May itself, while the overall food inflation was in single digit between 6 to 8%, we've seen pulses inflation run up by 17%. On a month-on-month basis, this has been up by 16%. As you compare it to last year, it is up by nearly 6% as well. So pulses clearly has been a concern. As soon as we've seen the new agriculture minister take over, he said that they would want India to be self-sufficient one, and this is one major step that we've seen come in for agriculture as far as the trade comes.
Thank you very much for that. We need to slip into a very short break on that note. On the other side, we'll talk market technical. Soni Patnaik of JM Financial Services will join in with her top trading bets.
Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on
today. Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter century of excellence.
This is India's election headquarters.
As the verdict emerges, the markets will react,
Bringing market movements into sharper focus with the most authoritative insights.
Once the exit polls were out, we saw the Sensex going up by 2,500 points.
In this pessimistic environment, there is a lot positive also. Please don't underestimate the 8% momentum in the economy.
Exploring election breakthroughs from the newsroom to the field.
The numbers have changed significantly in the last few minutes, even as far as UP is concerned.
Things are not looking very good for the ruling regime at this juncture.
Of course, things are changing, but it looks like a formidable victory at this point in time as far as the NDA is concerned.
Harnessing the power of over 25 years of world-class business news journalism.
You're getting all of this analysis live from the CNBC-TV18 election headquarters.
CNBC-TV18 emerged as the clear leader on television and YouTube on election counting day.
Welcome back. Power is another sector which is doing pretty well. So you've got Power Grid higher, and even NTPC has a gain of close to about 0.1%. Autos too are ticking up, so M&M is now inched up to close to about 1.5% up move. From the day's low, you've seen a recovery in Bajaj Auto. Bajaj Auto at one point of time was down, but now it's up close to about 0.7%. And IT2 is having a fairly decent session. Leading the gains there has been TCS with a gain of over 1%. In fact, here is an interesting conversation that Shireen Bhan had with TCS, where the head of banking and financial services in the US said the impact of AI will be greater than mobile and cloud. These are words which have come from Amit Bajaj, president of North America of BFSI. In an exclusive chat with Shireen, he also said that clients are in a wait-and-watch mode ahead of the US elections. Listen in.
We're at the spanking new office for TCS in Santa Clara in Silicon Valley, and joining me now is Amit Bajaj. Amit, what an absolute pleasure. Thanks very much for giving us access to the new TCS office. It's great to be here.
Thank you, Shireen. Thank you for having us, and hope you're having fun days in the Valley.
Well, I have to say, it's a lot of work, but it's been fun to understand what's going on, especially with AI, but I'll talk to you about that in just a second. You know, this is really the mother market for you, Amit, and you've been here over the last few years running the North American business. What's the sense that you get in terms of business confidence, in terms of a return of discretionary spending capacity, discretionary spending power? Is it looking any different today from the last time that you spoke at the end of the quarter?
I think the overall confidence is quite robust, I would say, Shireen. But in the short term, we're going through an election year. There is fair amount of tailwinds that we have from good employment rates, good consumer demand, but there are also sense of headwinds with government spending, with inflation, with interest rate environment. So I think while the demand is holding up and businesses' top line is quite strong, they are still taking a cautious approach, investing, but being measured.
And when you say investing, is it incremental investment or is it really redeploying capital from one area to the next?
I would say the latter. So AI is very, very real, and it's everyone wants to invest in that.
So where are they pulling money out of and putting it into AI?
And the AI has both an applicability on the growth side, but also on efficiency and cost side. So at the near term, you can deploy the technology in business as usual activities and fund your innovation and growth cycles from there.
So pause for now, you believe at least through 2024 till the US elections are out of the way, which is November. So it pretty much takes care of this calendar year.
Yeah, I would say measured. We are going to see spending, but there's going to be a dislocation of spend. And it's going to be, in certain ways, self-funding, at least for now.
You talked about the strength of the U.S. economy. You also talked about the fact that consumer confidence continues to be fairly strong, even though we've seen inflation still running fairly high, and we haven't seen those rate cuts, or at least a rate cut trajectory, which is what the markets want at this point in time. It looks like it is going to be, longer for rates to start to fall. But how do you see that impacting spends even post the election period? Because is there more trepidation and nervousness on the large deals, or will it continue to be cost rationalization?
So in certain ways, it's like a Goldilocks situation, right? Like you are somewhere in the middle. You're not in a recession technically, where customers are really thinking about large cost cut and cost-driven big initiatives. On the other side, while technology promises a lot of innovation, it has its own adoption cycle. So the technology innovation is exponential, but the adoption is linear.
Yeah.
So, one has to deal with people change aspects of technology adoption, governance aspects. So on the growth and innovation side, it is fairly a linear journey. So we are somewhere in the middle, so you're not seeing a very strong breakout either ways.
Conversational breakout, of course. This is the buzzword. Everyone's talking about it, whether inside the boardroom or outside the boardroom. But you're saying that at an enterprise level, adoption is going to take time before it gets to any kind of scale.
Yes.
In your conversations that you're having with your clients here, and of course, people that you collaborate with, you co-create with. Where do you believe we're going to see adoption really kick off? Where do you believe that the pace of adoption is going to be faster? Which sectors, which industries, what kinds of companies are likely to move faster, be the early adopters at scale?
So I think, first of all, the opportunity is very real, and everyone believes in the opportunity. We recently did a global survey across all the businesses, and over 50% mentioned that the impact of AI, both on predictive and generative side, is going to be more than that of mobile or cloud, which has really driven the last 15 years of growth and innovation. And so it is very, very real. And they're already using it in certain use cases, scenarios. So, whether it's on the customer service side, whether sales and marketing, content generation, campaigns is another area in marketing. On sales side, sales co-pilot, sales buddies, responding to RFPs and generation of those standard content. So the generative aspect and where a large amount of content assimilation needs to be done, summarization, some insights. So all those pilots are already happening on the claim side. So I would say more growth focused. And then we see on the cost side, how do we reimagine back office, mid office using GenAI, right? It's essentially a people and process centric business on that side. So how do we make it a tech first business? How does IT adopt AI in its own running? That's an important theme, and TCS has launched, was pioneer in that category. We launched the AI Ops category with our flagship platform, Ignio. So it's a lot of action happening, but technology is going to be deflationary in that sense, right? So we're creating the funding for the growth and transformation side.
You talked about what TCS is doing on AI, and I was walking around and you showed me what Digitate is doing. You just talked about Ignio as well. Give me a sense of the depth and the breadth of what's happening with AI within TCS. What are the questions that you're being asked by clients at this point in time? How are you beefing up capabilities within the organization? I mean, how many employees are now being trained for an AI world, for instance?
So first of all, while the generative AI suddenly became a buzz last year with OpenAI, the predictive AI has been here for some time. And our Digitate business unit and Ignio's platform was really to use that power of predictive AI within our own IT services, right? So that journey started in 2010, 2015, we did a commercial launch. And we are already using in our own business and transforming our own business. And now we have over 300 customers running on that platform, seeing tremendous value, not in just in terms of automation of cost saving, but really in predictive capability, in resilience, in fixing things before they break.
And you can catch the full conversation today at 7:30 p.m. and 9:30 p.m. only on CNBC TV18. Okay, all right, with that, let's move on. There's been a substantial recovery from the lows in the market. It's a good time to get a technical check. Soni Patnaik from JM Financial Services is joining us now. Soni, good morning. Thank you so much for joining us. Well, there's been a massive recovery. Even Bank Nifty would be in the green in just a bit. It's down just 6 points. So recovery across the board. Is this something which would continue, stabilize at these levels, or we could see some more volatility?
Good morning, Sona. Thank you for having me on the show. I think the entire recovery that can be seen today is because of Bank Nifty, which was, even though after Friday's volatile move, it was looking comparatively stronger than Nifty. And I feel that, as per the data on option chain for Bank Nifty, it can head towards 51,700, 52,000 once more. Of course, any fresh upside for Bank Nifty can only be seen above the 52,000 mark, above which it can test 52,600 as well. For now, important level for Bank Nifty is 51,000, 51,200, which is holding very strongly. So if Bank Nifty is able to hold these levels it will also support Nifty. Nifty very much in a consolidation range, 23,400 to 23,600, 650. That range is still continuing on a closing basis. So not a lot to expect from Nifty until, either side of the range break can be seen. So I think it's more of Bank Nifty that can be seen, and a good rally from private banks is just starting. A good contribution from HDFC Bank and ICICI Bank can be seen.
Okay, so is there a trade on HDFC Bank or ICICI Bank, since they're the ones driving the gains? And after that, if you could just tell us, what would your stock recommendations be, Soni?
Definitely. Good morning, Rima. So ICICI Bank has actually given a good breakout. It's looking quite strong on charts. Either way, 1100 was continuing with a very strong support. But even now, one can see that from current levels, it has the potential to test 1200, 1220. So from current levels, one can buy, keeping a stop loss of 1140 and a target of 1200, 1220 can be seen for a positional play. Even HDFC Bank is looking quite strong from current levels. It can test 1700, 1720. And, today the low that it has made around 1650, 1645, that range is a good support. So one can continue to hold with HDFC Bank, 1640 as a stop loss, and 1720 can be the targets for HDFC Bank. Apart from these two, my other two picks would be from Astral, which has seen a fresh breakout today above 2300 level. It's an option chain breakout and looking quite strong. So Astral keeping a stop loss of 2260 and a target of 2400, 2420 can be seen. And the second pick comes in Jubilant Food, which is attempting a fresh breakout. At current levels, 550 is the level where it's loitering right now, but any move above 552, 553, you can see sharp short covering in Jubilant Foods up to 570. So one can buy at current levels, keeping a stop loss of 540 and target of 570 for Jubilant Food.
Okay, all right. Thank you so much, Soni, for joining us with all those picks. Time for a short break now. When we come back, we'll focus on some more buzzing stocks on the other side. So stay tuned for that.
The insurance regulator has proposed that policyholders be paid a higher amount where they surrender their policies before it matures.
The insurance regulator has in its board meeting approved the final regulations. Now what the regulator is considering is the point on special surrender value. New draft again bringing uncertainty on that entire topic of surrender value. The business could become very unviable for these life insurance companies. The regulator has said the surrender value will be kept at elevated levels.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBCTV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC Testing.
Welcome back. You're still tuned into Trading Hour. Let's talk about some broader market movers. TBO Tech gains after brokerage firm Goldman Sachs issues bullish calls on the stock. The stock is up by 7% now. Mangalam is here to give us more details on this one. Mangalam.
Well, you know, it's been a big mover ever since its listing. So the issue price was sub 1,000 rupees. The stock has gained almost 80% from there itself, and currently at the high point of trade, up 7%. Goldman Sachs has initiated coverage. They have a buy rating with a target of 1,970 rupees. They believe the B2B travel distribution platform that the company has many positive characteristics. One of them is that they expect the free cash flow to net profit ratio to stay above 100% for the foreseeable future. What they're factoring in going forward is a strong bout of revenue growth and operating leverage as well. So they expect 21% compounding of revenues between FY24 to FY30, and as a result of which the EBITDA will compound at around 30%. There will be margin expansion and the EPS would grow 33% as well. The only couple of risks that they factor in, one would be because this is an B2B travel solutions provider, any change in supplier terms would be something that may topple the apple cart, or any non-value accretive M&A that the company would do. Far-off risk is also slowdown in global travel, but given the sort of pace of growth in travel, that seems a little far-fetched. But currently, given the strong metrics of the company and prospects of growth going forward, Goldman Sachs is bullish, and the stock understandably up 7%.
Okay, 1,700 rupees on TBO Tech this morning. Thank you for joining in and explaining that. Let's talk about ICICI Bank. Motilal Oswal has raised the target price on ICICI Bank, and that's pushed the stock up. Abhishek joins in with the details. Abhishek.
Well, Motilal Oswal met the management of ICICI Bank, and they have come out with an update on the same. They have a buy recommendation, and a target price has been increased to 1,350 from 1,300 earlier. They say that loan growth to remain robust. However, net interest margin may remain range bound. Now, this is on account of the fact that term deposits are coming in at elevated cost, and the term deposits which are due for redemption this time around may get repriced on the higher side. So this could keep the net interest margin to remain in a range bound. Now, ICICI Bank's transformation under the management has been leading to sustainable growth over here. They estimate the gross NPA ratio and net NPA ratio to be at 2.17% and 0.28% by FY26, led by the fact that credit cost at that time will remain at about 0.6%. That is for FY26 again. So they expect ICICI Bank to deliver an operating profit CAGR and PAT CAGR of 16.7% and 13.7% respectively over the next two fiscals, which could lead to an ROA of 2.2% and ROE of 17.7% for ICICI Bank at the end of FY26. Back to you.
Okay, all right. That is about ICICI Bank. The target has been raised to 1,350 rupees a share. Moving on, cement stocks are in focus on the back of channel checks done by DAM Capital. Vivek is here with the details of that note. Vivek, what does the note indicate?
Well, what's actually happening as far as the entire cement space is concerned, and DAM Capital goes and reiterates the fact that cement pricing continues to remain under pressure for the second straight quarter in a row. In fact, the channel checks that DAM Capital have done across regions indicate that there has been a further 5 to 7% correction as far as per bag prices are concerned, and this is since mid of June 2024. Now, pan-India cement pricing, according to them, should decline by almost 3.5% on a sequential basis. That's almost a 12 rupees per bag impact that they would see in the first quarter of FY25, the results of which will come now. So now what's actually happened is that they're saying sequential operating deleverage combined with pricing decline would materially drag profitability on a QOQ basis or on a sequential basis for most of the cement companies. They're saying that in the backdrop of current valuations, they expect that the consolidation of cement stocks should continue in the near term. They believe that Shree Cement is poised to outperform, but on the other hand, they believe South-based companies like Ramco Cement, India Cements and Sagar Cement should underperform. On the other hand, one pocket of stocks that they like within the cement pack is Andhra Pradesh stocks. They believe Amravati development could drive almost a 14% demand CAGR in AP, from FY24 to FY27, they believe 4 key beneficiaries could be Sagar Cement, Deccan Cements, NCL Industries and KCP Limited. All of these stocks are on their radar. They believe that any Amravati-based demand triggers could benefit these players.
Okay, all right. So that's what's happening in the cement industry. Thank you so much for getting us up to speed with that note, Vivek. I'm watching out for IGL. Now remember, the company has gone ahead, raised prices of CNG by 1 rupees per kilogram. This is with effect from 22nd June. Now remember, this comes in after the company had cut prices by 2.5 rupees per kg just before the elections. There was chatter, and we spoke to PNGRB as well, where they indicated that they want limited price hikes by the industry, and they want their profit margins to be in a certain stage so that it does not hurt the consumers as well. Now, Morgan Stanley says that they have an overweight rating on the stock with a target price of 575 amid global gas outages and lower gas allocation in the domestic markets. IGL hiked CNG prices, and this is something that the city gas distribution companies had indicated, that APM gas allocation has been lower than the previous years. CNG remains attractive versus alternative fuels according to Morgan Stanley, and hence the hike should support their margins, and it would be margin accretive as well. The other problem or the headwind for this industry was that the EV policy in Delhi could have impacted volumes, but they say that investor confidence on growth should return as the EV policy overhang unwinds, because there are still some hurdles there, and that's why they continue to remain positive on IGL.
Okay, that's the call coming in on IGL and MGL. Get into a break. On the other side, we'll discuss market fundamentals. Nilesh Shah of Quantum Advisors joins in next.
Now streaming live 24/7 on YouTube.
Service by way of hostel accommodation is presently not exempt, which are being provided for students if they are outside of educational institutions. Am I right? If they are within an educational institution, they are already exempt. Now, hostels which are for students but outside of an educational institutions are also getting exempt. The measure of relief for students and working professionals, Council has recommended to exempt accommodation services having a value of supply up to 20,000 per person per month. The condition, of course, is those provided these services are supplied for a minimum continuous period of 90 days.
It is a tough time for the Education Ministry as the future of lakhs of students that appeared for NEET and UGC NET exam is in doubt. While the government was caught in the mystery surrounding the NEET examination, the cancellation of NET exam added more fuel to fire. Will the Union Education Minister, Dharmendra Pradhan, has taken full responsibility for the cancellation of the UGC NET exam, and also informed that the decision to cancel the exam was taken only after the Indian Cyber Crime Coordination Center under the MHA informed Education Ministry about the question leak. The Indian Cyber Crime Coordination Center informed Education Ministry that many questions of the NET exam were available on the dark net, and the same were also available on Telegram. He said that the government has a zero-tolerance policy for paper leaks and government cares about the future of students, hence this swift decision was taken. Education Minister also accepted that the question paper leak of UGC NET is an institutional failure of the NTA. However, despite giving several assurances about securing future of the students, there were several nationwide protests organized by the Congress. The student wing of Congress, NACOI, organized protests in several cities outside BJP state offices, demanding a probe under the supervision of a sitting Supreme Court judge. On NEET, the Education Minister said that
Welcome back. Let's talk markets, where we are headed. Nilesh Shetty from Quantum Advisors is now with us to discuss the market fundamentals. Nilesh, there is no stopping this market, right? Even when we consolidate, we're consolidating with the positive buys. And global markets itself have been doing pretty well. The S&P 500 has had more than 30 plus new highs so far this year. And there hasn't been a big meaningful correction so far. How would you approach the market? What's your view now over the next 3 to 6 months?
With caution, I think, as you rightly said, there is no stopping this market, and rightly so. The earnings cycle, which was depressed from 2014 to 20, has seen a series of upgrades. And so it's not just a pure price earnings expansion, it is a earnings-driven rally as well. And it's not unique to India. Around the world, most markets are going up. So there is surplus liquidity which is driving markets. India has done well because India sort of hit a GDP bottom somewhere around that COVID period, and since then the GDP sort of been expanding quite rapidly. So there are reasons driving this rally, but the valuations are at a level where you need to be very careful now. At least our advice to investors has been, if you have 100 to invest, you should be investing a third or 50% of that, and not more than that. And then wait for sort of valuations to get a bit more attractive. We don't know what will drive the correction, but we know, and barring pockets of certain sectors in the market, getting companies at attractive valuations is not easy at current market levels.
So Nilesh, is there any pocket in the market where you think valuations are reasonable or at comfortable levels, and at the same time there could be growth in that space so that investors can look at that particular space?
Obvious disconnect between valuations and company fundamentals is in the private sector banks, for sure. They've completely missed the post-COVID rally, and they're slightly higher than where they were before COVID. A couple of them went through their individual issues, where one large private bank had to absorb another one, and one bank had a succession issue. But when we look at the fundamentals and the earnings cycle for the next few years, they are sort of in the best position that they've been in the last decade. And we think they will probably lead the earnings cycle over the next 3-4 years in terms of sectoral contribution to sort of market earnings. So that is the most glaring opportunity. We are getting a bit more optimistic about consumer, but they need to correct more, either through time or price correction. But they've been big laggards over the last 3 years, and rightly so. They were priced at such high valuations relative to underlying earnings growth that is seen correction. And if this continues, we may see some opportunities emerging there. But barring these two pockets, and perhaps a bit more in IT, where they've sort of last 18 months they've been subdued, most of the other sectors are fairly expensive right now.
Power has also been a big area which has generated wealth for investors. Where do you stand on power?
We'll be very cautious there. I think a lot of the businesses, especially the public sector ones, are regulated businesses, and the returns are not meaningfully different than what they were earning 5 years ago. I just think the perception has changed and not necessarily underlying fundamentals for these sectors. I think at these current valuations, they don't make sense if you're a long-term investor, given the earnings growth and the ROE profile of these businesses. So we don't have any allocation there. We have some allocation at the gas utility side, where we think valuations are a bit more reasonable, but thermal power, hydropower, renewable power is just too expensive for us.
You know, I was going to come to you next on the energy space, in the gas and oil sector, because we do keep seeing a lot of updates. There's a possibility that gas could be under GST. Of course, these are again just conversations. In the gas utility space, what is it that you like, and do you think this space will continue to see growth despite the fact that there's a lot of policy changes that continue here?
Yeah, I mean, we own gas transmission companies. That is where we've had allocation, because historically they were the cheapest in the basket to play this theme. They have seen some rally. Again, the volume growth is a given. People sort of barring plus or minus 1-2%. The volume growth is never a surprise. It is the view that the regulator takes on the tariff that is always sort of has a sharp reaction to these prices. And there's been varied sort of interpretations of the tariff number. So one company gets a very different tariff and the other company gets much lower. As if the regulatory sort of tariff determination gets a lot more transparent and easier to predict, I think these companies might get a bit more higher valuation than what they're trading at currently. But I think just in terms of where valuations are in that basket, that is a lot more comfortable space, gas transmission companies to play this theme rather than most other oil and gas companies.
Any budget-related opportunities that you're looking out, watching closely?
We're not that short-term investors. Our horizon tends to be 5 year plus. But my sense is, given how the election numbers have played out, I think the expectation is that they would do something to address rural income disparity that has emerged. And you see that from FMCG numbers as well, where demand at the bottom of the pyramid has not been growing that well. It's been a K-shaped recovery. So I assume there'll be some policies addressing that. And for short-term traders, perhaps they might want to look at that space where companies looking at the bottom of the pyramid in terms of demand, perhaps they might do a bit better.
Okay, so consumer staples, you're saying someone can look at it from a short-term tactical pre-budget kind of a play. But what about over the longer term? How comfortable are you with the growth versus valuation dynamics of consumer staple companies?
We were not very comfortable 3 years ago. They have seen a meaningful correction last 3 years in terms of time correction and price correction, but still not attractive enough for a value portfolio like ours to buy them right now. We continue to monitor them closely. I'm assuming at some point investor fatigue will set in, where because they've not generated decent returns, you will see investors dumping these stocks where valuations will become very attractive for players like us to enter. But right now, again, they're somewhere in between, not extremely expensive, but not great value as well.
Nilesh, you've been seeking value for a while. You've been cautious in the market. How has the fund performed then? Has it underperformed? Because momentum still seems to be gaining in this market.
So last 3 years has been much better for us. So earlier, you either had to be in a very concentrated portfolio, which did really well, or companies like consumer staples or high-end retail, which did really well. But last few years, because cyclicals have done a lot better, including some of the auto names that we had, our performance has been ahead of the index. It's just that currently where we stand, we are trimming a lot of those positions and cash levels are inching higher for us because they have become expensive. So performance touchwood has been a lot better over the last years than that 2017 to 20 cycle, where GDP growth was slowing down and companies that were growing slightly faster got a big re-rating in valuations, despite them trading at a lot premium than their historical valuations.
And what's the cash position right now?
So today we're closer to 12%. And if we get opportunities in some of these select banks where you're trying to build positions, that may come down. But generally, the market were to continue to the way it is, you may see that inching higher.
And would you be okay with increasing your cash level from the current 12%?
Yeah, our highest has been slightly above 30%. So we can move higher if we want.
Okay, all right. So, if you do have that cash at 12%, we spoke about a whole host of sectors. I specifically wanted to ask you about chemicals because that has been the darling of the market for a long time, but not for the last 1 year. Now, there's an indication that maybe recovery could come back. The second half of FY25 is what managements are looking at. Do you think that the trade can be made in these names? First, on the valuations, of course, they still do trade the higher at the 35 to 40 times FY26 earnings. But do you think going forward, growth will support those valuations?
Yeah, I mean, it's a sector we've not been able to figure out that well. It's a sector, I mean, the entire rally we did not participate in, primarily because our sense of what is happening in China, which seems to be a primary driver of company numbers in India and just the earnings number for a lot of these companies is not that great. We don't have, at least our sense of whether companies in China are shutting down, opening up, exporting, not exporting is not that great. So we've been very cautious in that space and we've essentially missed the entire rally. We continue to track them, but like you said, valuations are not attractive enough for a value investor like us to jump into these names saying this is where we think valuations are attractive right now. They still trade at, despite the correction in earnings, they still trade at meaningfully above where we are comfortable at.
You said autos was one of the sectoral holdings which helped you do well in the last 3 years. Do you still hold on to auto? Because, stocks have done well. PE re-rating has also taken place.
We continue to hold on, but we've trimmed a lot. We probably must have trimmed 30 to 40% of our holdings right now. And if they continue to rally, we will continue to trim.
Okay. All right, Nilesh, thank you so much for joining us today. It was a pleasure speaking with you, talking about the markets and a whole host of sectors as well. So that's the word coming in from Quantum Mutual Fund. Time for a short break now. When we come back, we'll get to more on the markets on the other side. Stay tuned for that.
Is investigating the matter and it has got many leads. Bihar Police is expected to submit a final report to the central government. Minister also made it clear that whoever is a culprit, he or she will not be spared even if they belong to the National Testing Agency or the NTA. CBI also registered an FIR in connection with the UGC NET exam on Thursday. Minister Pradhan said that he does not want to do politics around this matter and requested the opposition to not do politics around NEET and the NET exam. He also informed that the committee will soon be formed that will give suggestions around the betterment of NTA. The ministry will soon inform about the re-examination dates of the NET exam.
The valuation is just the score, is the way we call it. So we are all about playing the game. And our game is accelerated computing and building a platform. So for us, generative AI is the killer application among other applications for accelerated computing. And so, you know, we've been doing deep learning since 2012. Jensen, presented to OpenAI the first DGX in 2016. So that's a very, very long and deep involvement with all of the ecosystem associated with generative AI.
So no overnight success, which is what people sort of suddenly, like where did Nvidia come from? To the layperson, I mean, it's just a phenomenal story that's taken shape in the public perception over the last few years. But there's a lot of work that's gone in over the past 2 decades in building it out to be what it is today.
Yeah, I mean, we've been working on this for many years. We always work with all of the developers and all the research laboratories and universities, all of the startups, small startups as well as mid-size and large startups, and all of the, global research centers, global capability centers, and major ISVs. It takes a long time to build a market.
It does take a long time to build a market. Umesh, let's talk about what is faster, leaner, better now at Uniphore, since we're talking about what generative AI can potentially do. I mean, how has life changed for you at Uniphore?
Well, first of all, great to have you back in Silicon Valley, Shireen. Much like you were talking to Shankar about these things are not overnight success. I founded the company, hard to believe, 16 years ago. We've been at this for 16 years, and sometimes I meet customers who think AI was born after the GPD moment.
Right.
But some of us have been at this for a decade and a half and more. But
Welcome back. You're still tuned into Trading Hour. Well, markets have come off from the highs of the day. The Nifty is up 30 points now. Mid-caps too are up 126 points. But the Bank Nifty, it has turned into the red again. Briefly, it went above that green mark. But for now, it is lower by 30 points. But again, there has been an attempted recovery from those lower levels as well. From the broader markets, we have some stocks which are at the day's high, something like a Bank of Baroda. There is Exide as well. It continues its one-way move. And remember, this has been one stock which has seen a stellar run along with its peer Maharaja batteries as well. We have Tata Motors as well, which has surged to the day's high. There's IDFC First Bank. So a lot of moving parts in the broader markets as well, which are doing well right now. The advance decline ratio comfortably in the favor of advances as we speak. But let's move on and get some market opinion now. A pause to the rally in market can be expected after such a rise, says Sanjay Parekh of Soham Asset Managers. In an earlier conversation, Soham Asset Managers CIO gave us a peek into some key sectors that he likes.
It will be, stock specific that we need to go. And also we have to keep in mind that, there are few events like monsoons initially is, below normal on an average. The Vahan data on auto also has not been great. And of course, the Telangana farm loan waiver, while normally the states have to bear it, but it certainly doesn't augur well from an overall banking system perspective. So certainly we have to keep all this in mind because, pre-elections, there were impact on demand in the first quarter in certain segments as we hear. Even in the first or 2 months in cement, autos, we are already visible. So, we'll have to keep these expectations right. They did say all of them are talking about gradual increase in credit cost. It's just that, whether the credit cost remains in a band, because the ROAs after even the credit cost, if it's in the band, are still very good. We were underweight almost 2 years, significant underweight at just 5% weight. We recently last to a little more than 1.5 months, we increased our weight a bit, but our underweight is still there. So here now, they will have a tough year this year.
Okay, well, with that, it's a wrap on Trading Hour. From the entire team, thank you for watching. Stay tuned. Halftime Report is up next.
The insurance regulator has proposed that policyholders be paid a higher amount where they surrender their policies before it matures.
The insurance regulator has in its board meeting approved the final regulations. Now what the regulator is considering is the point on special surrender value. New draft again bringing uncertainty on that entire topic of surrender value. The business could become very unviable for these life insurance companies. The regulator has said the surrender value will be kept at elevated levels.
In the last couple of years, which has been truly profound. We today serve some of the biggest companies, not just in North America, but around the world. These are large banks, large telecom companies, large retail companies who've been using AI, but now with GenAI, what's profound is AI is now a boardroom topic. It's being discussed in every board meeting in a publicly traded company.
Yeah.
Wall Street is measuring companies on their AI strategy, and the stock prices are being shifted up or down, depending on what companies announce. And for that reason, CEOs and CIOs are now singularly responsible. A lot of the customers that we've been dealing with, prior to GPT, AI was being bought as part of a software as a service application. Something in marketing, something in contact center, something for sales. Now AI is an infrastructure that no company can ignore not having within itself. And for the last couple of years, we've seen tremendous traction. Matter of fact, we grew our top line a little over 60% last year, which was an acceleration from the previous year, and we're seeing the same trend continue now. So I'm seeing an insatiable desire at the C-suite around the world about how do we become AI natives? How do we keep our sovereignty when it comes to AI? How do we not share our data with somebody else? And what kind of internal tools and technologies do we need to make this all happen?
Speaking of startups and high tech, the Wall Street Journal has a front page today on comparing what you did with Cisco and what's happening at Nvidia today.
Yes.
And Cisco was in 2000 the most valued company in the world on the back of the big transition that we saw then with the internet. And that's what we're seeing happen with Nvidia becoming the most valued company. As people draw these comparisons, what's going through your mind?
Well, first of all, it shows you that technology moved from something that the techies did to impacting every one of our lives. So with the internet, changing the way you work, live, learn, and play, when I said that in '93, most people said, no, it's techies talking. It clearly did. As you watch, there's new generations of leaders about every 10 or 20 years. And I think it's very healthy. So it's Cisco for the internet, then about 4 or 5 players for the cloud, and now Nvidia is clearly leading in terms of AI. And they're kind of like the indication of the infrastructure of AI. If you want to know how AI is doing, look at how fast Nvidia is growing. And it is growing great. What is it, 540% in the last 2 years. Today, if you're not into AI, and if you haven't got a good AI strategy, well, implementation, investors won't invest in your company, even if you're a manufacturing company or a semiconductor company, etc. The pace of change, however, is different. It's about 10 times faster and can be 10 times bigger than what we saw just a few decades ago.
So, you've been a big champion and a big believer.
Stocks post a strong recovery after a weak start in early trade. PSUs, FMCG and auto stocks lead gains. Private banks, which did well last week, lagged today.
The GST Council, under the leadership of the Finance Minister Nirmala Sitharaman, announced rate changes for some items, exemptions for others. It also announced an amnesty scheme for the past period, anti-profiting and sunset, and the ability to revise the return, among other changes.
SEBI conducts search and seizure operations across 2 locations in Mumbai and Hyderabad. In Mumbai, search was conducted at Quant EMC's headquarters. The fund house tells investors that it will provide all necessary support and continue to furnish data to the market regulator.
Goldman Sachs initiates coverage on recently listed TBO Tech. Stock rallies 7%. Ujjivan Small Finance Bank slumps 5% after the management cuts its growth guidance and increased credit cost estimates in analyst meet. Delta Corp sells off 5% as hopes of GST relief in the council meet were dashed. Hello and welcome. You're watching us here on Halftime Report. There has been a considerable recovery from the lows for the frontline indices. The Nifty low today was close to 23,350. From thereabout itself, the Nifty is recovered almost 180 points, currently at the high point of trade for the Nifty. We have the mid-cap index doing a lot better as well, and the Nifty Bank at one point was down almost 600 points, and from there on it's just about breaking into the green. So it's a big recovery that we've seen. I'm Manglam Balu. With me as always, Ekta Batra. Hi, Ekta.
Hi, Manglam. Well, I'm just going to add on to that because like you mentioned, the Nifty low point was around 23,350. But we had the mid-cap index low point also, which was around 54,857. The BSE small cap low point also, which was around 51,630. So there's been a remarkable recovery which has taken place for the broader markets as well, especially for the small cap index, which is up around 1.2% from the day's low. But nonetheless, as of now, we have the Bank Nifty also, which is probably just going to push itself into the green soon enough. Advanced decline ratio, which is on the positive side. So that's an important indicator. 2,200 stocks advancing to around 1,754 stocks declining. So as you can see, there was a crisscross which took place and it's only widened in terms of a gap between the green and the red line. So let's see whether that manages to continue as the day progresses. So as of now, stable for the markets, just about consolidating, recovering from the lows. But let's talk about one particular company. Mass Financial Services is on our radar. The company's raised around 500 crores via QIP. Post the QIP, the company's net worth will increase by around 28.3%, while the book value will increase by around 16% post QIP. To discuss more on the fundraising and their business outlook, we have Kamlesh Gandhi, who's the CMD of the company, now joining in. Mr. Gandhi, welcome to the show. If you could just, give us a sense in terms of this QIP funds which you've raised around 500 odd crores. What was the reason for that? What will your capital adequacy ratio go to? And what is the reason for the fundraising as a whole?
So good afternoon. As you know that we recently crossed a very important milestone in our AUM of 10,000 crores. And this is in preparation for our next phase of growth that we contemplate to reach another 10,000 crores. So that is to 20,000 crores within the next 3 to 4 years. And this capital will be an enabler for that journey of growth. Having said that, we have raised this capital much in advance. We were absolutely well capitalized before the capital raise, and we would further consolidate our capital base by this capital raise. So this is a move aimed well in advance for our next phase of growth.
Which is what actually is, surprising and perhaps explains the question that Ekta asked as well. Mr. Gandhi, thank you so much for joining in. You said that you've raised this capital much in advance. You've got a target of growth between 20 to 25% of AUM. If you continue to do that in the next 3 to 4 years, you would have doubled your AUM anyway. And the rate at which you are consuming is close to around 125 basis points of capital per annum. You have about 24% CRAR right now. So why an advance raise in capital? What explains that?
See, in lending business, we just don't go by the capital adequacy ratios. We also go by the leverage ratio. So we would like to maintain the leverage anywhere between 4 to 4.5 times as a prudent management on liability side. And this will be the step in that direction. Secondly, we contemplate to maintain around 17% on our total AUM. When we talk about 24% CRAR, it takes into account around 22% of the portfolio which we de-risk. So if you see from the overall perspective, that is on the AUM basis, on 10,000 crores, we are close to 1,750 crores. That is 17.5%. And we contemplate to maintain anywhere between 15 to 17% on AUM as a prudent way of keeping the capital buffer.
Okay. So when you're saying this next leg of growth, give us a sense in terms of what the numbers would be and the timeline as well. What is the targeted AUM and what is the timeline of this particular AUM growth? Within that period of time, what is the anticipated net interest margins as well as maybe cost of funds?
So if you see, we are a 28 years old company, and if you see our track record over all these years, we have maintained a very consistent and a steady growth trajectory. So we would be maintaining our guidance on 20 to 25% growth in AUM. And over a period of time, we have maintained a range bound NIMs of anywhere between 6.75 to 7.25%. I think that should continue as far as the net interest margin is concerned.
But this 20 to 25% growth in AUM, what is the timeline envisaged? Would it be in the next 2 to 3 years? Is it a consistent 20 to 25% growth that you expect every year for the next 5 years? Give us what you're expecting or working with internally.
We are internally planning to maintain 20 to 25% growth for at least next 3 to 5 years. And that is the opportunity we see in the segments we are working. And with very strong fundamentals, I think we see no reason why we should not be able to achieve that.
All right. Could you give us a sense of, how much will you use in terms of capital over the next few years? What does your CRAR stand at after this fundraise? And do you foresee any sort of stress in the MFI business? Because everyone's a little worried about that, especially given the events of the weekend that happened.
So as I told you on 20,000 crores, this is in preparation well in advance. So when we reach around 20,000 crores, our capital adequacy will be anywhere between 18 to 20% and leverage at between 4 to 4.5 times. And in terms of our micro enterprise loans, if you see, we don't do MFI business directly, but in our micro enterprise loans, we have been doing this business since last more than 2 decades. And we have been very circumspect the way we dispense credit. And look, taking all these things into account, we see no stress as far as our micro enterprise loans are concerned, because we have been growing at a very steady pace, extending credit where it is due. And that is what we have proved across cycles. So as of now, we don't see any stress in our micro enterprise loans.
Okay.
How's the environment right now? Did it take you long to close this QIP? I mean, were you looking for funds for a longer time?
See, over these years, we have maintained that we have not only chosen and picked our borrowers and clients, but we chosen and picked our investors also. So we were in pursuit of getting the right set of investors who really understands the business model, who are there to stay with the company for a longer time. And in that pursuit, we took our own time identifying the right set of investors. And when we got the opportunity, we went for the launch.
Okay. Just a two-part question. Now that this fundraising is behind you, for how long would you not require to raise funds based on your growth and capital adequacy ratio, which you've guided for, at least maybe possibly for the next 3 years?
Yeah, we don't see, as of now, we don't see capital requirement between 3 to 5 years. And if you see our track record, this is our first equity raise post 2017. We went to IPO in 2017, where we were around 3,300 crores. Now at 10,000 crores, well in advance, we are raising the capital. And we see that within the next 3 to 5, this capital should be sufficient for us for next 3 to 5 years, as I talk to you now.
Okay, so this incremental AUM growth, would the mix be the same?
See, as we grow, we intend to become a more diversified asset-based company. Currently, around 80% of our portfolio comes from MSME. And as you know, we already also have a housing finance company, which is also growing at a good pace of around 30 to 35%, while maintaining a very high quality of assets. So going forward, we'd like our housing finance and SME business, along with the wheels business, to contribute more meaningfully than what they are doing right now. So our MSME business, which is lopsided at around 80% currently, will be at around anywhere between 60 to 65%, and the rest will be contributed by other products.
And this won't tempt you into, advancing growth? Because 20 to 25% is what you've been doing earlier as well. That is what you've guided for, for the foreseeable future as well. But now that you have the cash on you with the fundraise, you won't look at, increasing your offtake, increasing AUM at a faster pace, at least for the near future, now that you have money. Because if you have money, you tend to feel a little more rich, right?
So if I share with you, as far as we are concerned, we were never short of capital. We could have raised capital at any time, given our pedigree and given our track record. And if I share my 28 years of experience, ironically, this is not a business of capital and debt. It is a business of operations and how you manage your quality and hence the profitability. So what we have drawn from our experience that even growing at 20 to 25%, you double your AUM every 3 to 4 years. And that in a lending business is a task to be managed. And any growth above that can be a cause for deterioration in a quality and hence the profitability. So we have very firmly believe that we would like to grow at the steady pace of around 20 to 25% and double our AUM every 3 to 4 years while maintaining very benign quality and profitability.
Just pressing you on the CRAR bit once again, you said the capital adequacy ratio would be around 18 to 20% of AUM. CRAR in specific, if you could give us that number?
It will be very difficult to give that number because that depends upon the de-risking model and the opportunity we get from time to time. So in de-risking is that we de-risk our portfolio by bilateral assignment to various lenders. So depending upon that de-risking percentage of the total AUM, the CRAR will be maintained. But nonetheless, it was suffice to tell that we'll be maintaining our capital adequacy anywhere around 18 to 20%, including this de-risking.
Okay, fair enough, Mr. Gandhi. I'm going to let you go on that note. Thanks very much for joining in and speaking with us. So that is Mass Financial. They're maintaining their guidance of around 20 to 25% growth in terms of the assets under management, as well as the NIM range should probably be within the current band. The stock up around 2.6% in focus on account of QIP fundraising. We need to take a short break. Up next, a lot more stocks lined up. Stay tuned.
But there's a long distance still to go to fully realize the potential of this partnership and this relationship. Where do you believe it's being constrained today?
As the largest democracy, watching your elections just occurred, and congratulations to Prime Minister Modi. It was a smooth election. There was no issues in the market, and I think that's a model for the rest of the world's democracy to follow. And now you're seeing the country lead in innovation. My challenge is don't be satisfied with just what we're doing. We've got to dream bigger in terms of the overall approach. So this is what I really think about in terms of where we are today. I think we've got to look at where we go. I do think it will be the century for India. I think it will be also the decade for India.
The latest challenge that you're up against is the US government looking at whether, again, there is a violation of policy and whether there are sort of fees that are being collected without consent or, explicit consent and so on and so forth. I mean, how do you deal with something like that?
Well, you first go back to the principles and the facts, and the reality is that it was the government's case is misguided, and so we will fight it and we'll refute it in court. I think if you take a step back and you think about what Adobe has pioneered, the subscription economy and the digital economy is everywhere. I think when I try and read your content, it's probably going to be available through a paywall as a subscription.
Yeah.
We have open and flexible policies where some people can pay for it up front and get a discount, and others pay for it on a month-to-month. So having flexibility makes sense. But, it's something that we will address, but we certainly believe that we have been flexible. We offer customer choice, and we're completely transparent about this.
Right, we have HUL, which has moved to the high point of trade. A couple of these consumer names are doing well, maybe because advancement of monsoon has done well post-June. June was a bit deficient, and now the street is hoping for some makeup coming by in July itself, and the months going forward as well. So FMCG stocks seeing some recovery from the lows. Sun Pharma, however, is one of the bigger gainers on the index today after it's released the outcome of the first phase of its obesity drug trial. Ekta joins in with the details on this one. Ekta.
Well, yes, Sun Pharma is in focus because it's announced the outcome of its phase 1 obesity trial for GL0034, which is utriglutide. That's the name of the drug. It is a GLP-1 drug inhibitor drug. So that means that it belongs to the same class of drugs such as Ozempic as well as Wegovy, which is semaglutide by Novo Nordisk, or Mounjaro as well as Zepbound from Eli Lilly. Now, these GLP-1 drugs are used to treat type 2 diabetes as well as obesity now. In 2023, these drugs made around $50 billion. They are estimated to grow to around $100 billion by 2029. Now, for Sun Pharma, the drug is still in very early stages, Mangalam. You know, it's only phase 1 that they've completed at this point in time. But it gives you a sense that it adds to the prospects of Sun's specialty business, plus gives you a sense in terms of what their plans are when it comes to GLP-1 drugs, because GLP-1 drugs is going to be the next big wave for a lot of these generic companies as well as specialty companies. And hence, you know, right now there's a shortage of semaglutide as well as Eli Lilly's drugs, and gives you a sense in terms of the kind of demand for these drugs globally, and companies such as Sun Pharma, if they do get it right, can probably cash in on it.
All right. So if they do get it right, like Ekta said, it's a step in the right direction, but the direction itself is fair, distance from here itself, the destination that is. Ekta, Cipla, that's the one that you're watching out for as well?
Well, yes, Cipla is in focus because the US FDA inspected the company's Goa facility and they have received 6 observations for the Goa facility. It was inspected from the 10th to the 21st of June. Now, why is it in focus? Is because Goa is already under warning letter since Feb of 2020. And it now pushes the can down the road when it comes to possible remediation, simply because the street is assuming 6 observations after getting a warning letter means that, you know, the likelihood of a warning letter being lifted is going to be lower than what was anticipated. Now, we don't know what the observations are, what the reply would be, what the remediation process would be, but this is the assumption right now, which is based on what we are seeing when it comes to the stock. Now, in terms of if in case there is a delay, the cancer drug Abraxane is likely to get pushed out into late FY26. The street was anticipating an earlier launch, and the street was estimating around $25 to $30 million to be made from that particular drug. If in case it gets pushed further and there's a launch which is beyond, in the late part of FY26, that means that there could be more competition in the drug, and what they make from the drug would also be lesser, and hence the street is probably factoring that in at this point.
All right, so that is about Cipla, the pharmaceutical space, but let's move on to a big CNBC TV18 exclusive, where sources suggest that Bharti Airtel has mega plans in the works to capitalize on its telecom tower vertical, Indus Towers, that is. Nisha Poddar joins in with some exclusive details. Nisha.
Yes, thanks for that. And sources with direct knowledge, and I've spoken to several of my sources over the weekend on how the health of the telecom sector is improving with expectation of tariff hikes soon, and therefore to capitalize on its telecom tower business of Bharti Group, which is going to be a big beneficiary of the improving health of the telecom business. Sources with direct knowledge have shared with CNBC TV18 that there is a two-pronged strategy that Bharti Airtel is really planning to work upon. So what I do gather from sources with direct knowledge is that, first of all, Bharti Airtel is in talks with Vodafone PLC to buy out its remaining 3% stake in Indus Tower, and this would be a big one because of the 51% threshold being crossed, and therefore finally Bharti Airtel will be able to consolidate Indus Tower into its balance sheet. So that's one. And also, on the other hand, while negotiating with Vodafone PLC, I hear from sources with direct knowledge that they are also looking at coming to some solution on the dues that are owed to Indus Tower from Vodafone Idea, which is to the tune of 5,400 odd crore rupees. So a large part of the receivables from the stake sale should be ideally used for paying back the dues of Indus Tower, is also what I gather from sources with direct knowledge. This is one part of the strategy. Tying in with this is the second part of the strategy, which is also in the works at Bharti Airtel as per sources with direct knowledge. There's a data center business, Nextra, of Bharti Airtel, which is housed in Bharti Airtel, and a large part of dependence of the business also comes in from Bharti Airtel. What sources do indicate is that Bharti Airtel is looking at merging the data center business with Indus Tower. This is for 3 reasons. 1, value unlocking. 2, giving exit exit to Carlyle, which owns 24% stake in Nextra. And the third will be to make the telecom business in a highly competitive market with auctions coming in asset light. And on the other hand, tower business is a cash generating business with an additional infrastructure vertical. They will be able to fuel the growth or an expansion of Nextra. So the two-pronged strategy would include buying up more stake, consolidating its position in the tower business, which is going to be a direct beneficiary of improving health of the telecom business, and also offloading in Nextra by way of merger into the tower telecom business. Also, one more thing I want to point out is the value unlocking bit of Nextra. Sources with direct knowledge also do suggest that Nextra's valuation could see an upside because of the arm's length transaction and dependence of business on Airtel if it is in a separate entity altogether than Airtel, is what I gather. I reached out to all the three companies which are named in this particular story. There is no comment coming in from Bharti Group or Carlyle as well as Vodafone PLC, but it is a mega plan to capitalize on the growth potential of Indus Tower that Bharti Airtel is looking at, while we are on the verge of a big expectation of telecom tariff hikes.
Okay, all right, Isha, important story coming in there. Thanks very much for that. Well, on that note, we need to take a short break, but a lot more stocks and a lot more market opinion on the other side.
The insurance regulator has proposed that policyholders be paid a higher amount where they surrender their policies before it matures.
The insurance regulator has in its board meeting approved the final regulations. Now what the regulator is considering is the point on special surrender value. New draft again bringing uncertainty on that entire topic of surrender value. The business could become very unviable for these life insurance companies. The regulator has said the surrender value will be kept at elevated levels.
When you subscribe to the plan, it says annual bill monthly. And it's an annual plan. And so, but at the end of the day, for us, what really motivates us is the fact that we're impacting and innovating. And I think if people didn't feel like we were innovating, they wouldn't be subscribing to our services. And that's what we have to keep focusing on. Well, first, I'm really proud of what our team has done. When you think about the content authenticity initiative, something that we pioneered, over 3,000 companies have now signed up with it. While people understand that AI has all this power, I think it's fair to say there's some heightened sensitivity around what does this mean to me? And so, you know, that I wouldn't call it trust deficit as much as questions about what that is. And a company like Adobe has a leadership role that we need to play, not just for ourselves with our customers, but for the industry at large about our terms of use. I think there were some questions, and legally everybody who looked at that understood that, you know, the content belongs to them. We're not training our models based on that. But I think perhaps in English we could have done a simpler job of clarifying it. So, which we have. And so, you know, we've rolled it out. We are creator friendly. I think the product innovation that we're delivering, Shireen, it always, you know, warms your heart when you look at the amount of innovation that we're delivering. And I think we've talked about this in the past. AI is going to be this incredibly enabling technology that allows us to, you know, target a broader set of customers. And so I guess it's the era of AI. Now we can create campaigns, we can create content, we can address the content supply chain. So I'm completely convinced that AI, while I acknowledge it'll be disruptive, at the end of the day, it's going to be a massive enabler and a tailwind.
We have got majority of lender approval. We are in the process. NCLT take time and go through a whole process, which process will take place, and then it will be merged.
Okay. So by the end of this fiscal year, we could have the units separated, 6 listed entities of the Vedanta Group?
I think so, because certain things are in my hand. Certain things are not in my hand.
Okay.
It is in the hand of NCLT. NCLT normally take 3-4 months time, but sometimes they can take 1 or 2 months more also.
Welcome back. Well, there are specific stocks which are under pressure. So IndusInd is your top loser on the Nifty today. So down around 2.2% for that particular stock. It's lost around 6% this year. Adani Ports is also giving it company. That stock is down around 2%. Cipla, like we've been covering, that stock is under pressure post the Goa facility inspection. And a couple of others such as Coal India, Infosys from the frontline space are seeing losses of around 0.5% to around 1% at this point. But let's talk about CarTrade Tech. It's trading sharply lower after 13% equity was exchanged in big block deals. Vivek is here with the details on that. Vivek.
Well, that's right. Like we had alluded to earlier today, that there was likely a large block trade, that is bound to happen as far as CarTrade Tech was concerned. We had told you that, the base size of this particular block deal was 10% with an upsize option that could take the total number of equity that could be traded to 13%. So, as per the block deal window that we could access, 13% of the total equity has changed hands, indicating that the upsized option has gone ahead and been exercised by the sellers. So, who are the sellers in today's trading session? As per the term sheet we accessed yesterday, Warburg Pincus affiliate, which is under the name of Heidel Investment, has sold close to 8.7% stake in today's block deal. Temasek Holding affiliate MacRitchie Investments has sold 4.3% in today's trading session. So the total size of this particular block deal is slightly in excess of 500 crores. Significant block deal, 13% equity of the entire company changing hands. Now, what could remain as an overhang? Remember, the lock-in period for further sale of shares is just around 75 days. That's 2.5 months. And along with that, if you look at the holding of Warburg Pincus, they held 17.4% at the end of the March quarter, and Temasek held 16.3% at the end of the March quarter. So an overhang remains, given the fact that they continue to hold a significant chunk even after today's block deal or today's stake sale that they have done.
All right, take that point. That explains why the stock is lower despite the supply being absorbed. Just keep an eye on a couple of these fertilizer stocks. We've been talking about how they've been saying about profit taking, but they've extended their cuts. Fact is now down 9%. RCF2 is at the low point of trade, and we are seeing selling across the board in that space. But in an otherwise weak market, one stock which is actually doing well, by weak I mean weak for some of these broader market stocks, one stock which is actually doing well is TBO Tech. There's a brokerage note coming in from Goldman Sachs. They've initiated coverage on TBO Tech. The stock is up around 9% right now, among the top gainers in the broader markets. And that's because Goldman Sachs has a target price of almost 2,000 rupees on the stock. It was a recent listing, has nearly doubled from its issue price. The target price that Goldman has is 1970. Why is that? They believe that this eB2B travel solutions provider actually has some good metrics to track going forward. The first one is the free cash flow of the company will remain above 100 as a proportion of net profit for the foreseeable future. That's not all. They believe operating leverage will play out as well. So 21% CAGR on the revenue between FY24 and FY30 would mean a growth of almost 30% year on year in the company's EBITDA, and as a result of which the EPS will compound at around 33% as well. And in an ever-growing sector like travel, which has been seeing strong tailwinds, this stands to benefit from that itself. Though they've put on board some risks as well, because it's an eB2B supplier, change in supplier terms or any non-value accretive M&A that the company does could be some of the risks. Slowdown in global travel could also be one of them. We just have to wait for the cycle to turn on the last one. But seems like Goldman Sachs being bullish on these names is actually done well for these stocks, at least in the near term. We saw that last week with Matma India as well when they initiated coverage. So interesting times.
Okay, yes, reflecting on the stock price, which is up around 9% at this point in time. Mangalam, thanks very much for that. Take a break. Dharmesh Shah of ICICI Securities will join in next with some trading calls. Stay tuned.
Love for cricket, the passion for cricket, which you've now, along with a whole bunch of your other tech friends, brought to the US. I mean, you were in New York for the big match between India and Pakistan. I mean, what does it feel like to have actually managed to bring cricket to the US?
Well, first, I mean, I'm fortunate enough. I've been to many tennis finals, the US Open final. I've been to Wimbledon. I've certainly seen a lot of Super Bowls. You know, the Warriors here in the Bay Area have won the NBA Finals. But the excitement that I had, and I went with my son to watch a World Cup cricket in New York. And, you know, every Indian CEO that I knew was either going to be watching it live or watching it in person.
Either owning a team or at least supporting a friend's team.
And so it's a passion. And, you know, I don't know that we have enough of a farm system here, Shireen. I mean, you know, I think if you look at what happened with soccer or football here in this country, Major League Soccer, what happened was you had a great farm system. So you had passionate fans, like we have passionate fans in cricket. But the question is, how do you encourage that farm system? And so, you know, whether it's Satya or me, you know, we love cricket and we'll continue to champion and passionate it. We're coming up with our second season of Major League you know, cricket here, and, you know, I'm part of the San Francisco Unicorn team, and so it's fun.
So the Hyderabad mafia is not just taking over tech, it's bringing cricket to the US as well.
I think we'd like to say we're paying it forward, you know, I mean, rather than, you know, in this case, the mafia, this is all about a passion, you know, and cricket's a global sport. And actually the funny thing about sport just brings together people like no other activity. And, you know, just the amount of excitement, but now we have to go win it all, right? I mean, we've just got to the, you know, Super 8s, and unfortunately, the India-Australia match, I have a board meeting on that day, so it's going to be
big conflict.
No, the board meeting is going to take priority, but, you know, I'm going to perhaps sneak a look now and then at what's happening.
I would imagine.
Poor oral health wreaks havoc on daily life, causing pain, disability, loss of productivity, and low self-esteem.
In India, you see a lot of gum disease, which is also promoted by things like tobacco and supari.
Poor oral health is linked to serious systemic issues like heart disease, Alzheimer's, digestive problems, bacterial pneumonia, preterm delivery, and cancer.
If your teeth, the way they meet, what we call occlusion, is not proper, it can lead to other damage to the joints, to the gums. We have bone loss around the teeth.
Use
बढ़े.
Welcome back. The markets are doing well. Good time to get in what's taking place in the F&O end of things. Recovery from the lows is what we've seen on Nifty, Nifty Bank and the mid-cap index as well. And if you've noticed, you know, the Nifty has found some demand around levels of 23,350 to 23,400, whereas it's found levels of supply around that, you know, 23,600 to 23,650. As you can see, the Nifty day's low today is around 23,350 itself, from where we've seen a fair amount of recovery. And that recovery has also showed itself in an outperformance of the broader markets, as you can see from the advanced decline ratio as well that comes at the top of your screen. But at the start of the expiry week, what's also spiking is the India VIX. So just keep an eye out on that one. And also, you know, because it's the expiry week and the VIX is higher, there could be a fair amount of option writing, taking note of all these higher premiums. So 23,400 put extremely active, telling you close to 23,300 would be the support coming in. Also, with the market recovering, 23,500 put writers are also active with a premium of almost 110, making 23,350 to 23,400 a firm support at the lower end. But on the way up, 23,650 to 23,700, a level that you know, the market saw declines from over the last three trading sessions, would continue to be some in some congestion zone. Stocks in focus would be SAIL, PNB, IRCTC, all of them likely to enter F&O ban in expiry week. And HAL is one which is up around 2% right now, may exit F&O ban, so just keep an eye out on that one.
Okay, all right, Pangam, thanks very much for that. Dharmesh Shah now joins in from ICICI Securities to discuss the technicals. Dharmesh, hi, welcome to the show. Well, it's picked up pace for the markets. Mid-cap index up around 0.4%. We have the Nifty, which is up around 55 odd points. Give us a sense in terms of what your approach would be today.
So, good afternoon. Yes, definitely we have seen a good recovery from the lows of 23 section. We believe, I think so, market can go in for price-wise, time-wise correction from the current levels. As we believe, I think so, more for consolidation likely to pan out going forward. But yes, definitely on the downside, we believe we don't expect Nifty to reach 23,200 on the downside. On the higher side, we expect Nifty to head towards 2,800 in the coming week. As far as intraday trades are concerned, yeah, definitely I think so, intraday and it dip towards 23,450, 470 should be looked as a buying opportunity or target of around 23,600 on Nifty. So buy the dip should be the strategy. going forward.
And individual stocks?
As far as stocks are concerned, Mangalam, I think so oil and gas and metal space as a whole looks positive from the current level. Inside the oil and gas space, we have our topic remains to be GAIL, Gas Authority of India. Again, for GAIL, if you look at the bigger picture, a long consolidation breakout, and post that the stock has been clearly showing the resilience even in its current corrective phase. We believe stock has been forming higher top, higher bottom formation of all the time frame. Expect stock to head towards 240, keeping a stop loss of 196. Apart from GAIL, again, metal space as a whole seems to be coming out of this long consolidation, and the stock index has been clearly showing a resilience even in this current corrective phase. We believe metal space, inside the metal space, Jindal Steel and Power, again, the stock has witnessed a 15 years of long consolidation breakout in early January 2024. Again, the stock has been making a strong support at 50-day EMA on multiple occasions. Even if you look at the weekly time frame, the stock has been seeing a strong buying demand, I would say, has been emerging at the lower band of the channel. Expect stock to head towards 1230, which is again the upper band of the channel, keeping a stop loss of 1009. So GAIL and Jindal Steel and Power remains to be a topic at the current levels.
Okay, all right. Thanks very much for taking the time out, giving us those picks. We need to take a short break. But on the other side, we'll bring you snippets from our exclusive conversation with Amit Bajaj, President North America TCS, on the impact of artificial intelligence on business.
Destroy your brush, don't destroy your teeth. Brush in a vertical or elliptical motion, not horizontal.
The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we're looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economic stage.
Welcome back. Well, the impact of artificial intelligence will be greater than of mobile and cloud. These are the words coming in from Amit Bajaj, President North America of TCS. In an exclusive chat with Shireen Ban, he says that clients are in wait-and-watch mode ahead of the US elections. Listen in.
The overall confidence is quite robust, I would say, Shireen. But in the short term, we're going through an election year. There is fair amount of tailwinds that we have from good employment rates, good consumer demand, but there are also sense of headwinds with government spending, with inflation, with interest rate environment. So I think while the demand is holding up and businesses' top line is quite strong, they are still taking a cautious approach, investing, but being measured.
And when you say investing, is it incremental investment or is it really redeploying capital from one area to the next?
I would say the latter. So AI is very, very real, and it's everyone wants to invest in that.
So where are they pulling money out of and putting it into AI?
And the AI has both an applicability on the growth side, but also on efficiency and cost side. So at the near term, you can deploy the technology in business as usual activities and fund your innovation and growth cycles from there.
So pause for now, you believe at least through 2024 till the US elections are out of the way, which is November. So it pretty much takes care of this calendar year.
Yeah, I would say measured. We are going to see spending, but there's going to be a dislocation of spend. And it's going to be, in certain ways, self-funding, at least for now.
You talked about the strength of the U.S. economy. You also talked about the fact that consumer confidence continues to be fairly strong, even though we've seen inflation still running fairly high, and we haven't seen those rate cuts, or at least a rate cut trajectory, which is what the markets want at this point in time. It looks like it is going to be, longer for rates to start to fall. But how do you see that impacting spends even post the election period? Because is there more trepidation and nervousness on the large deals, or will it continue to be cost rationalization?
So in certain ways, it's like a Goldilocks situation, right? Like you are somewhere in the middle. You're not in a recession technically, where customers are really thinking about large cost cut and cost-driven big initiatives. On the other side, while technology promises a lot of innovation, it has its own adoption cycle. So the technology innovation is exponential, but the adoption is linear.
Yeah.
So, one has to deal with people change aspects of technology adoption, governance aspects. So on the growth and innovation side, it is fairly a linear journey. So we are somewhere in the middle. So you're not seeing a very strong breakout either ways.
Conversational breakout, of course. This is the buzzword. Everyone's talking about it, whether inside the boardroom or outside the boardroom. But you're saying that at an enterprise level, adoption is going to take time before it gets to any kind of scale.
Yes.
In your conversations that you're having with your clients here, and of course, people that you collaborate with, you co-create with, where do you believe we're going to see adoption really kick off? Where do you believe that the pace of adoption is going to be faster? Which sectors, which industries, what kinds of companies are likely to move faster, be the early adopters at scale?
So I think, first of all, the opportunity is very real, and everyone believes in the opportunity. We recently did a global survey across all the businesses, and over 50% mentioned that the impact of AI, both on predictive and generative side, is going to be more than that of mobile or cloud, which has really driven the last 15 years of growth and innovation. And so it is very, very real. And they're already using it in certain use cases, scenarios. So, whether it's on the customer service side, whether sales and marketing, content generation, campaigns is another area in marketing. On sales side, sales co-pilot, sales buddies, responding to RFPs and generation of those standard content. So the generative aspect and where a large amount of content assimilation needs to be done, summarization, some insights. So all those pilots are already happening on the claim side. So I would say more growth focused. And then we see on the cost side, how do we reimagine back office, mid office using GenAI, right? It's essentially a people and process centric business on that side. So how do we make it a tech first business? How does IT adopt AI in its own running? That's an important theme, and TCS has launched was pioneer in that category.
Right.
We launched the AI Ops category with our flagship platform, Ignio. So it's a lot of action happening, but technology is going to be deflationary in that sense, right? So we're creating the funding for the growth and transformation side.
You know, you talked about what TCS is doing on AI, and I was walking around and you showed me what Digitate is doing. You just talked about Ignio as well. You know, give me a sense of the depth and the breadth of what's happening with AI within TCS. What are the questions that you're being asked by clients at this point in time? How are you beefing up capabilities within the organization? I mean, you know, how many employees are now being trained for an AI world, for instance?
Yeah. So first of all, while the generative AI suddenly became a buzz last year with OpenAI, the predictive AI has been here for some time.
Right.
And our Digitate business unit and Ignio's platform was really to use that power of predictive AI within our own IT services, right? So that journey started in 2010, 2015, we did a commercial launch. And we are already using in our own business and transforming our own business. And now we have over 300 customers running on that platform, seeing tremendous value, not in just in terms of automation or cost saving, but really in predictive capability, in resilience, in fixing things before they break.
Interesting conversation there. And remember, you can catch the full conversation today at 7:30 p.m. and 9:30 p.m. only on CNBC-TV18. Take a short break now. On the other side, Manisha Gupta, as always, joins in with the commodity segment.
On the large street.
21 years of the Nifty from 1,000 to 10,000 today.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter century of excellence.
This is India's election headquarters.
As the verdict emerges, the markets will react,
Bringing market movements into sharper focus with the most authoritative insights.
Once the exit polls were out, we saw the Sensex going up by 2,500 points.
In this pessimistic environment, there is a lot positive also. Please don't underestimate the 8% momentum in the economy.
Exploring election breakthroughs from the newsroom to the field.
The numbers have changed significantly in the last few minutes, even as far as UP is concerned.
Things are not looking very good for the ruling regime at this juncture.
Of course, things are changing, but it looks like a formidable victory at this point in time as far as the NDA is concerned.
Harnessing the power of over 25 years of world-class business news journalism.
You're getting all of this analysis live from the CNBC-TV18 election headquarters.
CNBC-TV18 emerged as the clear leader on television and YouTube on election counting day.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship. Celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBCTV18.com. CNBC TV18's most comprehensive and award-winning news show.
Welcome back, and joining us on the show now is Ajay Goel. He's chairman at the Wheat Products Promotion Society. Mr. Goel, hi. It's a busy day for you because the Food Secretary Sanjeev Chopra has been speaking for the last 10 and 15 minutes, and the major point that he's talking about clearly has been wheat. There have been various reports that wheat perhaps is in shortage, the government has not been able to procure enough, and imports perhaps is the only way going forward from there. I mean, it has been a lot of times, Mr. Goel, that the government has been saying that there is no issues as it comes to wheat. And in turn, what they have done is that they've put stock limits in wheat now. Every Friday, all stakeholders will perhaps have to mandatorily show their stock. How are you reading into what the Food Secretary has been saying?
Right. So actually, it has been somewhat funny that, the government has been living in denial, almost claiming all over again that, we have sufficient to see the year through. And the shortages could be felt even in the last year, which went by. And in the current year, again, the government has fallen short of almost 10 million tons of its procurement target. So I think the earlier the government takes a call, the better it would be for the stability and availability of wheat in the country. And it is good that the government has taken notice and is planning to come out with some modifications in their existing policy. Although, wheat stock limit is something they are talking about, which really doesn't resolve the situation.
Mr. Goel, when you look at let's take a step back, and when you look at the overall production itself, the industries and the government's production numbers did not match. There have been various conversations that perhaps the farmers are holding or the private trade has been holding as well. How much of sense do you see in that?
No, definitely in the state of UP, we have seen that the type of crop that was expected or predicted really didn't emerge during the procurement season. So definitely in UP, there is a lot of holding back of the crop with the farmer or with private trade, I guess. But in other states, especially Punjab and Haryana, government has swept and taken away whatever surplus was there. In MP, there was an issue of crop damage. And so it was not a preferred place to procure wheat by most traders. But I think there is only some crop held back in UP by the farmers. And that's why you see, UP has not contributed well to the central pool.
I quickly want to understand the language from the SECI here saying that the government has imposed stock limit on wheat to stop hoarding. Where do you see, and what's your sense on this hoarding?
So I really don't understand this word hoarding. You have one crop in a year of wheat, and any user or any processor would like to keep his supply chain assured, and for that he will definitely want to stock wheat, which is a precedence in almost every industry. Since we have only one crop of wheat. And, by putting in these laws and limits, you really do not increase availability in the real sense. The crop size doesn't go up, the availability doesn't increase. And, users will want to hedge their positions in a volatile situation and an unpredictable market. So I really think that, the government was good enough with the weekly stock declaration policy, under which they were having a sense of the stock in the country with various users and stockists. That was good enough. And if they had to fix in a stock limit, it should have been a little higher so that there is, enough room for free movement of wheat. Like, if somebody wishes to buy 2 rake loads from a trader, it's almost impossible now if 3,000 tons is the limit. But in government, in its wisdom, has acted.
Mr. Goel, I was actually coming to that. So 3,000 tons for wholesalers, 10 tons for a retailer, and 10 tons per outlet for big chain retailers as well. And I'm assuming these are the D-Marts and the Reliance Freshes of the world. How are you looking at these numbers? And is that enough, giving the sense that wheat perhaps is the most bought staple diet across India?
No, so this is not a really good step. You really increase scarcity and people just run away from the supply chain as far as wheat is concerned. And so in the first month, people will be forced to offload. And then what happens in the rest of the months? You have, 8-9 months more to go. And where will the supply come from there at that time? And some people have to invest. Private trade has to invest in wheat storage and things like that. And if you drive them away, who's got the capacity to do that?
So, Mr. Goel, I'm assuming that with the kind of specifications that the government has put out for wholesalers and retail, they would be holding more. As you said, they do hold more because they want a assured supply chain. Do we see then this wheat coming into the markets? Do you see an immediate supply increase? Do you see prices coming down?
So definitely there will be, for the fear of the government, there will definitely be some, moderation in the marketplace in the next month or so. But I guess, everybody has got the sense, so has the government, that, we do not have sufficient for the year. That's why government is still open to looking at the possibility of imports, keeping its options open. So this will definitely be, the users will have to cover the thing. So, but I guess after a month again, we will be in the same situation because supply will not have increased in the real sense.
All right. So if you were looking at wheat inflation and your roti prices were going higher, well, the government has acted on that. But as Mr. Goel says, this is knee-jerk and a very near-term reaction. For the next month, perhaps the wheat inflation would come down. But later on, as the government itself said, that options are all open and import perhaps is on table as well. Mr. Goel, as always, thank you so much for joining us and talking to us about that wheat. And that was, of course, a flash that you could see on your screens onto that one as well. But with that, it's a wrap on Halftime Report. Business Lunch will take all the action ahead.
This hour drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube.
Service by way of hostel accommodation is presently not exempt, which are being provided for students if they are outside of educational institutions. Am I right? If they are within an educational institution, they are already exempt. Now, hostels which are for students but outside of an educational institutions are also getting exempt. The measure of relief for students and working professionals, Council has recommended to exempt accommodation services having a value of supply up to 20,000 per person per month. The condition, of course, is those provided these services are supplied for a minimum continuous period of 90 days.
It is a tough time for the Education Ministry as the future of lakhs of students that appeared for NEET and UGC NET exam is in doubt. While the government was caught in the mystery surrounding the NEET examination, the cancellation of NET exam added more fuel to fire. Will the Union Education Minister, Dharmendra Pradhan, has taken full responsibility for the cancellation of the UGC NET exam and also informed that the decision to cancel the exam was taken only after the Indian Cyber Crime Coordination Center under the MHA informed Education Ministry about the question leak. The Indian Cyber Crime Coordination Center informed Education Ministry that many questions of the NET exam were available on the dark net and the same were also available on Telegram. He said that the government has a zero-tolerance policy for paper leaks.
Stocks post a strong recovery after a weak start in early trade today. PSU's FMCG and auto stocks lead the gains, while private banks, which did well last week, lagged today.
The GST Council, under the leadership of Finance Minister Nirmala Sitharaman, announced rates changes for some items, exemption for others. It also announced an amnesty scheme for the past period, anti-profiting sunset, and the ability to revise the return, among other changes.
SEBI conducts search and seizure operations across two locations in Mumbai and Hyderabad. In Mumbai, the search was conducted at Quant AMC's headquarters. The fund house tells investors that it will provide all the necessary support and continue to furnish data to the market regulator.
And Goldman Sachs initiates coverage on recently listed TBO Tech. Stock rallies over 7%. Ujjivan Small Finance Bank, though, slumps 5% after the management cuts its growth guidance and increased credit cost estimates in its analyst meet. Delta Corp sells off after hopes of relief in the GST Council meet were dashed.
Hello and welcome to Business Lunch. I'm Nisha. With me is Hormaz. So, looking at the market today, Hormaz, what a strong recovery we have seen, and closer to the high point of the trading session at lunch hour. So, market really fueled up at lunch. So, 0.1% up in trade at the moment, 23,526 levels for Nifty 50. When we talk about Sensex, it has now gained over 100 points at this time in the trading session. Bank Nifty, that is an underperformer today, absolutely on flat line with a negative bias. And IndusInd Bank is one of the top Nifty losers in the trading session. Mid-cap, that is the universe which is outperforming the key indices today, 0.28% up in trade. Advanced decline ratio, therefore, because of mid-cap participation, that is adding strength, and they're more advancing stocks than the declines. But on my screen, as I said, IndusInd Bank is a drag. Cipla is second in line when it comes to draggers. But when we talk about some of the gainers from the PSU pack, Power Grid, and from Pharma, Sun Pharma are really taking the lead in terms of percentage gain for Nifty 50, Hormaz.
You know, the recovery is very swift, and as you were mentioning, right, the banks may be underperformers, but even they have recovered 500 points from the lows of the day. For the Nifty Bank, last week, the 3% gain that the index saw was the best that it had seen in the year of 2024. So good going for the Nifty Bank. Now, the interesting bit is the dips are getting bought into, but whether there is enough legs to sustain on the upside, now that considering this is the expiry week of the June FNO series, it will be interesting to see if the higher levels do sustain. What is leading the recovery, though, in the Nifty is ICICI Bank, it's Mahindra and Mahindra, ITC, HDFC Bank. So the heavyweights are putting their hand up on for the Nifty in terms of recovering from the lower levels. And when it comes to stocks that are not doing well, Reliance is not doing well, as is IndusInd Bank. So banking stocks on both ends of the spectrum. Infosys is not doing well. Among the other stocks that are not doing well, though, are fertilizer stocks. Remember, the fertilizer stocks were in vogue all of last week, all of them seeing gains of anywhere between 20 to 30%. But say the likes of FACT, RCF, National Fertilizers, all of them seeing gains of anywhere, losses of anywhere between 7 to 10% in today's trading session. So not good going there for fertilizer stocks in today's trading session, but the broader markets are doing well. The Nifty and the Nifty Bank both significantly off the lows of the day. But we'll start off Business Lunch with the big national story. The first session of the 18th Lok Sabha begins today as Prime Minister Narendra Modi and his Council of Ministers took oath as members of the House. The opposition, meanwhile, is protesting against the government's pro tem speaker choice. They say, as per convention, the senior-most MP of the House must be appointed speaker, which in case is Congress MP K. Suresh, who is an 8th-term member of the Lok Sabha. The BJP overlooked the criteria and instead appointed 7-time MP Bharatuhari Mahtab as the pro tem speaker.
And Prime Minister Narendra Modi addressed the media ahead of the first session of the new Lok Sabha. Listen into what he had to say.
संसदीय लोकतंत्र में आज का दिवस गौरवमय है। यह वैभव का दिन है। आजादी के बाद पहली बार हमारी अपनी नई संसद में ये शपथ समारोह हो रहा है। अब तक ये प्रक्रिया पुराने सदन में हुआ करती थी। आज के इस महत्वपूर्ण दिवस पर मैं सभी नवनिर्वाचित सांसदों का हृदय से स्वागत करता हूं।
And Parikshit is now joining in with an update on the agenda for the Parliament session which began today. Parikshit, good afternoon. Over to you.
Well, this is bound to be a stormy session, even though it will be a short one. The Lok Sabha is sitting from the 24th of June to the 3rd of July. The Rajya Sabha from the 27th of June to the 3rd of July. Yes, the proceedings began with the Prime Minister making his customary address to the media right outside Parliament. He took a swipe at the Congress and the opposition for imposing emergency on the 25th of June 50 years ago. And he reminded them that this was a time when the constitution was derailed and the Congress party was responsible for it. He also reached out to the opposition in his speech that when it comes to running the nation, you need consensus and we need a healthy and strong opposition in a democracy. So perhaps that was his message to the opposition as well. He said there is no place for halla gulla or creating a ruckus in Parliament, and Parliament is a place for debate. Now, when it comes to the opposition's agenda, well, the opposition is going to oppose the entire government approach to handling the NEET and NET issue. So there will be some very strong questions raised by the India bloc on Parliament House. At the same time, they will be raising allegations of the stock market manipulation following exit polls. Remember, Rahul Gandhi had done that press conference immediately after elections, after the election result was out. And this is something that the Congress party could raise in Lok Sabha and Rajya Sabha. Already there is an issue over the appointment of Bhartuhari Mehtab as the pro-tem speaker. And these are 3-4 issues which could dominate the opposition's agenda over the next few days. There is limited government agenda on the table, considering that a separate budget session is going to be announced anytime after the 15th of July. But we will see President Draupadi Murmu addressing both the Houses of Parliament, and also the MPs are taking oath in the Lok Sabha. So that exercise is expected to continue.
Right. So, Parikshit, the Parliament session begins. The new government is in business, and the Prime Minister's 100-day agenda will be most keenly watched out for. A big boost for manufacturing. What are you hearing?
Well, yes, definitely. And the focus will be on increasing manufacturing in critical sectors and enhancing employment as well. First of all, the government would like to take a call on new PLI schemes. There are proposals prepared for at least 3 new PLI schemes, such as the footwear sector, a PLI for the toy sector and the leather sector. So the cabinet has to take a call on this, and we believe a decision could be taken in the next 100 days. Also, there are 5 PLI schemes where the government is proposing to make modifications. These include textiles, food processing, the solar sector, bulk drugs and the pharmaceutical sector as well. What could happen in the textile PLI scheme for that matter? Well, what is being proposed is expanding the textile PLI scheme to include more product lines, and the time period for setting up facility may be increased from 2 to 3 years. We are also hearing that in the other PLI schemes also, either there will be an increase in product lines so that more players could benefit, or the time limits for starting manufacturing could be increased so that there are easier norms so that more people can apply. In terms of food processing, the government is keen on establishing smart food processing hubs in the country and also make India a major player in the global value chain for processed foods, vegetables, fish and dairy as well. In terms of the pharma sector, there will be greater focus on manufacturing and research and APIs, and expansion of research-linked incentives could be on the cards as well. When it comes to job creation in the manufacturing sector, electronics, automobiles, defense and mobiles, which were the focus of the government in NDA 1 and NDA 2, will continue. There is also a Jan Vishwas Bill, Jan Vishwas Bill Part 2. This was a bill that had been brought in NDA 2 to decriminalize certain laws for the benefit of businesses. So there could be more laws which will be decriminalized under this. Consultations are on currently, and we believe that a Cabinet note will be moved and a draft bill will be created within the next 100 days. Something for the startup sector as well. A deep tech policy is ready at a draft stage, and that could be announced in the next 100 days as well.
Parikshit, thanks a lot for all of those updates there. Parikshit Luthra with the updates on the 18th Lok Sabha. Let's now get you an exclusive on the NEET exam leak case. Sources are telling CNBC TV18 that the CBI will take over the Latur FIR in the case. The Maharashtra has also got a lead in the case. Santya is joining in with more. Santya.
So after Gujarat and Bihar, and now the recent developments in the NEET paper leak scam have uncovered its connections, its links to Maharashtra as well. Maharashtra ATS, while acting on a lead, actually questioned a couple of suspects in the case. Maharashtra ATS found incriminating evidence against them, including WhatsApp chat and other conversation and other IT-related evidence as well. So Maharashtra ATS became the complainant and filed an FIR with the Latur local police. So Latur police's FIR is actually against 4 people. 2 of them are Zilla Parishad teachers from Latur. One of them actually runs a coaching institute. One is a Nanded-based ITI instructor, and 4th one is from Sangli, but he's actually at present based out of Gurugram, known as Gangadhar, but Latur police is yet to establish his profession. Now CBI, which is the primary investigating agency in the case, is already in the process of taking over Bihar and Gujarat cases. On the same line, sources have told CNBC TV18 that CBI is also going to take over Latur police's FIR against these 4 accused. Sources have told CNBC TV18 that since CBI is the primary investigating agency and this scam seems like it's spread across multiple states, so in order to consolidate the investigation and in order to uncover the larger conspiracy, CBI is going to take over all these cases. CBI has also recently got some new leads regarding some suspects based out of Punjab. CBI has formed multiple teams and dispatched them to these states in order to take over the existing FIRs and also to work on the new leads.
All right, Santya, thanks so much for getting us all the latest details on this ongoing important news development. Let's slip into a short breather on Business Lunch at this point. Up next, we'll get you up to speed with the stocks and news for today. Stay tuned to Business Lunch.
Future of students, hence this swift decision was taken. Education Minister also accepted that the question paper leak of UGC NET is an institutional failure of the NTA. However, despite giving several assurances about securing future of the students, there were several nationwide protests organized by the Congress. The student wing of Congress, NACOI, organized protests in several cities outside BJP state offices demanding a probe under the supervision of a sitting Supreme Court judge. On NEET, the Education Minister said that the Bihar police is investigating the matter and it has got many leads. Bihar police is expected to submit a final report to the central government. Minister also made it clear that whoever is a culprit, he or she will not be spared even if they belong to the National Testing Agency or the NTA. CBI also registered an FIR in connection with the UGC NET exam on Thursday. Minister Pradhan said that he does not want to do politics around this matter and requested the opposition to not do politics around NEET and the NET exam. He also informed that a committee will soon be formed that will give suggestions around the betterment of NTA. The ministry will soon inform about the re-examination dates of the NET exam.
The valuation is just the score, is the way we call it. So we are all about playing the game. And our game is accelerated computing and building a platform. So for us, generative AI is the killer application among other applications for accelerated computing. And so, you know, we've been doing deep learning since 2012. Jensen, presented to OpenAI the first DGX in 2016. So that's a very, very long and
Back with us on Business Lunch. Let's also focus on some stocks that are on the move in today's session, and Cipla is one of them. It's the top Nifty loser after the company received 6 observations from its Goa facility from the US FDA. Ekta is joining in to tell us more. Ekta, over to you.
Well, yes, the US FDA has inspected Cipla's Goa facility. It was inspected from the 10th to the 21st of June, and they've issued 6 observations to the Goa facility. Now, remember that the Goa plant was under warning letter since Feb of 2020. So that means that after that, this inspection has now They've been given 6 observations post this recent inspection, despite having a warning letter. So the street is assuming that maybe if in case the 6 observations are adverse or difficult to solve, then the warning letter will stay. And what will happen will be that key drugs which are filed from the Goa facility will get pushed down further. So for example, there is a cancer drug, a Brixon generic, which is likely to now get pushed beyond, into late of FY26. It was estimated that they could make around $25 to $30 million from the drug. And it is assumed that that number could now probably become smaller if in case there is a delay in the launch and there's more competition in the drug as well.
All right, thanks so much, Ekta. One of the big draggers in trade today is Cipla. Now, Ujjivan SFB is in focus after it cut the guidance for FY25. Abhishek Kothari is right here with all the details. Tell us, Abhishek.
Well, Ujjivan did held its, analyst day on Friday. And the key highlight over there has been the rise in stress in the MFI portfolio. Now, we had also guided our, people that there is stress that is rising in the MFI portfolio last month when we did a Fin Street on the same. Now, there has been increasing credit cost guidance to 1.7%. The earlier guidance was about 1.4 to 1.5% for FY25. Loan growth has been tapered down. So for FY25, the earlier guidance of loan growth was about 25%. Now, that's been tapered down to about 20%. Also, the fact that ROE target has been cut. ROE earlier was envisaged at 22% for FY25. But right now it's been cut to 20% for FY25. And they will apply for a universal banking license in FY25 itself. So expect one announcement on the same in the next 6 to 9 months. And analysts across brokerages have cut their EPS estimate for the next fiscal between 7 to 11%. Back to you.
Abhishek, thanks a lot for that. Showing up on the stock as well, 5% lower is Ujjivan Small Finance Bank. But moving on, in other news, sources are telling Money Control that the market regulator SEBI has conducted search and seizure operations at Sandeep Tandon-owned Quant Mutual Fund. The seizure and search operations took place across 2 locations in Mumbai and in Hyderabad. Now, in Mumbai, the search was conducted at Quant AMC's headquarters. Now, Quant MF dealers and other connected persons were also reportedly questioned on Friday. Now, the fund house has released a statement where it said that it has received inquiries from SEBI and was fully committed to cooperating with the regulator.
All right, important story there coming in from the mutual fund industry. With that, we'll slip into a short breather on Business Lunch. But up next, we get you the latest coming in from Israel-Hamas war. Stay tuned for all the latest.
With all of the ecosystem associated with generative AI.
So no overnight success, which is what people sort of suddenly, like where did Nvidia come from? To the layperson, I mean, it's just a phenomenal story that's taken shape in the public perception over the last few years. But there's a lot of work that's gone in over the past 2 decades in building it out to be what it is today.
Yeah, I mean, we've been working on this for many years. We always work with all of the developers and all the research laboratories and universities, all of the startups, small startups as well as mid-size and large startups, and all of the, global research centers, global capability centers, and major ISVs. It takes a long time to build a market.
It does take a long time to build a market. Umesh, let's talk about what is faster, leaner, better now at Uniphore, since we're talking about what generative AI can potentially do. I mean, how has life changed for you at Uniphore?
Well, first of all, great to have you back in Silicon Valley, Shireen. Much like you were talking to Shankar about these things are not overnight success. I founded the company, hard to believe, 16 years ago. We've been at this for 16 years, and sometimes I meet customers who think AI was born after the GPD moment.
Right.
But some of us have been at this for a decade and a half and more. But what's truly shifted in the last couple of years, which has been truly profound, we today serve some of the biggest companies, not just in North America, but around the world. These are large banks, large telecom companies, large retail companies who've been using AI, but now with GenAI, what's profound is AI is now a boardroom topic. It's being discussed in every board meeting in a publicly traded company.
Yeah.
Wall Street is measuring companies on their AI strategy, and the stock prices are being shifted up or down, depending on what companies announce. And for that reason, CEOs and CIOs are now singularly responsible. A lot of the customers that we've been dealing with, prior to GPT, AI was being bought as part of a software as a service application. Something in marketing, something in contact center, something for sales. Now AI is an infrastructure that no company can ignore not having within itself. And for the last couple of years, we've seen tremendous traction. Matter of fact, we grew our top line a little over 60% last year, which was an acceleration from the previous year, and we're seeing the same trend continue now. So I'm seeing an insatiable desire at the C-suite around the world about how do we become AI natives? How do we keep our sovereignty when it comes to AI? How do we not share our data with somebody else? And what kind of internal tools and technologies do we need to make
Welcome back. You're watching Business Lunch, and market recovery really continues. In fact, strengthens in Bank Nifty also, which is in the green now. Moving on then, one particular pocket of the market, the fertilizer stocks are in focus today after the GST Council did not cut the rates on fertilizers. Our colleague Sonal Bhutra is right here to tell us more about it. Sonal, tell us.
Well, you know, we've seen that massive increase in stock prices of these fertilizer names in last couple of trading sessions. This was ahead of the GST Council meet, where there was an expectation that, yes, maybe the government could go ahead and cut GST on fertilizer prices from that 5% mark right now. But what has happened in actuality is the council has referred proposal to exempt fertilizer stocks from that 5% GST to a group of ministers. So there's no final decision on whether there will be a GST cut or not on fertilizer prices. The committee has also proposed reducing GST rates on nutrients and raw materials. So this has come in as a negative because there was an expectation of a price cut, of a tax cut. However, basis the discussions that we have had with analysts and calculations as well, it suggested that even if there was a GST cut which could have come about, it would not impact the P&L or the earnings of fertilizer stocks so much. Most of it would have been passed through. So even if there was a positive indication in terms of duty cuts, it wouldn't have impacted these stocks positively. And considering the 35 to 40% move that we've seen in last couple of trading sessions itself, profit booking is something which was expected after this decision.
And profit booking is indeed happening. Thanks a lot, Sonal, for that update. Now, another update from the GST Council meet. There could be a ray of hope for companies hit by the retrospective GST demands. Timsy is here to tell us more. Timsy, over to you.
Well, after the GST Council, which met on Saturday last week, what we are now given to understand from sources is that the government is likely to introduce the Council-approved law amendments in the current budget session of the Parliament for passage. Now, the law amendments included the crucial introduction of Section 11A. Now, what is this section saying? Well, the section says that sectors which paid GST at a lower rate as compared to what was applied by the authorities are likely to get relief from the retrospective action. It says that the government has the power not to levy higher GST when lower rate was paid due to a general trade practice. And this particular section can offer companies relief from the retrospective action of lower tax payout. Also, government is likely to get empowered through this section to consider not to raising retrospective tax demand wherever industry paid a lower GST rate in absence of clarity or specified rate. And this empowerment goes again back to the GST Council. It also does not allow refund of GST or cess arising in cases where higher GST demands have been paid as against a clarity which brought in a lower rate. So after Parliament nod and notification of Section 11A, the Council can use this particular section after sector-based discussions amongst the Council as and when required. Section 11A will also give a legal backing to the government to use this section as and when Council decides for a sector. So this gives sort of a legal backing to address the retrospective demands where the entire industry was paying in absence of clarity at a particular rate, and it was not just one or two companies in a sector. So the entire sectors can get this benefit. But yes, it will be used rarely is what the sources say. So let's see how soon these amendments get cleared, notified, and yes, whether in the next council meeting or not, we'll see one or two sectors getting benefit of this or not. Back to you.
Yes, all eyes are on the subsequent GST Council meetings. Thanks, Timsi, for all those details. Let's now get you the latest on the Israel-Hamas war. Now, the Israeli Prime Minister Benjamin Netanyahu has said that the ongoing operation against Hamas in Gaza is nearing its end. Meanwhile, the Houthis have claimed responsibility for an attack on 2 ships in the Red Sea and Indian Ocean. Dan Murphy has more details on the developments.
Israel's Prime Minister has said that major operations in Gaza will end very soon. It's the first interview Benjamin Netanyahu has done since October 7th with Israeli media. Speaking to Channel 14, the PM said an end to intense fighting in Gaza will allow for forces to be redeployed to the country's northern border with Lebanon, where rising tensions between the two sides have led to fears of an all-out war between Israel and the militant group Hezbollah. Meanwhile, Israel's defense chief is heading to Washington. He'll meet with his counterpart Lloyd Austin and Secretary of State Antony Blinken and discuss the next phase of the war in Gaza and escalating hostilities on the country's border with Lebanon. His visit comes as the US and Israel spar over weapons shipments, which Prime Minister Netanyahu has said have been delayed. The White House has denied that weapons are being held back, though. Netanyahu said the matter should be resolved soon.
I'm willing to take personal attacks for the security of the State of Israel. As Prime Minister of Israel, my job is to do everything to ensure that our heroic fighters have the best of weapons. In light of what I've heard in the past 24 hours, I hope and believe that this matter will be resolved soon.
Meanwhile, in the Red Sea, Yemen's Houthis say they have attacked 2 ships there and in the Indian Ocean. Using an uncrewed surface boat and a number of cruise missiles, the 2 ships, according to the Iran-backed group, violated their ban on entering Israeli ports. The Houthis launched attacks in November of last year in what they say is in solidarity with Palestinians in Gaza. US Central Command has confirmed the attack.
The latest there on the Israel-Hamas war. But it's time for a wrap on this edition of Business Lunch. We leave you with the markets at the highest point of the day. The Nifty has slipped into the green now, as has the broader markets. The Nifty Bank has a very sharp recovery from the lows of the day. Almost 600 points now from the lows of the day is the Nifty Bank. So on to the final 2 hours of the trading session. From Nisha, me and the team that put this show together, thank you so much for watching. Midcap Radar takes the action forward.
Speaking of startups and high tech, the Wall Street Journal has a front page today on comparing what you did with Cisco and what's happening at Nvidia today. Yes. And Cisco was in 2000 the most valued company in the world on the back of the big transition that we saw then with the internet. And that's what we're seeing happen with Nvidia becoming the most valued company. As people draw these comparisons, yes, what's going through your mind?
Well, first of all, it shows you that technology moved from something that the techies did to impacting every one of our lives. So with the internet, changing the way you work, live, learn, and play, when I said that in '93, most people said, no, it's techies talking. It clearly did. As you watch, there's new generations of leaders about every 10 or 20 years. And I think it's very healthy. So it's Cisco for the internet, then about 4 or 5 players for the cloud, and now Nvidia is clearly leading in terms of AI. And they're kind of like the indication of the infrastructure of AI. If you want to know how AI is doing, look at how fast Nvidia is growing. And it is growing great. What is it, 540% in the last 2 years. Today, if you're not into AI, and if you haven't got a good AI strategy and well implementation, investors won't invest in your company, even if you're a manufacturing company or a semiconductor company, etc. The pace of change, however, is different. It's about 10 times faster and can be 10 times bigger than what we saw just a few decades ago.
So, you've been a big champion and a big believer in the India story, but there's a long distance still to go to fully realize the potential of this partnership and this relationship. Where do you believe it's being constrained today?
As the largest democracy, watching your elections just occurred, and congratulations to Prime Minister Modi. It was a smooth election. There was no issues in the market, and I think that's a model for the rest of the world's democracy to follow. And now you're seeing the country lead in innovation. My challenge is don't be satisfied with just what we're doing. We've got to dream bigger in terms of the overall approach. So this is what I really think about in terms of where we are today. I think we've got to look at where we go. I do think it will be the century for India. I think it will be also the decade for India.
Good afternoon, welcome to Midcap Radar. I'm Sonal Bhutra. With me as always is Vivek Iyer, and recovery is the name of the game today. 190 points off the lows on the Nifty. The midcaps, they are doing well. Nifty Bank has recovered a fair bit and it's green all across, but the big question is whether we'll remain at these levels or there could be some consolidation or maybe some volatility.
Volatility maybe, that they're expecting, but like you mentioned, recovery is the name of the game. The sharp recovery, especially that the Bank Nifty has seen over 500 points recovery from the day's lowest point. And even, like you can see in the top of your screen, all of the top indices are now trading in the green. But quite a lot lined up on the show, important managements that we will be connecting to. Let's start off with the top headlines. Stocks continue to trade in the green despite a weak start. Consumer durables, FMCG and auto stocks lead gains, while private banks, realty and metal drags. Mid-caps relatively outperform.
Fertilizer stock slump as the GST Council does not rationalize rates but refers to the matter to the group of ministers for further deliberation.
TBO Tech gains over 8% after Goldman Sachs initiates coverage on the stock with a buy rating and a target price of 1,970 rupees a share. Says the B2B travel distribution platform has multiple positive characteristics.
CarTrade Tech slips in trade. Over 13% equity changes hands in big block deals. Warburg Pincus and Temasek are likely to have sold stake.
Route Mobile rallies after the company announces that it has enabled WhatsApp-based ticketing for Nagpur, Pune, Hyderabad and Delhi Metro and becomes the largest enabler for such services in India.
Okay, all right. As we've been pointing out, it's the recovery that is underway. 190 points on the Nifty right now. Bank Nifty has seen a bigger recovery, though it is still underperforming the benchmarks. What's outperforming is the mid-cap index, which is up around 0.4%. CPSE index, FMCG, autos, all of them are doing well in trade today, barring some of them which are seeing some profit booking in trade. But yes, the broader markets, they continue to show strength, and that has been the case for a while.
You're absolutely right. Let's couple of trading sessions where we saw a bit of profit booking take place. Today, you had a lot of news flow which indicated that there could be some pressure. But after opening in the red, and remember, we also came up with slightly negative global cues. Despite that, every dip has been bought into. But quite a lot of stocks on our radar. Hormas has been looking at the screens. And this is our special segment, Mid-Cap Movers, where Hormas will take us through the mid-caps and small caps that are moving in the session.
You won't see much if you're looking at the screen, seeing the absolute rates, but the recovery is what is more important, and the bigger takeaway is that the dips are getting bought into, as you just highlighted. The broader markets also turning positive yet again for the trading session. I start off with the gainers within the broader markets because they are the ones outnumbering them. CG Power, the Murugappa group companies are having a good day. CG Power, Tube Investments up 6.5% now at the highest point of the day. Also having a good day is MRPL is up another 6%, and GE Shipping also trading with gains. The stocks that are not doing well though are fertilizer stocks, and they were up and about last week. The things didn't go to plan for them on Saturday, and as a result of which FACT is down 10%, GSFC, RCF, NFL seeing cuts of anywhere between 3.5% to 7.5% in today's trading session. What is doing well though are holding companies, and that's on the back of a SEBI circular. All of them trading with gains of anywhere between 15 to 20%. Bombay Burma, Kalyani, Pilani, Vardhaman, all of them seeing very healthy gains. On the back of volumes also, there are a lot of movers in today's session. Route Mobile, some news flow, positive news flow as a matter of fact, 8.5% higher. Asahi India Glass, Gujarat Pipavav also seeing gains on the back of very healthy volumes. Some MFIs are under stress today. Ujjivan Small Finance Bank after the guidance cut, 5% lower. Credit Access Grameen bearing the brunt as well, 4.5% lower there. C Infosystems seeing some profit booking after last last week's surge, and Motilal Oswal is down 4% as well in today's session. Back to you guys.
Okay, all right. Thank you so much, Farmas, for joining us as always and getting us that list. So those are broader market movers, but we'll step into a short break. When we return, we'll be joined by the management of Nucleus Software to discuss the overall business outlook and more. Stay tuned.
The latest challenge that you're up against is the US government looking at whether, again, there is a violation of policy and whether there are sort of fees that are being collected without consent or, explicit consent and so on and so forth. I mean, how do you deal with something like that?
Well, you first go back to the principles and the facts, and the reality is that it was the government's case is misguided, and so we will fight it and we'll refute it in court. I think if you take a step back and you think about what Adobe has spun, the subscription economy and the digital economy is everywhere. I think when I try and read your content, it's probably going to be available through a paywall as a subscription.
Yeah.
We have open and flexible policies where some people can pay for it up front and get a discount, and others pay for it on a month-to-month. So having flexibility makes sense. But, it's something that we will address, but we certainly believe that we have been flexible. We offer customer choice, and we're completely transparent about this. When you subscribe to the plan, it says annual bill monthly. And it's an annual plan. And so, but at the end of the day, for us, what really motivates us is the fact that we're impacting and innovating. And I think if people didn't feel like we were innovating, they wouldn't be subscribing to our services. And that's what we have to keep focusing on. Well, first, I'm really proud of what our team has done. When you think about the content authenticity initiative, something that we pioneered, over 3,000 companies have now signed up with it. While people understand that AI has all this power, I think it's fair to say there's some heightened sensitivity around what does this mean to me? And so, that I wouldn't call it trust deficit as much as questions about what that is. And a company like Adobe has a leadership role that we need to play, not just for ourselves with our customers, but for the industry at large about our terms of use. I think there were some questions, and legally everybody who looked at that understood that the content belongs to them. We're not training our models based on that. But I think perhaps in English we could have done a simpler job of clarifying it. So, which we have. And so, we've rolled it out. We are creator friendly. I think the product innovation that we're delivering, Shireen, it always, warms your heart when you look at the amount of innovation that we're delivering. And I think we've talked about this in the past. AI is going to be this incredibly enabling technology that...
Welcome back. You're still tuned into Midcap Radar. The first management on the show today is Nucleus Software. The stock is buzzing in trade today. In fact, the stock has surged nearly 40% in last 1 year. To discuss the demand environment amid upcoming US elections and more on the AI opportunity, we have Parag Bhise, the CEO of Nucleus Software, joining us now. Mr. Bhise, good afternoon. Thank you so much for joining us. I wanted to understand, how has the demand environment been in the last 3 months? On an aggregate level, are we seeing early signs of discretionary spend pickup? Because the conversation that we've had with some other companies indicated that maybe in the second half there could be a pickup because companies cannot go for 18 months without higher spends. So what has been your take here?
Firstly, thank you very much, Sonal, for inviting me on this show. For us, in the segment that we operate, that is the BFSI segment, we have been seeing consistent demand. Traction has been always good. So that's how I would respond. Maybe other sectors have impacted, but we've not seen a loss of traction. It's going good for us.
Mr. Bhise, Vivek from the research team as well. The last conversation that we had with you, you mentioned that some of the large deal closures were actually getting pushed out. Is that still happening, or have you been able to convert a few deals in Q1 FY25?
No, I won't be able to comment on specific, but I think the deal closures that we talked about earlier, I don't think it has anything to do with the market sentiment. It is just some transactional delays in closure. And as I said, the traction is continues to be there. The order book is strong, and we are looking for some early closures.
Okay. So you say that the BFSI space continues to do well, and that is something that the other companies have also indicated. Mr. Bishay, I wanted to understand, earlier you had indicated that now your pricing is not the cheapest. You have raised prices on some of the accounts with some of the vendors as well. Just qualitatively trying to understand, has that impacted client addition? Has that changed the client portfolio for you in any way? And just in addition to what my colleague just asked, of course, you won't be able to give exact numbers, but has that at least come down in terms of deal closures getting pushed? Qualitatively, if you can explain that to us.
No, absolutely not, Sonal, because I think we've been maintaining this, that historically we have been doing business at ultra deep discounted rates, and we just about taken it to the next level. Of course, this was not done randomly. This was done with deep discussions with our customers. We discussed our value that we are providing to customers' business, and all our customers were very understanding in that. So that has not impacted us in any which way, existing relationships as well as new relationships.
Mr. Bishay, one question, and which as of now remains a macro uncertainty, is the US elections. Now, for you especially, is that a factor that clients take into account when giving out new deals, or are they currently in a wait and watch mode?
I doubt if the clients that we are serving will take that into account, because I think the BFSI sector is booming, specifically the area which we are in, the retail lending and transaction banking. I personally, I don't think the US elections would impact that so much for a player like us, at least.
Okay, all right. That's good to know. Well, I know that you do not give a guidance, but again, if you can let us know if FY25 will be better than FY24, because also you're sitting on a high base, 30% growth is what you saw in FY24. What's the sense that you're getting?
Look, Sonal, the attempt is always to grow, but you're absolutely clear. We do not give any kind of a guidance, but I can tell you that we always believe to work on the fundamentals, and we are working on the fundamentals, which means improving continuous improvement in customer service. We are working on some very fundamentals on the product management and product engineering level. May become a bit technical, but there are initiatives like CI/CD, which is continuous integration, continuous delivery, and ATDD, which is acceptance test driven development, through which we expect to take our deliveries and the cycle times to the next level. This is, however, at experimentation stage. I do want to clarify that. But these are the things we keep working on, and it's always a long-term view that we take into account, and not the short-term view, and we are consistent.
Mr. Bishay, so over the last 2 years, one key change that you made as far as strategy is concerned is that you are no longer a very deep discount player, so you've raised prices. You said that over the next couple of years, you're looking at introducing some changes as far as your operational parameters are concerned. Could you qualify as well as quantify, if possible, what is the key strategic initiatives that you're looking to take over the next 3 to 5 years?
Okay, so I talked about, if I talk about the strategic initiative, essentially we are, as an organization, getting exposed to lean thinking. So lean is a concept which is very much prevalent in manufacturing. I think Toyota started it. Many other manufacturing, auto firms and manufacturing firms adopted it. And now it is getting included in software development. So the CI/CD and the ATDD principle is in some way linked to that. So in all our areas of operations, we're trying to get into adoption of lean, which is expected to give significant gains in the long run. So that's why I talked about fundamentals. It's a difficult initiative. It's a time-consuming initiative. But it is an initiative which is definitely expected to give us long strategic advantage.
Okay, all right. We'll be watching out for that one and get more details from you as and when it's executed as well, Mr. Bise. I wanted to understand, typically, wage hikes happen in Q1. Has it already happened for FY25? And if not, when are you planning to do that?
We are in the process of doing it, and very soon we'll be doing it. So that's in process.
Okay, so it is in Q1, because I know not many days left in Q1, but is that something that can be expected?
Definitely, the impact definitely is there in Q1. So yes, it's already work in progress.
Thank you so much for your time, Mr. Bise, and explaining the business to us and what is it that we need to look out for over the next couple of years. But let's now slip into a short break. When we return, we'll be joined by the management of SP Apparels to discuss the company's business outlook going forward. Stay tuned.
Target a broader set of customers. And so I guess it's the era of AI. Now we can create campaigns, we can create content, we can address the content supply chain. So I'm completely convinced that AI, while I acknowledge it'll be disruptive, at the end of the day, it's going to be a massive enabler and a tailwind.
We have got majority of lender approval. We are in the process. NCLT take time and go through a whole process, which process will take place, and then it will be merged.
Okay. So by the end of this fiscal year, we could have the units separated, 6 listed entities of the Vedanta Group?
I think so, because certain things are in my hand, certain things are not in my hand.
Okay.
It is in the hand of NCLT. NCLT normally take 3-4 months time, but sometimes they can take 1 or 2 months more also.
Love for cricket, the passion for cricket, which you've now, along with a whole bunch of your other tech friends, brought to the US. I mean, you were in New York for the big match between India and Pakistan. I mean, what does it feel like to have actually managed to bring cricket to the US?
Well, first, I mean, I'm fortunate enough. I've been to many tennis finals, the US Open final. I've been to Wimbledon. I've certainly seen a lot of Super Bowls. The Warriors here in the Bay Area have won the NBA finals. But the excitement that I had, and I went with my son to watch a World Cup cricket in New York. And, every Indian CEO that I knew was either going to be watching it live or watching it in person.
In person, either owning a team or at least supporting a friend's team.
And so it's a passion, and I don't know that we have enough of a farm system here, Shireen. I mean, I think if you look at what happened with soccer or football here in this country, Major League Soccer, what happened was you had a great farm system. Yeah. So you had passionate fans, like we have passionate fans in cricket, but the question is, how do you encourage that farm system? And so
Welcome back to Midcap Radar. Markets continue to build onto the gains that we've seen after the sharp intraday recovery. But moving on to the next management, remember, India has reported a big jump in textile exports for the month of May. India's textile exports have jumped 11% in May, which is the highest in the last 18 months. To get a better sense if there is more improvement lined up for the textile industry and how the demand environment currently looks like, we are joined by P. Sundaraman, the Chairman and MD of SP Apparels. Good afternoon, sir. Thank you so much for joining us. Give us a sense of how May panned out, for the entire industry, and how did it pan out for SP Apparels?
Yep. Good afternoon. See, generally, the industry is like, the most of the businesses are coming to us, India and Sri Lanka, because there are too much of orders being placed in Bangladesh, and the retailers would love to move more business from China to India and Sri Lanka. So that the process has it has started now. So the orders have started for the coming seasons. The orders have started being placed in India as well as in Sri Lanka. So that's what is currently happening now. So de-risking, risk mitigation in Bangladesh, and the China plus one is working.
Okay, all right. So it is a good time for the industry for sure. Mr. Sundararajan, it's been a while since we've spoken on air, so good to have you on the show with us today. I wanted to understand how are the raw material prices panning out right now, especially on the cotton side versus say last quarter and last year. Are we seeing some stabilization here? And what does it mean for your margins by the end of this year?
Yes, this when compared to last year, the cotton prices has stabilized now. It is neither moving up nor coming down, so it's maintaining for the last about 2-3 months, and it looks like it will continue for a while. See, because there is no much requirement for yarn is there, so at the same time the cotton supply is well balanced with the existing current production of the spindleages now, so it will continue for some time, and I'm sure we will be able to manage for the whole year now. And it will not have a negative impact in our bottom line.
So the margin number, what will that look like by FY25, similar to FY24 levels in that case, or maybe some improvement?
Yeah, as I always give a guideline that always EBITDA we will be doing between 18 to 20. That's what we have been able to maintain so far, and we still hold on to that one.
So you spoke about margin and you spoke about the guidance that you're given. Mr. Sundararajan, what I want to understand is this accurate? Please correct us if you're wrong. FY25, you're looking at a 7 to 10% growth in revenue. Has this been trimmed down from the earlier indication in the range of 10 to 15%? Is this pure organic growth, or does this also include the recent acquisition of YPBL, which is the young brand that you recently acquired?
Now, this is only the organic growth, as I've been always, this manpower is a big challenge in this industry here, but we have been able to overcome it now. So on a safe side, we said 7 to 10% growth within this existing company, without adding any new project what is running at the moment, without adding any of our Sri Lanka operations, which will come under SP Apparels 1, and without including the subsidiary company which we newly acquired.
Okay, all right. So that's excluding all the numbers that you have indicated in terms of the subsidiaries and other businesses. I wanted to understand your garment division. What is the current order book? What's the capacity utilization looking like? Because all of that has seen improvement in Q4. Your utilization increased at 78%. EBITDA came in at 165 crore rupees. Just the garment division, what is the kind of growth prospects that you're looking at in this segment?
Yeah, the first question is this capacity utilization. Yes, this year by end of FY25, our capacity utilization will be around 82 to 83%. That's how we are working towards that, and I'm sure we will be able to improve it. And in the investors meet, we have promised that in the next 2 to 3 years time, we are working towards 90 plus capacity utilization. It should happen in the next 2 years time. So that very well will give you a message that the growth, what the growth rate would be. And with regard to the profit, 165 crores, yes, we are very sure. Definitely there will be an increase. Reasonably there will be an increase, because we are working on. No, it's a standalone I'm talking about, without adding the new acquired company or without adding Sri Lanka operations. So definitely there will be a good improvement in FY25 with regard to the bottom line, the net profit.
Just to follow up here, you said 100% capacity utilization in next 2 years. Is that correct?
90 plus.
90 plus. So around 1,200 crore revenues from just the garment division is what you're expecting in next 2 years?
Yeah, around that for sure.
Okay.
Mr. Sundararajan, if you're taking into account the FY24 revenues of 1087, working with a 10% increase in top line, that comes close to 1,200 crores. Now you have 2 acquisitions. Taking into account the 2 acquisitions, and if you're looking at the utilization rate that you just mentioned, what is the peak revenue potential, taking into account both of these acquisitions, and when do you expect them to come on stream? Separately, also give us a sense of how exactly is the head brand doing right now. Last indicated, that was not performing as per your own internal standards.
Yep. Okay, so considering the acquisition of a young brand, which is currently doing 300 crores in the last year, so we expect this to perform, easily about 10 to 12% growth. So roughly around 330 crores we expected. So putting that also on top of this 1,200 crores, so it will about 1,500 crores. And we are expecting we are starting our Sri Lanka operations, means on the job work basis from India to Sri Lanka. That could get another 100 crores or something within this financial year time. So we expect between, that's the direction we are giving, that about 1,500 to 1,600 crores.
Okay, all right. So that is the number that we'll be watching out for with the acquisitions, with the capacity utilization.
This is the guidance we are giving. Yeah.
Yes. Okay, we take that point. I wanted to understand the SP UK division as well. This time around, it was an EBITDA loss versus a profit last year. What's happening in that particular segment, and generally UK, that particular segment, does that cater to the European markets, and how's the demand there?
Okay. Before that, when he asked about the head, I just want to update that the head business has been discontinued because the agreement, the contract license period is over now. So we will not be continuing with the head. So that is over now. It will not come under this retail as one of the brands of retail division. When it comes to SP UK, yes, as I mentioned before, we have completely revamping. We have been revamping the SP UK office because it was in Leicester before. And now we have moved it to London in the last 1 year time, and we have changed the entire team. The young head of the business, and there are design teams, everything in full proper shape, and all the customers have started visiting because it's easily approachable, about 30 minutes from the airport, 30 minutes from central London. So it's strategically a good location. And we are very, very confident. I'm not over optimistic, very confident that we will bounce back, and definitely we expect about 10 million pounds of business in this year.
Okay. All right. Optimism is always good. Thank you, Mr. Sundarajan, for joining us today and giving us all those details. The stock is doing well today, up 5.5%, and the street likes what the management says. Well, with that, we're completely out of time on Midcap Radar today, but stay tuned. Your stocks when we return.
Satya or me, we love cricket and we'll continue to champion and passionate it. We're coming up with our second season of Major League, cricket here, and I'm part of the San Francisco Unicorn team, and so it's fun.
So the Hyderabad Mafia is not just taking over tech; it's bringing cricket to the US as well.
I think we'd like to say we're paying it forward. Rather than in this case the mafia. This is all about a passion. And cricket's a global sport, and actually the funny thing about sport just brings together people like no other activity. And just the amount of excitement, but now we have to go win it all, right? We've just got to the Super 8s, and unfortunately the India-Australia match, I have a board meeting on that day, so it's going to be
big conflict.
No, the board meeting is going to take priority, but I'm going to perhaps sneak a look now and then at what's happening.
I would imagine.
Poor oral health wreaks havoc on daily life, causing pain, disability, loss of productivity, and low self-esteem.
In India, you see a lot of gum disease, which is also promoted by things like tobacco and supari.
Poor oral health is linked to serious systemic issues like heart disease, Alzheimer's, digestive problems, bacterial pneumonia, preterm delivery, and cancer.
If your teeth, the way they meet, what we call occlusion, is not proper, it can lead to other damage to the joints, to the gums. We have bone loss around the teeth.
Use a soft brush, destroy your brush, don't destroy your teeth. Brush in a vertical or elliptical motion, not horizontal.
Markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Hello and welcome to Your Stocks in the Mumbai News Studio. I'm Ekta Batra. Well, it's turning out to be a session where we are seeing some amount of recovery which has taken place for the market. So that seems to be the big headline today. We have the Nifty, which is up around 32 odd points, the mid-cap index, which is up around 0.4%, and the Bank Nifty, which is absolutely flattened out at this point in time. Lot of stock-specific action taking place. We have a lot of stocks to discuss, may it be from the fertilizer space to the entire pharmaceutical space, all of these stocks which are buzzing around. Joining us today, we have Astha Jain, research analyst at HEM Securities, and Ruchit Jain, lead research at 5paisa.com to answer all of your queries. Astha on the fundamentals, Ruchit on the technicals. Afternoon to both of y'all. Well, Ruchit, before we start off the queries, wanted your technical call on the markets. The mid caps are outperforming. It's been quite a good turnaround. The advanced decline ratio has worsened a tad bit after improving, but nonetheless, it's still in positive terrain.
Yeah, hi, very good afternoon, Ekta, very good afternoon. Well, if we look at the markets, then we did witness some negative opening today, but there was a good support of on the hourly chart around 23,350 to 400 zone. And exactly from that support, we have managed to show a decent pullback move. So we expect that the up move should continue going ahead. 23,350 would now be seen as a very good support, and the kind of broader markets buying has been going on. I think we are poised to rally towards 23,900 to 24,000 quite soon. So the overall trend remains positive. So better to stay in the direction of the trend. Any dips from here on, in case if comes again, that should be seen as a buying opportunity. So downside seems to be very limited, and still there are no signs of any kind of reversals on the charts.
Okay, all right. Well, let's get in some queries now. We have Samir Patel, who writes to us from Gujarat. He holds 20 shares of JSW Steel, which he's bought at around 900 odd rupees. He wants to know the future prospects of his investment. So that's the particular stock that we're starting with, JSW Steel. Samir has bought around 20 odd shares, so he's currently sitting on a bit of a profit. Well, Astha, let's start with you on this one. What would you recommend on JSW Steel? What are the future prospects?
Hi, good afternoon, Ekta. Talking about this counter, basically being the flagship company of the JSW Group, this company has shown improved financial performance, and going ahead, what we believe that on the basis of global steel demand surge as well as steel price surge, the company is going to gain. Apart from that, with the reduction in the coking coal cost also, the profitability as well as EBITDA per ton will going to increase for this company, and hence we are expecting this company to show improved financial performance. Recommending a hold on this counter with the price target of 1,020.
Okay, all right. Well, there's a positive call coming in, but on the technicals, what would you recommend, Ruchit, on JSW Steel?
Well, even I would recommend a hold on JSW Steel, because the stock has been forming a high top, high bottom structure, which technically is a positive sign. And we have seen that any kind of price corrections which has recently came, we have not seen any kind of volume-based selling in the stock. So, which is again a positive sign if we consider some short to medium term. The reciprocal retracements of the recent correction indicates the short-term targets around 978, 980 first. And if that gets surpassed, then I think 1,027, 1,030 could also be seen. So better to keep a trading stop loss method and continue to hold the positions around 980. If it's a trading positions, then I would advise to take a review again.
Okay, all right. So that's on JSW Steel. That stock has done reasonably well. We now have Gurbinder Singh Bedi, who writes to us from Noida, holds 100 shares of Adani Ports, which is bought at 780, long-term investor, and wants to know what to do, whether to stay invested in Adani Ports, which is bought at around 780, sitting on a very good profit on that one. Ruchit, do you think that it's prudent to probably take some money off the table, or technically, how would you approach the stock?
I think the buying price is quite good. So he has a good margin of safety that in case if we see any short-term corrections, then also he can, there's nothing much to worry for him. Recently also, whenever we have seen correction, the stock has managed to hold above its 100-day exponential moving average, which is now placed around 1300. So quite high above his buying price. So I think it's better to hold on and continue to ride this trend, which is unfolding on the higher side. I would advise him to keep a revised stop loss of 1300 now. So in case only if 1300 gets breached on the stock from current levels, then he should look to book profits. Otherwise, since he's a bit of mid to long term investor, the trend is positives, and then so it would be wise to continue to holding the positions.
Okay, and fundamentally, what's your call on this particular counter, Asta?
Yes, we are also recommending hold on this counter with the price target of 1650. Talking about this counter, we all know that this company holds 27% market share in the cargo volume terms that we talk about, and in fact 44% in the container cargo volume terms. So the company has strong market share, and we are expecting company to show strong volume growth, especially in the cargo front, of around 11% CAGR from FY24 to 26. The basis of that assumption is that what we believe, first of all, their logistic business is doing well. So keeping that apart, what we believe that company is going to show strong performance on the basis of the strong portfolio mix they have. In fact, they are also ramping up their operations. So I think all these will aid to the strong profitability going ahead, and we are expecting this company to show more cargo volume. So on the basis of that, we are positive on this counter, recommending a hold with a price target of 1650.
Okay, all right. 1650 is the price target on Adani Ports coming in. All right, so that's on Adani Ports, but we now have another query. This is from the financial space. Praveen Kumar writes to us from Kerala, says he wants to buy some shares of IDFC First Bank for a period of 2 years, and he asks whether or not it will be a good bet. So currently, that's what his query is, whether or not he should actually purchase the stock or not. In that context, Asa, I think we've discussed IDFC First Bank before, but if you could just give us your sense in terms of whether it's a good call and, from a horizon of around 2 years, so maybe a long-term investor.
Yes, we are recommending this counter to our clients also with a buy view. And price target which we are setting at the initial level is around 92 to 95, but we are quite optimistic that it will gonna touch more than 100 in the rupee term going ahead also. So talking about this counter, yes, if we see the deposit growth, it has outpaced the industry because the deposit growth was very strong in the quarter gone by, and in fact they have shown the strong asset quality also because their GNP and NNPA ratios are now contained at below 2% level. So I think that is also a positive point. Going ahead also, we are expecting this counter to show strong volume, strong growth in their loan as well as in their deposits. So keeping all these things in mind, we are positive on this counter, recommending a hold with a price target of 92, but also we are recommending buy on this counter with a price target of more than 100 in the medium term.
Okay, all right. And technically, how would you approach the stock? It's not done much on a year-to-date basis, Ruchit, but what would your approach be, say, from a longer-term horizon? On a 5-year basis, it's done well, but this year it's pretty much been quite quiet.
Asa, certainly, last 9 to 10 months, last 9 to 10 months have been a corrective phase for the stock, where the stock has corrected from its high of around 100. But if I look at the bit of long-term charts of weekly and monthly chart structure, then there is a high top, high bottom structure which is going on. So this correction of last 10 months just seemed to be a normal corrective phase within a longer-term uptrend. So the risk-reward ratio is definitely favorable to take fresh longs over here because the stock has now formed a good support base around 70. So even for a long-term horizon, if I take retracement of the recent correction and if this high top high bottom structure continues, then it gives a potential targets of around 108 rupees for the stock. So with a stop loss below 70 for a target of 108, if you look at the risk reward ratio, then it is quite good over here. So I would recommend to buy at current levels if he can keep some patience for 2 years, as he mentioned, and expect the levels of 108 and keep a stop loss below 70 rupees on your positions.
Okay, all right. So that's on IDFC First Bank. We have Deepa, who writes to us from Pune, holds 400 shares of Manali Petroleum at 130.39. So sitting on a loss on that one, and wants to know what to do, whether she should book her losses or to stay invested in this particular counter. Rujit, over to you on this one.
For now, I think it's better to continue hold for some more pullback move. The last 2 or 3 weeks, we have seen a good price up move supported by rising volumes. And retracements of this recent fall is coming around 110. So around 110, I think it should take a review again. But these are not the prices where losses should be booked. I think better to hold on and review it again around 108, 110.
Okay, all right. And what about you, Astha, the fundamentals for the stock?
So we don't track this counter, so cannot comment on that.
Okay, all right, fair enough. Anything within the space that you would recommend?
So ONGC, again, this counter is looking good to us, and what we believe that due to the increased production, this counter will going to see a strong surge going ahead also. So we are positive on this counter, recommending a buy as well as hold with the price target of around 290 to 300.
Okay, all right, fair enough. Well, on that note, we need to take a short break, but a lot more queries lined up. Stay tuned.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology industry has been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived on the global economics.
Sensex and Nifty hit a record high.
The Nifty rallying to a record high.
We invite you to join us as we persist in leading coverage of the pharmaceutical and healthcare domain, documenting India's expanding expertise in medicines.
25 years of excellence and unparalleled growth.
CNBC-TV18, embarking on a quarter century of excellence. This is India's election headquarters.
As the verdict emerges, the markets will react.
Bringing market movements into sharper focus with the most authoritative insights.
Once the exit polls were out, we saw the Sensex going up by 2,500 points.
In this pessimistic environment, there is a lot positive also. Please don't underestimate the 8% momentum in the economy.
Exploring election breakthroughs from the newsroom to the field.
The numbers have changed significantly in the last few minutes, even as far as UP is concerned.
Things are not looking very good for the ruling regime at this juncture.
Of course, things are changing, but it looks like a formidable victory at this point in time as far as the NDA is concerned.
Harnessing the power of over 25 years of world-class business news journalism.
You're getting all of this analysis live from the CNBC-TV18 election headquarters.
CNBC-TV18 emerged as the clear leader on television and YouTube on election counting day.
What does it take to build India's largest startup platform?
It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs.
Welcome back. Well, for the markets, like we've been pointing out, it's picked up a little bit of pace for the mid-cap index. It's up around 200 odd points, 0.4%. The advanced decline ratio is also positive. A lot of stocks which are buzzing around. So on the downside, do watch out for a couple of them, such as SAIL, which is down 3.5 odd percent. Jupiter Lifeline Hospitals is down around 3 odd percent. Giving it company is Alchem, which is under pressure as well. And a couple of other stocks which are seeing some amount of pressure include CEAT, which is down around 2 odd percent. That stock hasn't done too much this month. It's up only around 4% this month. It's up only around 1.7% this year and is a bit sluggish in today's trade as well. On the upside, watch out for MOIL, MMTC, GSK Pharma, Prestige Estates. All of these stocks are gaining anywhere between 3 to 5 odd percent, giving you a sense that it's really gains are really sector agnostic at this point in time, with gains coming in across the board for stocks. On the downside, in the Nifty space, Indian Bank and Cipla continue to be under pressure. So both those stocks are down anywhere over 2 odd percent respectively at this point in time. Let's get in another question now. We have Rajat Mishra, who writes to us from Kerala with an investment query. He's asking which stocks among KFin Tech, CDSL is fundamentally and technically good for investing. So it's to both of you all. Asta, let's start with you. What would your view be on both of them?
Both of them are looking good, but buying on dip strategy is advisable on both these counters because they have risen so much. Now, talking about of any one particular option, then I think CDSL is a better option. First of all, want to give the price target to CDSL, which is at around 2230 to 2300. Now, talking about this counter, because it is like one of the market leader in the duopolistic market, so having an edge over there with the increase in the number of accounts, as we all know, demat accounts are increasing day by day, retail participation is increasing day by day, CDSL is going to benefit a lot. And one important point about this company is that no further capex is required, so definitely their ROEs will going to expand further. So looking after all these, CDSL is a better option. So we are recommending buying on dip strategy. We are not advising right now to buy on this counter because we think because valuations are high, so some dip can come and those are the right point to enter into the stock. So buying on dips is advisable for CDSL with a price target of 2230 to 2300. In fact, KFin Technologies is also looking good because again, they are also one of the leaders in the MF RTA business, and the kind of again equity participation is going on. So both these counters are having their own advantages and disadvantages, but better is CDSL. In fact, if someone want to invest in KFin Technology, then also it is advisable with the price target of 775 to 800. But again, buying on dips strategy is recommended for this counter also.
Okay, all right. And technically, what would your call be on both these counters, Rujat?
So although the longer term charts still remains positive for both these names, but I think in near term we should see either some time wise correction or a pullback move in both the names. Primarily because if I look at the weekly charts, then the recent higher high in prices has not been confirmed by a higher high in RSI, and in technical analysis we term this as a negative divergence. As such, divergences after a rally, whenever formed, they lead to either price-wise corrective phase or a time-wise corrective phase. So I think better to wait for some corrective phase of either of these before entering fresh longs. If we get any kind of dip towards 1700, 1715 in CDSL, then I think that would be good levels where the risk-reward ratio would turn favorable to take fresh longs.
Okay, all right. Well, that's the call coming on both these counters. We now have Gayatri, who writes to us from Jharkhand, holds 10 shares of ITC, which she's bought at around 300 odd rupees. She's sitting on a profit there, and she's asking if she can buy more at these levels. Well, interesting question, Rajat. Do you think that it's prudent to buy more at these levels? Could it probably touch 500 levels again for ITC?
I think yes, in case if there is a good time horizon, then these levels could be used to add more positions for your portfolio. So we have seen a good price-wise correction initially from 480 to 400 kind of level, and what we are seeing right now is a time-wise correction that is going on. So 400, 410 has been the support base which has formed in this recent corrective phase. So downside price-wise seems to be very limited. There could be some time correction before resuming its uptrend, but if you're looking to add it to a portfolio for mid to long term, then I think these are good levels to from current levels to 410. These are good levels where you can consider buying ITC.
Okay, all right. And what about you, Astha, on ITC?
So we are recommending hold. Maybe buying on dip strategy can be applied to this counter as well, with a price target of 480, so very near to 500. But initially, we are setting the price target of 480. The kind of results company has given in this quarter, so paper and agri business are not showing strong performance, but the other business, which is FMCG especially and cigarette especially, they are really showing strong growth. Going ahead also on the basis of the new launches, we are thinking that company will going to show strong performance in their FMCG and other business due to the cost optimization, premiumization strategy, etc. And in fact, their hotel business will also perform well because they have a strong pipeline of properties coming. So on the basis of hotels business as well as FMCG and other business, we are positive on this counter, recommending a hold as well as buying on dips with a price target of 480.
Okay, all right. Well, we do have Lakshmi who now writes to us from Patna. She says she wants to invest in Vedanta and is asking if that would be a good decision to buy some shares right now. Well, Vedanta has been in the news, in the past couple of days. They're not only mulling their first dollar bond sale of around $500 million, but they also are, have denied any kind of stake sale rumors that were there. So in all of the context of news, what would your view be, Astha, on Vedanta?
Yes, in fact, the company is also looking to reduce their cost, and they are looking towards increasing operational efficiency and maximum power usage. So I think all these things are really contributing, to the strong financial performance in the future ahead. This is what we believe, and in fact, the demerger business is also what we are expecting will turn up by the end of calendar year 24. So on the basis of all these factors, we are positive on this counter, but we are recommending a hold on this counter with a price target of 505 at the initial levels.
Okay, all right. And Ruchit, what would you recommend on Vedanta?
I think the overall trend still remains quite positive. We have seen a price up moves were supported by good volumes and not seen any kind of high volume-based sell-off in this recent consolidation phase. But would recommend buying in a staggered manner where only some quantity should be bought at current levels of whatever quantity wants to buy, and keep some room to average in case if we get any kind of dip towards 420, 410 range. So there, that is where the positional supports are placed. So buy some quantity only at current levels, maybe 25 to 30% of whatever you want to initiate, with a room to average at lower levels.
Okay, all right, with a room to average at lower levels. We now have Rahul who writes to us from New Delhi, holds 10 shares of Zensar Technologies, which is bought at around 200, wants to know what to do, whether to stay invested or to exit at current levels. So good amount of, good entry price for Zensar Technologies, which Rahul has got, sitting on a profit as well, but the quantity is less. But nonetheless, what would you recommend? And Ruchit, and would you recommend maybe even adding on at these levels?
As of now, I would recommend only to hold on the existing positions. Its quantity is less, but the stock has already seen a decent run-up in the recent past, and a bit overbought momentums are there on the lower time frame. So I won't recommend adding on more over here, but in case if we get any kind of dip towards 680 kind of levels in the near term, where the 20-day exponential moving averages are there, those would be the levels where you can consider buying more of these stocks. So overall trend remains quite positive, but no fresh buying should be done on any kind of dips towards 680, 700.
Okay, all right, Ruchit as well as Astha. On that note, we're going to have to wrap up on the show. Thanks very much for joining and taking us through all of those queries. Well, we leave the markets in a steady state, you'd have to say. The mid-cap index is gaining around 0.3%. The Nifty, the Sensex, as well as the Bank Nifty absolutely flat. But the big story of today has been the recovery that we've seen from intraday lows and the markets managing to maintain that X of any volatility. Well, it's a wrap, but do remember to email us your queries. We'll address them with our experts. Stay tuned. Closing bell up next.
chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18 and CNBCTV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube.
Service by way of hostel accommodation is presently not exempt, which are being provided for students if they are outside of educational institutions. Am I right? If they are within an educational institution, they are already exempt. Now, hostels which are for students but outside of an educational institutions are also getting exempt. The measure of relief for students and working professionals, Council has recommended to exempt accommodation services having a value of supply up to 20,000 per person per month. The condition, of course, is those provided these services are supplied for a minimum continuous period of 90 days.
Asian markets. They are largely lower in trade today, and the losses are led by the Taiwanese index.
There is going to be a rolling out of biometric-based Aadhaar authentication in an all-India basis.
For the Nifty, we are, of course, at all-time highs. We made all-time highs. The immediate support, in case there is a bit of a pullback, is the 40-hourly exponential moving average.
AI has both an applicability on the growth side, but also on efficiency and cost side.
23,381 is where the Nifty is starting at.
Structurally, we are very, very positive because all the balance sheets are in place. But, valuation is what discomforting to all of us.
I think the government is perhaps contemplating to use that provision to provide relief to certain sectors, perhaps online gaming as well.
देश की जनता ने हमें तीसरी बार मौका दिया है। ये बहुत ही महान विजय है।
Nifty went down to levels of about 23,350, but from that level there has been a recovery of 120 points.
There are proposals prepared for at least 3 new PLI schemes, such as the footwear sector, a PLI for the toy sector and the leather sector.
The recovery that is underway, 190 points on the Nifty right now.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC TV18 Motilal Oswal Studios in Mumbai.
Well, that is the day so far. This is closing well. We are coming to you live from the CNBC-TV18 Moti studios. I'm Prashant. With me, my colleagues Rima and Mangalam. And it has been a good day so far. 150 points of recovery on the Nifty from the day's lowest level. Guys, good afternoon.
Hi.
Good afternoon. It's you know, the day where you saw the lower end of the range being tested, and that also saw some buying. So let's see where it goes from here, because it's also seen some selling from the higher end. So we're in this range, and that range continues. Not to worry, the mid-cap index is doing a little better.
Absolutely. Small caps are flattish, but mid caps are looking higher. I mean, so not very much has changed actually from the early morning recovery. A little bit here, a little bit there, but 20-25 points on the index, on the Nifty basically is what you have to show for it. And it's kind of scattered price action, not really, you know, a one-way move anywhere. PSUs generally are doing well across the board. We'll talk more about that. Autos, which was, I mean, doing very well till, you know, the week before, that has come back into some limelight. Real estate is not doing so well. And beyond that, I mean, it's largely very, very stock specific. And there is a fair bit to discuss, which we will get to as sort of we go along through the rest of the day. Bank Nifty, which had a big outsized 3.5% move last week, I mean, that is failing to show any follow through today. The Nifty Bank on your screen, it's almost unchanged. And look at the Nifty Private Bank Index. I think the last I checked, it was slightly lower. You know, that basically the large private banks is what led the move, the 3.5% move of the Nifty Bank last week. So a flattish, consolidative kind of price action, but definitely, I mean, the takeaway is, of course, that the early morning 150 kind of cut that we had in the Nifty, all of that is back, and we are in a flattish to slightly higher zone now. Rima.
Well, Reliance Industries is struggling a bit in today's trading session, so that could be adding some pressure. So Reliance Industries is down nearly 1% right now, and it slipped as the day has progressed. So Reliance Industries down 1%. But that said, you know, in a nutshell, as a headline, the Nifty has erased all its losses and now climbed well above 23,500. The advanced decline ratio is in favor of the gaining stocks. There are more stocks in the green compared to that in the red. And in terms of sectors, if you have to pick the ones which are doing well, one are the consumer-related stocks, so consumer discretionary, consumer staples. So, you know, Tata Consumer, ITC, Nestle, these stocks are ticking higher. And another one is auto. So M&M and then two-wheelers like Bajaj Auto, Hero MotoCorp are up and about in trade. And in the private sector banks, it's ICICI Bank which is still trying to fight for the bull. So many of the other banks are under pressure, whether it's IndusInd Bank or an Axis Bank, Kotak, but ICICI Bank is still up nearly 1%.
Absolutely. You know, for the index, I'm just looking at a couple of things. One, the mid-caps are doing a lot better. But secondly, if you just take a look at the lows of the Nifty over the last few trading sessions, you know, June 19th, the low was 23,400 thereabouts. June 20th, it was close to 23,440. And if you look at today as well, the low was 23,350. So 23,350 to 23,400 is the place where, you know, the street believes that there could be some demand coming in for the markets. The broader markets doing well is telling you that, you know, the lower end of this range is protected. But even as we've recovered from lows, are we out of the woods yet or not? Because, you know, the kind of activity that we're seeing on the India VIX at the start of this expiry week is something which is very interesting, because sometime last week we went to levels below 12 as well on the India VIX. And from there on, it's been a big spike. And right now we've seen a spike of almost 7.5% on that, you know, gauge of risk for our market itself. Option writers are pretty active. 23,400 put writers active for a premium of 75 rupees. 23,500 put writers too active for a premium for 110 rupees, telling you that you know, the support is between 23,390 to 23,400. On the way up though, we haven't seen shedding from call writers at 23,600, telling you that there is still supply at higher levels. So that's you know, the way we look at the indices. And a lot of these holding companies are doing extremely well in today's trading session. So that's one theme that really stands out. We'll have Hormas talk a little about that as well. But look at something like, you know, Bombay Burma up around 18%, holds shares of Britannia. Then you have BF Investments up almost 16-17%. We have Maharashtra Scooters, which is basically the holding company for Bajaj Group, up around 7%. RPSG Ventures. So those are a bunch of stocks which are all on our radar.
Okay, let's find out how you can position yourself for trade in the last 1 hour. Mitesh Thakkar is now back with us. Mitesh, pretty solid intraday pullback above 23,500. Would you chase the up move from here? Is there a trade?
Good afternoon. See, actually, we didn't even buy the decline, because my sense was that we might actually go down a bit more.
The hourly and the 2-hourly charts is still, aren't showing any strong action on the upside. So the preferred buying zone is about 100 points lower than today's low. So 23,250, 230 is an area where I want to buy on the spot Nifty. I mean, these are the spot Nifty levels. So, we've missed today's up move. But again, I'm not very sure whether we are in a hurry to make a high immediately or, suggest a good continuation on the upside. So either we start getting past 23,600 or we get one more dip and then we look to buy into that one. That's the way we are approaching it. So index, we're still in a wait and watch mode. On the stock side, I have one buy and one sell. United Spirits is a buy. Keep a stop below 12.65. Look for targets of 13.40. And L&T after a long time has come on the sell side. Some profit booking action seen over here. So sell with a stop at about 35.75 and look for target of 34.50.
United Spirits is just pick pace. Mitesh, do you have a view on Jubilant Foodworks? I mean, it's been a big mover. In the last 1 month or so, it's up 15%. Right now as well, recovered about 5% from the lows. Are you looking at that?
I have positions there. So I have some call options bought, and I'm also planning to add this to my long-term portfolio. It's, going through a process of Mangalam of a long-term chart reversal. Now, the last time we were here, we got a monthly closing of 565 in the December of 23. And we are trading around that level. I think once this 565, 580 band is cleared, then the stock should get into a slightly longer term up move and could even suggest targets beyond 700. So very positive as an outlook, but as I said, there's vested interest already. I have some call options positions and I intend to add more in the cash segment. So I would want to highlight this.
All right, point well taken there. Thank you so much for your view on the stock and the disclosure as well. We'll speak to you in some time from now. Let's talk about the big news that will come in from the North Block. Sources say that there could be a boost to manufacturing in the Prime Minister's 100-day plan. Parikshit is joining in with the details here. Parikshit.
Well, the PLI schemes have been under review, and we believe that 3 new PLI proposals have been prepared by the government, and these could be approved in the next 100 days. Now, this includes the PLI scheme for footwear, toys and the leather sector. These are labor-intensive sectors, and the government believes that they will be able to create strong manufacturing footprint and jobs as well. There are 5 PLI schemes which have been identified for modification. Now, the proposals are being prepared, and in the next 100 days, they are expected to get cabinet approval. Now, these are PLI schemes on textiles, food processing, solar, bulk drugs and pharma sector. Now, these are sectors which either have a lot of manufacturing potential or which have not seen too much of interest from the industry. So what this could entail is expanding these PLI schemes to include more categories, so a larger number of players would be interested, and also extending the time limit for companies to begin manufacturing, so easing the norms within the PLI scheme. Textile, for one, could see an expansion of product lines, and time period for setting up a facility may be increased from 2 to 3 years. When it comes to food processing, the government is keen to establish smart food processing hubs across the country and make India a major player in the global value chain for processed fruits, processed vegetables, fish and dairy as well. In terms of the pharma sector, the NDA 3.0 may make modifications to the pharma scheme to increase the focus on manufacturing and research in APIs. Research-linked incentive schemes are also on the cards. Now, electronics, automobiles, defense, mobiles will continue to be an area of focus for the government, and enhanced job creation will also be a focus. The Jan Vishwas Bill, we had seen Jan Vishwas Bill 1 in NDA 2.0. Now, that was about decriminalizing laws which businesses are wary of. There are consultations going on in the Ministry of Commerce right now, and we could see a new bill getting cabinet approval and a draft being readied by the end of the 100 days of the government. For the startup ecosystem, there could be a boost with a deep tech policy which is coming up, and this could increase the possibility of innovation, research, and more investments coming into the startup ecosystem in the country.
Pariksha, thank you very much for that. Let's also invite Sudeep Bandyopadhyay of Indie Trade Capital on the show now. Sudeep, afternoon. This is Reema here. Well, currently we're in a bit of a light period in terms of the economic calendar, in terms of triggers, but come July, it will be all about earnings and budget. Parikshit has just laid out the 100-day agenda for the government. Is there any trade, is there any expectation running into the budget that one can, make a play on in terms of stocks? Do you think it's going to be more of a balanced budget, balancing capex and welfare schemes? How would you approach the momentum, the stocks going into the budget?
Rima, I think one more thing we have to monitor till the budget is the monsoon. The spread of the monsoon, the intensity of the monsoon, and the distribution. I think that's also going to be a critical factor apart from corporate results, which we will be monitoring till we hit the budget. As far as budget is concerned, you're absolutely right. We are expecting a balanced budget. There will be welfare measures, and I'm sure, of course, there will be support for capital expenditure significantly. The interim budget outlaid the capital expenditure plan, and that was quite impressive, 11 lakh crore. So we are expecting continuation of that direction. On the other hand, some measures to kickstart and to give support to the rural and semi-urban economy is definitely on the cards. And as long as that doesn't exceed the incremental dividend received by government from RBI, I think fiscal prudence will not be disturbed, and that should be welcomed by the markets. To the specific sectors, I'm very hopeful that there will be a lot of policy changes and structural changes made in the fertilizer. This is one space where there are a lot of reform measures which are on the cards and should be done to streamline the entire fertilizer and agrochemical space. And because of this, I think we saw some excitement last couple of weeks back, but most of the excitement was on account of the rumor that GST will be removed on fertilizer. That didn't fructify, so the things have corrected. But if you look at budget and if you look at long term, I think fertilizer and agrochemical are the sectors where one should look at. And some of the fertilizer companies like an RCF, even Chambal and NFL should be looked at. Coromandel International can also be looked at. I think these are, for a 1 year kind of a hold, these are good buys, even at current level, after the run up and bit of correction today.
Right. Sudeep, apart from, the fertilizer space that you've spoken of, are there any particular themes that you're liking, budget or no budget, currently at the valuations at which we're trading? Is there any sector that appeals to you?
Well, Mangalam, valuations are rich, there's no doubt about it. But one sector which does appeal to me, budget or no budget, is the entire rural-facing sector. We believe that based on IMD and SkyMet's predictions, that monsoon is going to be good this year. If that happens, and the government, swaps come for the rural and semi-urban segment in one form or the other, I think rural economy will start creating significant demand for a lot of consumer goods, and a lot of FMCG and consumer durable companies will benefit out of that. They've been suffering for a long time. So some of the rural-focused companies needs to be definitely looked at. And I believe that's one sector which deserves a better valuation, and we will see that happening over the next few months.
Okay. That's the call coming in on some of these consumer names. The stock which is, blown the lights off today is TBO Tech. In fact, ever since it got listed, the stock has practically doubled from its issue price of 920 and now ticking higher at 1700. Goldman Sachs sees a fair value at close to 2,000 rupees. Do you like TBO Tech at current levels, or do you think the valuations are a bit frothy?
Well, I think the valuations are a bit rich. I don't think I will look at this stock at this level. The listing price was good. And, I think there's too much of excitement in the stock now. So I'll not recommend buying at current level. Maybe after some stability, after some correction, one can look at it.
All right, Sudeep, thanks a lot for that. Just hang there. We'll keep coming back to you. We will also go. All right, just watch out for a couple of these stocks which are doing well from the broader markets. Roselle India is one of them, which is up around 13%, surging as of now. And we have some traction in the logistics pack as well. All Cargo Gati had been doing well all of last week, and now as well starts Monday with a good 6.5% sort of gain coming by out there. And as Parikshit spoke about the 100-day agenda, maybe some sort of PLI coming in for the footwear space, we have a few of these footwear stocks which are now spiking, taking note of that. So Liberty Shoes, for instance, comes up for you on your screen. Though that's the only one which has seen an up move. We haven't seen a big move on bigger names like, say, Bata or something like Relaxo. It's Liberty Foot Shoes which has seen a spike. up around 7%. So we'll watch out for that. The Nifty Bank just about flattened out. UPL is the other one from the frontline end of things, which is doing well, recovered about 4% from the lows, is currently towards the higher end of today's trading range.
Oh, well, Mangalam, that's what's happening across a variety of stocks, right? But shares of holding company stocks like Bombay Burma, Bajaj Holdings, Pilani Investments and others are trading with gains, sharp gains. Some are up 20%. This is, of course, after SEBI announced a framework for special call auctions with no price bands. Hormuz is here with exactly what this means. Hormuz, break it down for us.
As you mentioned, the holding companies are having a field day in today's trading session. Almost every holding company that you would pick up, be it Kalyani, be it Vardhaman, or any of these, are trading with gains of anywhere between 10 to 20% in today's trading session. Now, why has this happened? That is on the back of a SEBI circular, which is on the back of which the market regulator has said that they will put in place a framework for a special call auction with no price band, and that is for an effective price discovery of these holding companies. Now, what SEBI has said in its circular is that these holding companies, as you would know, they don't have operations of their own. They just function on the basis of their investments in other listed companies. Now, what they have said is that the holding companies are trading at a significant discount to their book value, and this difference in the price and the book value is impacting liquidity and the fair price discovery. So now, how will they identify these holding companies which will be eligible for these special call auctions? They would have a trading history of at least 1 year. They would not have been suspended for trading. The total assets that they have invested in other listed entities should be at least 50%, and their 6-month volume weighted average price should be less than 50% of the book value per share that is discovered. Now, as per this special call auction mechanism, the market will issue a 14-day advance notice to make the investors aware of this, and the exchanges will have to put this notice up on their website to spread further awareness. And this call auctions will be available only once in a year. Now, what has happened is that this auction mechanism will be successful if the price discovery based on the orders is from at least 5 unique PAN buyers and sellers. So it is only then that this mechanism will be considered successful. If it is not successful on the first day, it will carry on into the second day till the time this price is eventually discovered. Now, what the circular has also said is that this call auction will first take place in October of 2024, and subsequent call auctions will take place once the annual audited financial statements of these companies are released. Now, as we analyzed a lot of these holding companies and we took a look at how much is their investments in comparison to their market cap. Now, Bajaj Holdings, now their currently market cap is around 97,000 crores. The total investments as a percentage to their market cap comes up to around 10%. But look at Kalyani Investments, that is almost triple of its current market cap. Maharashtra Scooters is almost at the same level as well. Pilani Investments is 175%. Summit Securities, another holding company, that is also around 106%. And Tata Investment also comes up to around 83%. So a positive news coming in there as per the SEBI circular, these special call auction mechanisms, and as a result of which all of these holding companies are seeing a sharp surge in today's session. Back to you.
Take your point, Hormaz. A couple of these others as well. You did point Bombay Burma out, up around 18% right now, a fresh record high for that stock as well. And alongside that, we were talking about UPL just before, looking at Hormaz's data, on holding companies. UPL's got a holding company as well called Uniphore and AI. That is the other one which is spiking in trade as well. So that's about 6% higher right now. Sudeep is still with us. Sudeep, there's always this debate about whether to invest via a holding company or whether to do that via the listed company itself, and over a period of time maybe hope that there is this discount which narrows between the holding company and the listed company itself. Where do you stand on that? And if you've read the SEBI circular, heard Hormaz, what do you think would be the big difference that would take place after these auctions happen?
Well, I think it's a very, very welcome step. For a very long time, we've been noticing this. Holding companies were trading at a significant discount to whatever their valuation should be, and even most of the cases below their mark-to-market combined valuation. If you look at all the investments and do a mark-to-market and look at the value of the holding company, it was much lower. So it was a non-viable proposition. It's good that SEBI has come up with this mechanism to kind of restore, at least to an extent, sanity in their pricing. I think it's a welcome step, and I think it will lead to better price discovery as far as these holding companies are concerned. It's high time it was done because a lot of people have been accumulating holding company shares for multiple reasons and holding for a very long time, hoping for something will happen. And I think this is what is now getting played out. I won't be surprised if the price of some of these companies continue increasing for quite some time till the actual auction process starts in October.
Sudeep, thank you very much for joining in. The Nifty is absolutely flat right now at 23,500. So a bit of a dip from the early morning, from the gains that we had at about 2:30. L&T is now in the red, and some of the profits are being shaved off names of Ultratech Cement, NTPC, Apollo Hospitals. They're holding up in the green, but they've lost about 0.5% in the last 10-15 minutes. Get into a break. On the other side, we'll invite Rupen Rajguru of Julius Baer on the other side. Stay tuned.
It is a tough time for the Education Ministry as the future of lakhs of students that appeared for NEET and UGC NET exam is in doubt. While the government was caught in the mystery surrounding the NEET examination, the cancellation of NET exam added more fuel to fire. Will the Union Education Minister, Dharmendra Pradhan, has taken full responsibility for the cancellation of the UGC NET exam and also informed that the decision to cancel the exam was taken only after the Indian Cyber Crime Coordination Center under the MHA informed Education Ministry about the question leak. The Indian Cyber Crime Coordination Center informed Education Ministry that many questions of the NET exam were available on the dark net and the same were also available on Telegram. He said that the government has a zero-tolerance policy for paper leaks and government cares about the future of students, hence this swift decision was taken. Education Minister also accepted that the question paper leak of UGC NET is an institutional failure of the NTA. However, despite giving several assurances about securing future of the students, there were several nationwide protests organized by the Congress. The student wing of Congress, NACOI, organized protests in several cities outside BJP state offices demanding a probe under the supervision of a sitting Supreme Court judge. On NEET, the Education Minister said that the Bihar police is investigating the matter and it has got many leads. Bihar police is expected to submit a final report to the central government. Minister also made it clear that whoever is a culprit, he or she will not be spared even if they belong to the National Testing Agency or the NTA. CBI also registered an FIR in connection with the UGC NET exam on Thursday. Minister Pradhan said that he does not want to do politics around this matter and requested the opposition to not do politics around NEET and the NET exam. He also informed that a committee will soon be formed that will give suggestions around the betterment of NTA. The ministry will soon inform about the re-examination dates of the NET exam.
The valuation is just the score, is the way we call it. So we are all about playing the game. And our game is accelerated computing and building a platform. So for us, generative AI is the killer application among other applications for accelerated computing. And so, we've been doing deep learning since 2012. Jensen, presented to OpenAI the first DGX in 2016. So that's a very, very long and deep involvement with all of the ecosystem associated with generative AI.
So no overnight success, which is what people sort of suddenly, like where did Nvidia come from? To the layperson, I mean, it's just a phenomenal story that's taken shape in the public perception over the last few years. But there's a lot of work that...
Welcome back. You're watching Closing Bell, and let's invite in the show Rupen Rajguru, Head of Equity Investment and Strategy at Julius Baer on our show. Rupen, afternoon, and thank you very much for joining in. What have you made of this market? It's been in an uptrend. We had a little bit of a wobble in April, but the way the markets have rallied on, we've not had a single correction, any meaningful correction at least. And we've been arguing, experts like you have been arguing about how valuations are on the higher side. The pockets of value have come down, but the force of liquidity, domestic and foreign, has been fairly strong, and that continues to push up the market. So how would you approach this market over the near and medium term now?
Afternoon, Rima. I think this is a million or $1 billion question. And I think a unique feature about this current market, and if I were to compare not only India, but say a US market, it is that it's a very calm market with a strong economy. So what's happening is that we haven't seen any volatility, or for that matter, even any significant drawdown in this market. And if I were to just juxtapose that with an Indian market scenario, post-COVID, there hasn't been a single month in which the Nifty is down more than 5%. Right? So we have had a 4-year of a bull market. So we have had bull markets in the past, but in the past we have always seen a drawdowns which can be as high as 10 to 15% from the intermediate peak. And just to give you perspective, between 2003 and 2007, there were at least 6 to 7 instances in which market was down almost 12 to 15% from the intermediate high. But in last 4 years, we haven't seen something like that. So what happens typically in times like these, people do let their guards down and try to invest into something which is speculative or which has a lot of momentum, which typically does not end well. So right now, some segments of the pockets are in that zone in which it is having extreme high valuation. But at an aggregate level, Indian markets valuations have not gone into that terribly high market. So our view is probably from a best case perspective, market should at least for next 3 to 6 months do nothing. Index should probably give hardly a couple of percentage returns and let the earnings catch up happens, and then it would be a better sign. So to answer your question, we are in a bull market which is extremely high on liquidity, and we haven't seen a correction. So personally, I would like to see a healthy correction, but the power of liquidity is very, very strong, and it's not happening.
No, absolutely. You put it, Rupen. Afternoon, Prashant. I'm just going to come back to you, but I want to highlight just one more story. This is important. I mean, this is something which perhaps is going to be watched closely. I'm talking about the GST Council meeting which happened, and this is not about what basically did happen. I mean, if you can pull up Delta Corp, the stock was down about 4.5%. It's been down about 5.5% since the morning. So, and there's been disappointment because there was some quarters expectation that the council will provide relief and in terms of their taxation. That has not happened. But there is a new amendment which is being introduced, which perhaps opens up visibility that in the future there could be a ray of hope. And I'm just mentioning Delta, but this is not Delta specific. This is not companies A or B specific, but companies which have been hit by retrospective GST demands could perhaps expect some relief. That's the point here. Timsy is going to tell us how this may happen. Timsy, afternoon, over to you.
Well, it was a power-packed GST Council meeting, and we did see the Council approving a crucial amendment to the law by bringing in Section 11A. And now sources tell us that the government is likely to introduce the Council-approved amendments, that is the law amendments, in the current budget session of the Parliament for passage. These amendments include, as I said, introduction of Section 11A. Now, let me first bring to you what Section 11A is. This section says that the sectors which paid GST at a lower rate as compared to that was applied by GST authorities may get relief from the retrospective action. It also says that not to levy higher GST when lower rate was paid as due to a general trade practice, and not just by one company, as you mentioned, by the entire industry or that particular sector. So all the companies in that sector paid GST rate at a lower rate due to lack of clarity, or there was no sort of a vision given in the council or through the laws. So Section 11 also says that to offer companies relief from retrospective action for lower tax rate payout. It empowers the GST Council to consider not raising retrospective tax demand where industry paid lower GST rate in absence of clarity or a specified rate. It also says do not allow refund of GST or cess arising in cases where higher GST demands have been paid by the sector. And now sources also add that after Parliament nod and notification of this particular Section 11A, it can be used after sector-based discussion in the GST Council as and when required. This particular section also gives a legal backing to the government to use this as and when the council decides for a particular sector. So this could bring in relief for a lot of sectors. But yes, as and when the council decides to take a call, takes a review of that particular sector, the council unanimously decides that yes, they need to be given a relief. That is when this particular section will come into action. And this is something that the industry was actually waiting for, and even the council and the authorities, because a lot of these demands were running into litigation, and this is going to help the government and the industry both.
Okay, all right, Timsy, thanks very much for that. You know, the point is, this is, I want to once again emphasize, this is not for, one sector or another sector. This is, this can't, and we don't even know if the government will, or not the government will have to pass it through Parliament in the current session. So that may happen. But then after that, the GST Council will have to discuss if this has to be used to provide relief to Sector A, Sector B. And of course, since one of the most talked about sectors which has been hit by these demands has been the online gaming and the casino sector. Right. I mean, that kind of comes into sharp view also because, I mean, you've got listed companies there. That's the connection that we're drawing. We're not saying that this is being done to provide relief to these particular companies. So, I mean, that's just a short caveat here.
Yeah, a caveat well taken. And also on Delta, there are two things. One is the retrospective GST demand notices that were there from the GST Council of West Bengal. There were some in Tamil Nadu. All of them clubbed together in Supreme Court to the tune of over 20,000 crores. The company had made no provision for that anyway, because they did believe that they would get some sort of relief out here. That's what they were advised by the lawyers. We had the management of Delta Corp come here and tell us. So even if that were to happen, that would merely be a sentiment positive, because there was no write-off that happened and comes back into the books of the company. That's point one. And secondly, the bigger issue for them was the 28% GST that that was imposed on the face value of chips at the entry, and that is not changing. So that will be a deterrent. So structurally, the only positive, if at all, it comes from this, and this is largely, because we're speaking about Delta, the rule does not imply that it is specific to one sector or company. If that were to happen, it would at best be a sentiment positive, largely because the company hadn't made any provisions for this in the first place.
But I'll tell you one thing, Mangalam. The provision in accounting terms, it may not change very much. But if that were to happen, I mean, this if the government were to use this to provide relief, I mean, the price will not be 136. I'm talking about the share price. I mean, provision, not provision, that's an accounting thing. That's that is, there's no right back, as you said, because they did not provide it in the first place. But of course, I mean, it's going to be material, very material for the share if that would happen, which we don't know if it will or not. But we just wanted to highlight this, especially because we had two experts in the morning with us from PwC and Deloitte, who essentially told us that this does open, offer a fair bit of hope to not just this company, but others as well who've been hit by these demands. Markets up about 28 odd points or so. And I think just take a quick look at the market breadth as well, which is now almost 1:1. So 1340 stocks are higher and about 1300 stocks are lower at this stage. Rupen, just a quick sense on, a lot of we're seeing foreign brokerage, not just foreign brokers, but essentially the sell side going down the coverage universe, right? Because I guess for large companies, A-group companies, you've got 30, 40 brokers covering. I mean, there's almost saturation, not in terms of potential for share price appreciation, but in terms of coverage. So people are going down the list, right? I was mentioning Mapma India came into the radar last week. Small company, bigger company, TBO Tech today. Just wanted to get your sense. What do you make of it? And what does it mean for these companies? Does it, does this mean more participation, more funds, both local and foreign, into these companies as they get covered more formally by these brokers?
So Prashant, when market is in momentum, definitely idea is something which everybody is hunting for. And probably now in India, there are unique companies or companies which participate in a unique theme. So a couple of companies which you mentioned, while on valuations, definitely we can always debate whether it is comfortable or not. But they are into unique things, doing unique things, which there are not many other alternatives available. So in a way, in fact, it happened with a lot of internet companies. If you see, practically all the sell-side brokerage house have coverage on internet companies which have done well. So a lot of the new themes, I think a lot of companies have also looked into defense as a sector and initiated coverage on that. So here, it is a lot of the brokerage houses are breaking out from their traditional comfort zone of large caps, known names. And FPIs as a category of investors are also looking into unique ideas. So to answer your question, these kind of the market being in current momentum, people will hunt for more and more such ideas, and probably you will see more unique coverages coming through. The only caveat is if the market sees a significant drawdown, the interest level in all these will come down significantly. So as far as the interest or the market momentum continues, you will see more and more such ideas getting initiated by the sell-side brokerage.
Philip, Capital has also initiated coverage on TBO Tech today, and their target price is 2,080, valuing the company at 55-56 times FY26 PE. So 1 year forward, 55-56 times in terms of the valuation. Rupin, you used the word drawdown. What can cause a drawdown? You've posed a question, right? Will the budget be a catalyst to prick this enthusiasm? Where do you stand on this?
So, Rima, I'm sure a lot of people on your channel would have come and expressed, and in fact, not only experts, but also RBI, as mentioned about the way the kind of activity, which we are seeing in the derivatives markets in India. It is significant. In fact, it is a couple of times the size of India's GDP, the notional positions in the futures and the option market. Plus, as I alluded earlier, the big category of investors, the number of demat, which probably pre-COVID was 4 or 5 crores, is now gone up to 13 or 14 crores. So that clan of people have not seen a drawdown, and they are constantly investing in a lot of the narrative stocks. So some of the SMIDs, microcaps, SME exchange. So probably in the budget, if there is any regulation which comes as far as F&O market is concerned, so which can be higher eligibility criteria or something more on the higher margins required for writing options, and definitely that will can have an impact on the overall sentiment, and that can also lead to a little bit of liquidity squeeze out there. So we don't know, but there is a possibility, because now the next big event which the market will be focusing would be the union budget as far as India is concerned. So any regulations to that effect might see a drawdown, and which can see some healthy correction in the market. So we don't know, but that is the possibility of that, because both RBI as well as SEBI has in the past cautioned about the kind of activity which we are seeing there.
Rupen, always a pleasure speaking with you. Your sector calls and preferences up for our viewers on the screen as well. So we'll leave it today at this, and come back to you on another day as well with more views on more of your views on the market itself. A bunch of stocks doing well. Grasim, for instance, has moved higher. M&M continues to do well. So today we got some support coming in from the auto pack as well, and giving it company on the way up are Hero MotoCorp and Bajaj Auto. But let's get in CNBC-TV18 exclusive, where sources suggest that Bharti Airtel has mega plans in the works to capitalize on its telecom tower vertical, Indus Towers. Nisha Buddar gets us the details. Nisha.
Thanks for that. Yes, as the prospects of the telecom sector look to improve, especially with the high expectations of telecom tariff hikes really taking place, and also on the other hand, direct beneficiary of that is also going to be Indus Towers, which is the telecom tower infrastructure business. Well, Bharti Airtel is making big plans for the next phase or for capitalizing on Indus Towers. Now, it's a two-pronged strategy, and we gather from several directly involved sources. First strategy is to increase the stake and consolidate the company. Remember, they stopped short at 49%, 3% more. They are in talks with Vodafone PLC to acquire at the moment is what we gather. And also remember, another big and important aspect would be to extract a large part of the proceeds of this particular stake sale into Indus Towers, and especially the dues that are owed by Vodafone Idea to Indus Towers. So that is going to benefit in terms of the recovery for Indus Towers. Remember that Indus Towers block deal excludes the promoters from the lock-in period. So they have the ability of doing it at any point when the price is right. The second part of the strategy is what we gather from sources with direct knowledge is that Bharti Airtel, after consolidating Indus Towers, is looking at also merging Nextra, which is its data center business, into Indus Tower. Now, this is for three reasons. One, value unlocking. Second, giving exit to Carlyle, which owns 24% stake in Nextra. And the third one is also going to make Bharti Airtel asset light, because Nextra will require more capital for expansion going forward. And that being put into Indus Tower, which is cash rich, they can well use the capital that is there in the company for future growth and expansion of Nextra. So this two-pronged strategy, with the direct benefit of telecom sector doing better along with the telecom tariff hikes, is what Bharti Airtel is trying to capitalize. All three companies named in this particular story have really not commented on the queries sent by CNBC-TV18.
Okay, thank you very much for that. We will slip into a very short break on that note. On the other side, as always, we'll get you a check on what Dealing Rooms is saying in our segment D Street Chatter. We also get you a few BTST calls from our experts.
The past 2 decades in building it out to be what it is today.
Yeah, I mean, we've been working on this for many years. We always work with all of the developers and all the research laboratories and universities, all of the startups, small startups as well as mid-size and large startups, and all of the, global research centers, global capability centers, and major ISVs. It takes a long time to build a market.
It does take a long time to build a market. Umesh, let's talk about what is faster, leaner, better now at Uniphore, since we're talking about what generative AI can potentially do. I mean, how has life changed for you at Uniphore?
Well, first of all, great to have you back in Silicon Valley, Shireen. Much like you were talking to Shankar about these things are not overnight success. I founded the company, hard to believe, 16 years ago. We've been at this for 16 years, and sometimes I meet customers who think AI was born after the GPT moment.
Right.
But some of us have been at this for a decade and a half and more. But what's truly shifted in the last couple of years, which has been truly profound, we today serve some of the biggest companies, not just in North America, but around the world. These are large banks, large telecom companies, large retail companies who've been using AI, but now with GenAI, what's profound is AI is now a boardroom topic. It's being discussed in every board meeting in a publicly traded company.
Yeah.
Wall Street is measuring companies on their AI strategy, and the stock prices are being shifted up or down, depending on what companies announce. And for that reason, CEOs and CIOs are now singularly responsible. A lot of the customers that we've been dealing with, prior to GPT, AI was being bought as part of a software as a service application.
Right.
Something in marketing, something in contact center, something for sales. Now AI is an infrastructure that no company can ignore not having within itself. And for the last couple of years, we've seen tremendous traction. Matter of fact, we grew our top line a little over 60% last year, which was an acceleration from the previous year, and we're seeing the same trend continue now. So I'm seeing an insatiable desire at the C-suite around the world about how do we become AI natives? How do we keep our sovereignty when it comes to AI? How do we not share our data with somebody else? And what kind of internal tools and technologies do we need to make this all happen?
speaking of startups and high tech, the Wall Street Journal has a front page today on comparing what you did with Cisco and what's happening at Nvidia today.
Yes.
And Cisco was in 2000 the most valued company in the world on the back of the big transition that we saw then with the internet. And that's what we're seeing happen with Nvidia.
A bunch of stocks doing well. We have Brigade Enterprises up around 3-4%, but it's a big recovery from the lows that we've seen. Greenply is the other one, which is up 6%. Butterfly Gandhimati, that one's just taken off. It's up around 13% from the lows of today. Was in the red earlier part of today's trading session, and then we have now the stock sitting with gains of almost 11%. And D-Link as well is one which is sitting with near double-digit gains. So a lot of these broader market cash stocks doing extremely well in trade. And Bombay Burma, we spoke about it at the start of the show, around 14-15%. Now that's locked in the 20% upper circuit mark. All the holding companies, along with all the other holding companies, which are gaining. So good time to get in our D-Street chatter. Nimesh gets us an insight into what the dealing rooms are saying. Nimesh.
Hi, Mangalabina. Well, the markets have recovered from the day's low, but it's the broader market which is relatively outperforming. A lot of mid-cap and small-cap stocks are buzzing in trade. We spoke about the holding company stocks. All are buzzing on the back of that SEBI circular. So that's one space which has done well today. But nevertheless, the big sector seems to be the consumer stock. So not only the large cap, but even the mid caps consumer names are buzzing and have been well chased as well. So that's one space where there is incremental inflows from larger FIs as well as some institutional investors. From a flow perspective, it's a mixed day, is what I understand. A bit of profit booking in the PSU stocks. In general, we're seeing some bit of profit booking in the PSU basket today. I guess, but the trend of big PE stake sale, promoter stake sale, that's likely to continue. I guess this 1 week is going to be quite busy as well, because come July 1st week, the cool-off period will start for most of the promoters. So all the large deals which had to happen should happen in the next few days from here on.
Nimesh, in terms of individual names, what's on your list today?
Well, the first stock is Arvind Limited. Part of that whole theme of promoters selling out. There is a large block, nearly 1.5% equity got changed hands. I understand the promoter entity was a seller and some domestic mutual funds were buyer in today's block. So the disclosures could be quite interesting there. The second stock is Lloyd Metals. It's been consolidating in a very narrow range for the last many weeks now. Now I understand the company is likely to raise funds both via QIP as well as preferential issue very soon. So that's something to track there. The third stock is Stellite Technologies. After a long time, some bit of buying seems to be back on that name as well. Remember, the company a month back raised funds via QIP as well. Now the street is anticipating a large order win for the company very soon. And the last is PFC and REC. While the stocks have recovered from the lows, but there is selling pressure, is what I understand from large institutions in both these names. So expect high delivery volumes in both these stocks today.
All right, Nimesh, thanks a lot for that. So those are a bunch of stocks which will be on our radar, and we'll keep an eye out on all these hints that Nimesh has given us with regards to fundraising and large trades too. But let's get in Mitesh once again for his view on what to buy or sell today for a reverse trade tomorrow. Mitesh.
BTST or Naukri or InfoEdge, it's trading above 6,600. So keep a stop at 65.80 and a target of 66.65 can be looked at on the upside for tomorrow. And the other stock is Astral. That's again another stock is making a fresh high. So BTST here with the stop at 23.64 and target of 24.25 for tomorrow can be looked at.
Right. Do you have a view on Whirlpool, Mitesh? I mean, I'm just looking at the way the stock price has moved. It's done well this month. It's done well this year as well. Now seeing some bit of profit taking. Do you think this is a dip worth buying into, or maybe it was the overextension on the way up, which is now coming undone? Whirlpool is currently at the low point. Actually, it's corrected about 3% from the highs.
Well, I'm not sure on this one. I haven't been tracking Whirlpool for quite some time now, so I don't have an immediate view on this stock.
All right. Okay, Mitesh, excite. I mean, that one always gets one excited. It's now moved once again at the high point. Do you have a view on excite?
Excite, we had a lot of buy calls earlier, and now I think it's, while the chart is still looking good, it's too far away from its moving averages. So excite is something which I would want to buy, but on a consolidation. In fact, I would, do a couple of things. One, trail my stop losses tighter to about levels of 555 on a positional view. Even maybe take 25% off the table, because the hourly and the 2 hourly charts are extremely overbought. Typically, they should, yield some kind of a pullback or a correction of profit booking. So maybe, book part only about 1/4 of quantity and trail the stop loss to about 555 on the list.
How and when do you enter something like a trend? I mean, at any given point in time, it's just surging. Right now as well, at the high point, a fresh record high for that stock.
So typically, I think, the way you play these kind of stocks, and a lot of these stocks, a lot of stocks in this bull market have done that, is that you wait for a pullback to the 10-day average, see if, the stock is holding and not closing below it, and then you get a bullish candle on the hourly chart. Therefore, take the recent candles low as the 10-day average as the stop loss, and then take long positions. Again, trend similarly did that 3 days back. I think, we saw the stock dip to about 5,200. Even today morning, it was trading around those levels and has bounced back very nicely from there. So I think that's the only way to enter.
Well, Mitesh, thank you very much. So that's a bunch of stocks with Mitesh weighing in, and of course his own trading ideas, short-term trading ideas. Now, broking platform Grow is clarified and complains of, fraud. This is essentially with regards to a relative of a user of Grow who had posted on social media, alleging that there was fraud which had happened. Now, what's the story all about? It's really all over social media. Yash has really investigated a little bit. He's spoken with the company Grow, so he gets us the full picture. Yash, take it away.
Well, Prashant, it's a curious case where allegedly an investor claims on buying a mutual fund unit from Parag Parekh Mutual Fund through the broking platform Grow. Now, this particular transaction, remember, happened in 2020. And since then, the user says that she was receiving all details about this mutual fund unit, like its value, like the movement in value, like the folio number, so on and so forth. And when cut to June 19, 2024, she tried to redeem this mutual fund unit, she was not able to do so. After that, she took up the matter with Grow as well as Parag Parekh Mutual Fund, and the response which she got from Parag Parekh Mutual Fund is that this particular folio number which she's been given, the details of which she's been seeing on her Grow app dashboard, does not exist in the first place. The individual in question then decides to take up the matter with Grow, and allegedly, as per the social media post by one of the relative of this particular user, Grow deleted all the details of that particular purchase of the mutual fund unit from the account of this particular user. The user in question makes another social media post where she clarifies that she is very clear that money got debited from her account, but it was never used to purchase the mutual fund units which she intended to purchase. On this particular query, we reached out to the broking platform Grow, and they've clarified their stance. They say that money was never deducted from this individual's account ever, and hence there was no purchase which was done in the first place for the mutual fund units which are in question. What we picked up from our sources is that there was certain reconciliation error on the part of Grow, because of which a wrong reflection of the purchase of these mutual fund units and the details around it kept reflecting on the dashboard of this individual's Grow account. But at the same time, Grow tells CNBC-TV18 that they've decided to return the money which is in question to this particular user, but that is only in good faith. On the other side, the user confirms on receiving the amount from Grow, but there's a difference because both entities and the understanding of returning this money is very different. Grow says that it's been returned in good faith, whereas the user indicates that it has been returned on admission of the mistake from the side of the broking platform Grow. Despite all of that, there are three important questions which still remain at the end of this confusion. The first question is that did money ever get deducted from the account of this user and it was not used to purchase the mutual fund unit, or the other way around? The second is that was this attempt a deliberate attempt to defraud the user in this particular case by the broking platform? And third, and the most important question, if it was just a reconciliation mistake and there was no money which was ever debited from the bank account of this user, then why return the money from Grow's side to this user at all?
All right, yes. I don't know what to say. Thank you very much for that. But it's a rare case. It's a curious case. But that's essentially what we are picking up after having a word with the company as well. Well, I think we'll take a quick commercial break here. There is 7 minutes to go for market closing. We are back. We continue the market conversation here. Stay tuned.
most valued company. As people draw these comparisons, what's going through your mind?
Well, first of all, it shows you that technology moved from something that the techies did to impacting every one of our lives. So with the internet changing the way you work, live, learn, and play, when I said that in '93, most people said, no, it's techies talking. It clearly did. As you watch, there's new generations of leaders about every 10 or 20 years. And I think it's very healthy. So it's Cisco for the internet, then about 4 or 5 players for the cloud, and now Nvidia is clearly leading in terms of AI. And they're kind of like the indication of the infrastructure of AI. If you want to know how AI is doing, look at how fast Nvidia is growing. And it is growing great. What is it, 540% in the last 2 years. Today, if you're not into AI, and if you haven't got a good AI strategy and well implementation, investors won't invest in your company, even if you're a manufacturing company or a semiconductor company, etc. The pace of change, however, is different. It's about 10 times faster and can be 10 times bigger than what we saw just a few decades ago.
So, you've been a big champion and a big believer in the India story, but there's a long distance still to go to fully realize the potential of this partnership and this relationship. Where do you believe it's being constrained today?
As the largest democracy, watching your elections just occurred, and congratulations to Prime Minister Modi. It was a smooth election. There was no issues in the market, and I think that's a model for the rest of the world's democracy to follow. And now you're seeing the country lead in innovation. My challenge is don't be satisfied with just what we're doing. We've got to dream bigger in terms of the overall approach. So this is what I really think about in terms of where we are today. I think we've got to look at where we go. I do think it will be the century for India. I think it will be also the decade for India.
The latest challenge that you're up against is the US government looking at whether, again, there is a violation of policy and whether there are sort of fees that are being collected without consent or, explicit consent and so on and so forth. I mean, how do you deal with something like that?
Well, you first go back to the principles and the facts, and the reality is that it was the government's case is misguided, and so we will fight it and we'll refute it in court. I think if you take a step back and you think about what Adobe has...
Welcome back. It's now a good 200-point recovery from the day's low as the Nifty almost is at 23,550. It's a gain of about 0.2%. But from the morning session lows, it's a solid recovery. Zomato is a stock which is also inching up. It's now up close to about 2.5%. Its competitor in the quick commerce business of Blinkit, Zepto, has done some big fundraise of 5,500 crores. Right. Perhaps, you want to add it?
No, I mean, $3.6 billion is what they've, valued Zepto at. And it's a big jump from the last round that it got. Will be very interesting to see how this quick com space totally evolves. Will it be the big guys, which is Blinkit and, Swiggy's Instamart on the one end with these others which are coming in, and then also a lot of these larger players are looking at quick commerce as well, given the success of the models. We have Reliance, which had invested in Dunzo, now waking up with 30-minute delivery for Geo groceries, and then you have Flipkart has planned that. We have DMart, which is looking at quick commerce as well. So all these coming together, will that again be some sort of price war? Because at the end of the day, people are willing to pay for convenience, but at what cost is always the question. So let's see how that pans out.
Okay, but the stock is up close to about 2.5%, and Zomato is almost at 200 rupees, despite the possibility of increasing competition in that business. Anand Tandon is with us. Anand, quickly come in on Zomato and what's happening in the quick commerce space.
Probably one of the best tracked stocks these days. So there isn't much that I can add to what is already not known. So to the extent that, you are continuing to see growth happening and fairly robustly, I guess, you would continue to hold on to the stock. The opportunity size has increased certainly, and therefore to that extent, you're now looking at two different businesses there. Certainly competition can erode margins, and that could be an issue, but right now the execution is superlative.
I'm waiting for the day when they, start looking at Zomato, and there would be rumors of Zomato demerging Blinkit and the food delivery business, and then you'll have two listed players, because these are the things that...
You'll be the first one to ask when you get an opportunity to ask the management.
Typically these are things which happen in a bull market where you extract value from demerging companies. And that'll be very interesting if that happens.
Absolutely. Anand, since you said it's very well tracked, tell us about lesser tracked companies. That's what people are trying to find. And brokers also. We were talking about new initiations. Pace has picked up, certainly.
Well, obviously in this space, right now in the market, there cannot be too many untracked sectors. So you are looking at pretty much, the sectors that could perhaps do well in the new dispensation with the government, as well as what we are looking at in terms of the monsoon and the season and so on. So if you are looking for sectors which are perhaps under-owned at this stage, while there has been a good rally, for example, in pesticides and crop inputs, I think that remains a sector which is perhaps has a slightly longer runway at this stage, because it's been a boring sector, hasn't done anything much, in fact has done quite badly, except for the recent past. And I think the numbers there are beginning to look a lot more interesting. I'm a little less sanguine on the kind of steps that the manufacturing sector can take, especially the government, in terms of incentivizing that. But it's a sector that you need to keep your eye on, because if the government does come up with interesting ideas about how they can increase the pace of growth there as well as employment, that would certainly be something that government want to look at.
Got that. Anand, stay with us. We're going to just sort of wrap up markets here, but we'll continue the conversation on the other side. I think we're going to end with a decent 50-odd point sort of gain on the Nifty. It's going to be about a quarter, just under 0.25% or so. A lot of action once again. Bank Nifty, no real follow through after last week's big move. Bank Nifty ends about 40 points higher, but that's flat for it. And of course, the small cap index also sees, actually there's unchanged, no change at all on the small cap index on your screen. Mid caps a little better. The mid cap index, I think, will end with small gains of about 0.25% or so. M&M did well as far as large caps are concerned. Before I throw it to Rima and Mangalam for broader market, Mahindra and Mahindra, Shriram Finance are some of the big sort of nifty gainers by the close today. You also had gains coming through in Power Grid, Grasim and Sun Pharma, which did really well. Guys.
The broader markets was definitely a day of the mid-cap index, even as the small-cap index was absolutely flat. We had, by the end of it all, with the tug of war, around 1,300 stocks advancing for about 1,150 stocks which were declining. Among the top gainers in the F&O pack, we did have Astral, which was up around 5%. First Source did well on Friday's trading session, and then now it's up around 4% today as well, ending at the high point. Alembic was the other one. Cummins did well, and then we had a couple of these consumer discretionary names, Jubilant Foodworks as well as Trent, which ended at the high point. Then the rally in real estate continues, so we did see some traction coming by in Godrej Properties, Brigade Enterprises, Prestige as well, with the 5,000 crore QIP that they're planning. And holding companies definitely were the toast of today's trading session, with a bunch of them gaining. Bombay Burma leading the pack with a 20% upside. What we saw on the lower side was FACT, which was down 10%, RCF down 6.5%, PB Fintech, which was down about 4%. So there were a few stocks that did decline, but the advances were a lot more at the end of the day.
Absolutely, and I think consolidative kind of price action, but we're up once again. And actually, you just look at the last 5-6 trading sessions. There's been, I mean, they're all essentially, if you look at candles, they're all red candles, but they're all high. The markets continue to move higher at a gentler pace, but high nevertheless. So we're at 23,537 as of today's close. It's a wrap on this edition, a closing bell from all of us here. It's goodbye, but stay tuned. Markets Forward is coming up next, and Rima and I'll take that action forward. Stay tuned.
Subscription economy and the digital economy is everywhere. I think when I try and read your content, it's probably going to be available through a paywall as a subscription. Yeah. We have open and flexible policies where some people can pay for it up front and get a discount, and others pay for it on a month-to-month. So having flexibility makes sense. But, it's something that we will address, but we certainly believe that we have been flexible. We offer customer choice, and we're completely transparent about this. When you subscribe to the plan, it says annual bill monthly. And it's an annual plan. And so, but at the end of the day, for us, what really motivates us is the fact that we're impacting and innovating. And I think if people didn't feel like we were innovating, they wouldn't be subscribing to our services. And that's what we have to keep focusing on. Well, first, I'm really proud of what our team has done. When you think about the content authenticity initiative, something that we pioneered, over 3,000 companies have now signed up with it. While people understand that AI has all this power, I think it's fair to say there's some heightened sensitivity around what does this mean to me? And so, that I wouldn't call it trust deficit as much as questions about what that is. And a company like Adobe has a leadership role that we need to play, not just for ourselves with our customers, but for the industry at large about our terms of use. I think there were some questions, and legally everybody who looked at that understood that the content belongs to them. We're not training our models based on that. But I think perhaps in English we could have done a simpler job of clarifying it. So, which we have. And so, we've rolled it out. We are creator friendly. I think the product innovation that we're delivering, Shireen, it always, warms your heart when you look at the amount of innovation that we're delivering. And I think we've talked about this in the past. AI is going to be this incredibly enabling technology that allows us to, target a broader set of customers. And so I guess it's the era of AI. Now we can create campaigns, we can create content, we can address the content supply chain. So I'm completely convinced that AI, while I acknowledge it'll be disruptive, at the end of the day, it's going to be a massive enabler and a tailwind.
We have got majority of lender approval. We are in the process. NCLT take time and go through a whole process, which process will take place, and then it will be merged.
Okay.
Market recovers an afternoon session to end near day's highs. PSU stocks and metal stocks see some selling, while autos and FMCG sectors record gains. Mild outperformance in mid-cap seen today.
Goldman Sachs initiates coverage on recently listed TBO Tech. The stock rallies 7%. Ujjivan Small Finance Bank slumps 5% after the management cuts growth guidance and increases the credit cost estimate. Delta Corp sells off 5% as hopes of relief in the GST Council meet were dashed.
A 100-day plan for the manufacturing sector is in the works. CNBC-TV18 learns that the government will take a call on new PLI schemes for footwear, leather and toy sector. Sources suggest the cabinet will also be considering proposals to expand textile, food processing and solar PLI schemes. Hello and welcome to a fresh new edition of Markets Forward, your go-to program where we aim to get you everything you need to know as we finish one session and look forward to the next one. I'm Prashant, with me, my colleague Rima Tendulkar. Rima, hi.
Hi, Prashant, and we're going to be with you for the next 20 minutes with all the big news, key developments in Dalal Street, the top corporate voices of the day, and what to watch tomorrow. But first, the market action. The end was so much better than what the start was, right?
Yeah, I mean, 3:30 was much better than 9:15 and
9:20.
And markets ended higher, so about almost 200 points actually from the day's lowest point. There was, of course, early on. Remember, it was, of course, not just India; it was the rest of Asia, etc., also, which was in the red, 1.5% when we were starting to trade. But here in India, there was buying, which was seen at lower levels, and it all picked up. Banks noticeably failed to see any follow-through because the Nifty Bank Index was up some 3.5% last week, and private banks especially were the culprits. PSUs for most parts were doing pretty well, but then there was some selling pressure in the second half, and if you look at this PSU indices, they did not fare too well. But there was gains in autos, there was consumers, and there were FMCG stocks. It's just rotation. I mean, these are sectors which have done well till the week before last. And last week it was Nifty Bank. And it's sort of come back to some of these prior sector once again. And I think, a bit of it's not a big blowout kind of a move, higher, but more consolidative kind of price action. And I guess some of it, of course, is also the market trying to look ahead, right? It got one big event, which is the union budget, and market is starting to pay attention to all kinds of chatter around this, especially with regards to taxation. There have been a couple of articles in newspapers, etc. And of course, how is the monsoon going to fare in July, because June has been pretty poor across the country, and that is certainly very important for consumer-related sectors, actually for the overall market as well. So consolidative kind of price action, but higher, and definitely, I mean, if you wanted to rank the session today, a good session because of the rebound that we saw from the day's lowest point. Prima.
Well, another big trigger for the month of July is going to be earnings. So before the budget, we will be tracking the corporate numbers, and it kickstarts with IT as always. For the Nifty, it's a close well above 23,500, a gain of 36 points. But in the morning, the Nifty was down nearly 150, 160 points. So it's a commendable recovery. The advanced decline ratio, after many twists and turns, finally ends absolutely flat, 1:1 in terms of the advanced decline ratio. Consumer-related stocks did well. So Trent was up more than 3%. But in the frontline pack, you had Tata Consumer, Nestle, ITC notching up gains. M&M was a big mover. Power stocks like Power Grid, NTPC pushed higher. Shriram Finance was one of the big winners. And on the way down, IndusInd Bank, Reliance Industries and Adani Ports, all these three in the large cap space drag their feet with notable losses. But let's also tell you what we have for you on our show today. We start with the top movers and shakers of the day. Hormus joins in. Some of the stocks that made headlines were Bharti Airtel, Ujjivan Small Finance Bank and TBO Tech. We'll get you the key reasons why they were buzzing. And also our popular segment, D Street Chatter on the show, and Nimesh will tell us why Arvind Limited was buzzing today. And finally, the key market events to watch out for tomorrow. But first, to the big movers and shakers of the day, Hormus is at the big wall. Hormus.
You can call it a good day, as you just mentioned, right? A recovery from the lows of the day and eventually ending positively. So a good start to the June series expiry week. But what also had a good start to the June series expiry week was the holding companies, and they had an absolutely field day in today's session. Almost all of them highlighted on the screen here, ending 20% higher because of the SEBI circular on the special call auction. We just spoke about it a few minutes ago. But on the flip side, a sector that did not have a very good day was fertilizer stocks. And as swiftly as they moved higher last week in anticipation of the GST Council meet and its potential outcome, they sold off equally faster in today's session as well. NFL, RCF, FACT, all of them seeing losses of anywhere between 7 to 10%. So that was a sector under pressure today. The MFIs, the other sector that was under pressure, the microfinance institutions, with Ujjivan pointing out to the stress within this space, and all of these stocks also seeing losses of anywhere between 2 to 5%, be it Credit Access, Muthoot, Fusion, and even Equitas seeing some bit of losses in today's session. How did PSUs fare today? It was a mixed bag. HAL, the board meeting is nearing for a dividend announcement, so that stock continues to surge higher. But the rest of the PSU pack saw a bit of selling pressure, be it Concor, SAIL, NMDC, all of them ending with losses of 1 to 4%. Not a good day for PSUs overall. But a couple of stocks that I wanted to highlight other than the sectors. Route Mobile was one of them, 14% higher, courtesy some positive news flow today. Market cap back above 11,000 crores. And lastly, Century Textiles, a stock that ended at a record high in today's trading session, with a real estate arm acquiring some land in Pune with a 2,500 crore revenue potential. So 5% higher there as well for Century Textiles at a record high. Back to you guys.
All right, Hormus, thanks very much for that. Anand Tandon is with us, and so is Shilpa Raut. So fundamentals and technicals both. Thanks very much, both of you, for joining in. Anand, you've been a little cautious in the markets for a while now. The grind higher continues though. There's the budget in front. Reema said earnings, of course, never too far away. What's your sense, Anand, markets overall?
Well, I don't think much has changed. I think, the market, as you said, continues to grind higher. The justification for it becomes even lower. Especially on the small cap, where the valuations now are stratospheric. But that said, till the money flow continues, I think the best thing you can do is to stay in sectors which you think can perform well over the longer term. And I think you need to extend your time frame over which you're looking to invest. But other than that, one doesn't exit a raging bull market. So the best advice one can give is to change your allocation, move more towards the front line. If you're really betting on foreigners to come in and buy in a large quantity, they're not going to be buying small cap. So you have to be looking at the larger cap companies, and they are relatively cheaper also in comparison to the mid and small cap companies. So the larger ones are the ones that you need to be in. Don't look for value right now. At this stage, momentum is king, and you need to move with it.
Shilpa, what's the best advice that you would give, given the market technicals and how the day fared today, and any stocks that you have on your radar for tomorrow?
Yes, Rima. If you look at the indices, this is definitely a buy on dips market right now because any sort of little decline also is getting bought into very aggressively, and we have seen that Nifty did held on to that 22,400 to 350 zones as a support, and then a bounce towards 22,600 has almost been tested again. So this is again a resistance zones, but if this holds that, you will see that 22,800 to 24,000 mark. Likewise, Bank Nifty, as long as they are holding 50,500, it is completely, fair trade for the index, where you will see that higher levels of 52,500 to 53,000 coming in as well. For tomorrow, we saw good, long built up today in M&M, which has been trading around 2,900, 10 to 20 zones there. And I believe, with a stop loss of 2,880, you should stay long, and it could move towards 3,000 in a few sessions. And the other one would be Grasim. Grasim today also saw a lot of, aggressive OI additions on the long side, and it has given a breakout above 2,500 zones now. So just to stop below 2,500, the stock is ready to test around 2,550 to 2,570.
Okay. Stay on. Let's get to a CNBC TV18 exclusive first, where sources suggest that Bharti Airtel has mega plans in the work to capitalize on its telecom tower vertical Industars. Nisha gets us these exclusive details. Nisha.
Thanks for that. Yes, with an eye on telecom sector overall seeing some improvement with high expectations of a tariff hike as well. Well, the direct beneficiary will also be the telecom tower business of Indus Towers, and that gives Bharti Airtel a lot of confidence to come up with mega plans. In fact, sources with direct knowledge have shared with CNBC TV18 that there is a two-pronged strategy which is at works. First, to consolidate the business of Indus Towers. Remember, they stopped short of 49% stake in the last stake that they bought from Vodafone, and now we gather from sources with direct knowledge that they are in talks to buy out the remaining 3% stake from Vodafone PLC. And not just that, it will also benefit Indus Towers because talks are meandering around a large part of the proceeds of that stake sale, which Vodafone should infuse and pay back some part of the dues to Indus Towers. Remember, Vodafone Idea owes dues to the tune of 5,400 crore rupees. Also to remember that the last block deal by Vodafone exempts the promoters from a lock-in period from the stake sale and buying more shares. The second part of the strategy is the data center Nextra, which is housed in Bharti Airtel at the current moment, dependent on Bharti Airtel for a large part of its business performance. That Bharti Airtel could be looking at merging with Indus Towers is what we gather from sources with direct knowledge. This for three reasons: value unlocking of Nextra, second, giving an exit to Carlyle, which owns 24% stake in the company, and third, also to make Bharti Airtel asset light. Remember, Indus Towers is a cash throwing business, and their capital can be utilized for further expansion of high growth potential area of data centers. We reached out to all the companies named in the story. We did not get any comments on the queries that were given. But this is the two-pronged strategy that Bharti Airtel could be working on in capitalizing on Indus Towers' potential going forward as the health of telecom sector is likely to improve with the tariff hikes.
Okay, well, everybody's waiting for that tariff increase. Nisha, thanks very much for that. Anand, Bharti, of course, well-owned and understood, etc. Indus Tower is the one which has recently been on the up and up. Do you like this one?
Well, if you're looking for a steady business with some amount of growth, I think Indus Tower qualifies. The biggest issue for Indus has been the fact that one of their tenants, Vodafone, has not been paying them the money. So while the revenues keep coming in, the receivables also go up. That looks like it may get addressed, at least in part. And perhaps over the longer time, you may be able to get the stuff in. But the only problem is that what next? Because, you will need... the likelihood of getting new tenants is not very high. Your real growth is now going to come through improvement in services and 5G, etc., which is a case where not too many use cases have appeared so far, and therefore the case for 5G still remains somewhat weak. But that said, I think that's almost inevitable. So your growth will come because you'll be able to perhaps reinvest and charge a little more. It's a utility kind of earning curve that you're really looking at. So at a reasonable valuation, yes, I think it is a company that you may want to keep as a quasi-debt for part of your portfolio.
All right, Anand, got that. You know, we want to highlight one more name here, and I'll come to you for your reaction. Ujjivan Small Finance Bank was down about 5%. There was an analyst meet, and it didn't go down very well with what was said. Abhishek is here with details. Abhishek.
Well, to begin with, Ujjivan Small Finance Bank held an analyst meet on Friday, and no surprise over there, given the fact that they have mentioned stress is increasing in the industry. Now, we did highlight to our viewers in May 2024 that stress is rising in the MFI sector, and provision and NPS both are rising over there, that we saw in H2 FY24. So, increasing credit cost guidance, which has been up to 1.7% for FY25, which was at around 1.4 to 1.5% earlier in terms of guidance, and was at 1% for FY24. Now, they have lowered the loan growth rate as well. Earlier, they talked about 25% loan growth for FY25. Now, that's been tapered down to 20% loan growth for FY25. The ROE target has also been, lowered a bit. It's now at 20% versus 22% earlier. On the positive side, now the bank did speak, or the management did talk about the fact that they will be applying for a universal banking license in FY25. So watch out for action over there in next 6 to 9 months that they might apply for a universal banking license. Back to you.
Thank you very much for that. Another stock on our radar was TBO Tech, and the stock was up more than 7% after Goldman Sachs put out a very bullish call. Mangalam is standing by with the details on this. Mangalam.
Well, so brokerage notes are initiating, brokerages are initiating coverages on newer companies. Goldman Sachs actually initiated coverage on MACMA India last week. The stock did extremely well, and today's pick was actually TBO Tech, where they've initiated coverage by rating, target of a little under 2,000 rupees. Remember, the stock has a recent listing, and from its issue price itself, the stock has doubled, and despite that, Goldman Sachs sees more. Why is that? Because it's in the space of eB2B governance for, or rather eB2B travel, growth business out there, and they believe that some of the prospects of the company, which include the likes of free cash flow to net profit ratio, will stay above 100% for the foreseeable future. The benefits of operating leverage will play out as well, where the revenue compounds over the next 6 years at 21%, EBITDA compounds at 30%, so margin expands, and we see an EPS compounding of 33% each year for the next 6 years, and as a result of which, it brings them to the target price. The only risks that they put on the table, because it's a B2B business, any change in supplier terms is something that could be a negative, or any non-value accretive M&A if the company were to go ahead. And given the tailwinds that the travel sector is seeing, if it does slow down, then maybe that could be a bit of a problem.
Okay, thank you very much for that. Shilpa, coming first on Ujjivan Small Finance Bank. Is there more downside in the stock after today's fall?
If you talk about the Ujjivan Small Finance Bank share, I don't see that, there's a lot of downside from here. The support base is around 40 here, 40-41 acts as a crucial support. And if you look at the charts, this accumulation here can be a good buying opportunity. And once a move past 48 zones, I believe the stock can again move towards 55 to 58 zones.
Anand, do you track TBO Tech, by the way? Have you looked at it?
I have had a glance at it. So, the report pretty much summarizes whatever you could figure out. Travel is no doubt a great business right now. The only question is which end of the travel spectrum do you want to invest in? As you just mentioned, that it's a B2B business, whereas the end user is where the money is being made right now. Will that translate into having the data source providers, technology, and so on, also, being able to generate more revenues and continue to grow at the same speed is the choice you're really making. My personal choice would be, if you want to play travel, it is far easier to buy either hotels, airlines, or related businesses. That said, TBO is relatively cheap in the current market, and therefore may not be a bad bet to look at.
I like that, relatively cheap, right?
He said it twice, just to be clear.
All right, well, we'll leave it there. Thank you very much, Anand and Shilpa, for joining us and running us through what you made of things. Appreciate it. Well, the first session of the 18th Lok Sabha began today as Prime Minister Modi and his Council of Ministers took oath as members of the House. What is on the new government's agenda? That's essentially what is on the market's mind as well. Sources now tell CNBC-TV18 that there could be a big boost to manufacturing in the government's 100-day action plan. Parishit is here with some of these details. Parishit, over to you.
Well, yes, there could be announcements for manufacturing and also for startups in the next 100 days. We heard that 3 proposals on new PLI schemes, such as for labor-intensive sectors, including footwear, toys and leather, are ready and they await cabinet approval. If the government approves them, they could come in the next 100 days. Also, there are 5 PLI schemes which are being reworked. So the proposal is to expand the number of product lines in these PLI schemes and also maybe extend the date for manufacturing. So, for example, if under textile, the date for starting manufacturing was 2 years from the application, that would be extended for 3 years so that the time period is more to applicants. So this will be for sectors like textiles, food processing, solar, bulk drugs and the pharma scheme as well. What we're hearing on food processing is that the government wants to establish smart food processing hubs across the country with a major thrust on making India a global player in the supply chain for processed fruits, vegetables, fish and dairy as well. There would be a greater focus on manufacturing and research in APIs and expansion of research-linked incentives under the existing PLI framework when it comes to pharma and bulk drugs. Electronics, automobiles, defense and mobile sector will continue getting a push, and now the focus will be on enhanced job creation is what our sources tell us. The Jan Vishwas bill, the first version of this bill was brought under NDA 2 and this decriminalized many unnecessary penal provisions of various laws which the industry was wary of. Now consultations are taking place with the industry and a list of more such laws are being made, and by the end of 100 days, a cabinet note is likely to have been passed by the government and a new bill would also be drafted on Jan Vishwas 2. And finally, a deep tech policy for startups is also in the works.
Thank you very much for that. And now let's get you through the next segment where we get you the top corporate voices who joined us on our show today. First up, Happiest Minds. The management reiterated its estimate of a 35 to 40% growth for FY25, driven by continued organic growth and the integration of 2 acquisitions that they had announced earlier this year. The company is also hopeful that demand will pick up in the second half of the year as they believe that their clients' customers cannot stay away from tech investments beyond 18 months. The company, the management reaffirmed their long-term ambition to hit $1 billion of revenues by 2031, which implies that from here on, the company will need to clock in a 22% annual growth year after year.
Well, from IT services to FMCG, Adani Wilmar management said that edible oil prices have increased between 5 to 8% so far in the first quarter. However, the company expects to see double-digit volume growth in Q1 with margins also projected to improve year on year. The food and FMCG basket is anticipated to grow over 20% compared to the previous year.
With that, it's time for a short break. We'll get you our popular segment, D Street Chatter, along with the top market events to watch out for on the other side. Stay tuned.
This fiscal year, we could have the units separated, 6 listed entities of the Vedanta Group?
I think so, because certain things are in my hand, certain things are not in my hand.
Okay.
It is in the hand of NCLT. NCLT normally take 3-4 months time, but sometimes they can take 1 or 2 months more also.
Love for cricket, the passion for cricket, which you've now, along with a whole bunch of your other tech friends, brought to the US. I mean, you were in New York for the big match between India and Pakistan. I mean, what does it feel like to have actually managed to bring cricket to the US?
Well, first, I mean, I'm fortunate enough. I've been to many tennis finals, the US Open final. I've been to Wimbledon. I've certainly seen a lot of Super Bowls. The Warriors here in the Bay Area have won the NBA finals. But the excitement that I had, and I went with my son to watch a World Cup cricket in New York. And, every Indian CEO that I knew was either going to be watching it live or watching it in person.
In person, either owning a team or at least supporting a friend's team.
And so it's...
Welcome back. You're watching Markets Forward, and it was a good day on Dalal Street. We ended higher, minor gains of about 0.2%, but significant recovery from the day's low. But what was the buzz in the dealing rooms? Nimesh is now joining in with D Street Chatter. Nimesh.
I remind it was a good recovery in the markets today, but it was the broader markets which relatively outperformed. There were big moves in the holding company stocks on the back of that SEBI circular, and even beyond that, there were a lot of buzz in the broader market stocks. But here's my list of the individual names. The first stock is Arvind Limited. That stock ended marginally lower after a large block, nearly 1.5% equity got changed hands. I understand the promoter entity was a seller, and some domestic mutual funds were buyer today. So the disclosures could be interesting there. The second name is Lloyd Metals. That stock has been consolidating for a very long time now, but now I understand finally the fundraising is on the cards. The companies like to raise funds both via preferential issue as well as the QIP, so that's something to track there. The third stock is Stellite Technologies. After a long time, some bit of traction seems to be back, and this particular name as well. There were buy flows at HNI desk, and the city is anticipating large order win for the company very soon. And the last is both PFC and REC. While the stocks recovered from the day's low, there was selling pressure from larger FIs in both these names, so expect high delivery volumes. And in general, there was selling pressure in the PSU stocks today.
All right, Nimish, thanks very much for that. Well, before we wrap, here's what you need to watch out for in terms of events as we come back tomorrow. Ekta is standing by with that. Ekta.
Thanks. Well, I'll start with the global events. There is a Eurogroup meeting. Spain will be coming out with their GDP data. From the US, we have Fed member Bowman as well as Cook's speech, the Red Book Index, S&P Case-Shiller's Home Price Index, Consumer Confidence for June, Richmond Fed Manufacturing Index as well. The IIFL Investment India Conference will have the likes of Pidilite, 360 WAM, FSN e-commerce or Nykaa, which will be showcasing there. In terms of AGMs, we have L&T Finance, Adani Green Energy, Bank of India, Asian Paints, and a couple of stocks going ex-dividends such as Tata Elxsi, Volta, Serra Sanitary Ware.
So the telecom spectrum auctions begin tomorrow. Ekta, thank you very much for that. And with that, it's a wrap on this edition of Markets Forward. We'll be back with more news and updates.
And, I don't know that we have enough of a farm system here, Shireen. I mean, I think if you look at what happened with soccer or football here in this country, Major League Soccer, what happened was you had a great farm system. Yeah. So you had passionate fans, like we have passionate fans in cricket. But the question is, how do you encourage that farm system? And so, whether it's Satya or me, we love cricket and we'll continue to champion and passionate it. We're coming up with our second season of Major League cricket here, and I'm part of the San Francisco Unicorn team, and so it's fun.
So the Hyderabad Mafia is not just taking over tech, it's bringing cricket to the US as well.
I think we'd like to say we're paying it forward, I mean, rather than, in this case, the Mafia. This is all about a passion, and cricket's a global sport. And actually the funny thing about sport just brings together people like no other activity. And, just the amount of excitement. But now we have to go win it all, right? I mean, we've just got to the, Super 8s. And unfortunately, the India-Australia match, I have a board meeting on that day. So it's going to be...
Big conflict.
No, the board meeting is going to take priority. But, I'm going to perhaps sneak a look now and then at what's happening.
I would imagine.
Poor oral health wreaks havoc on daily life, causing pain, disability, loss of productivity, and low self-esteem.
In India, you see a lot of gum disease, which is also promoted by things like tobacco and supari.
Poor oral health is linked to serious systemic issues like heart disease, Alzheimer's, digestive problems, bacterial pneumonia, preterm delivery, and cancer.
If your teeth, the way they meet, what we call occlusion, is not proper, it can lead to other damage to the joints, to the gums. We have bone loss around the teeth.
Use a soft brush, destroy your brush, don't destroy your teeth. Brush in a vertical or elliptical motion, not horizontal.
Hello and welcome to Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening: the Sensex and the Nifty recover from their opening lows, end with marginal gains. Metals and PSU stocks under pressure. Auto and FMCG stocks lead the gains. SEBI conducts search and seizure operations at Quant Asset Management Company's headquarters in Mumbai. The fund house says it will provide all necessary support and continue to furnish data to the regulator. The impact of AI will be bigger than mobile and cloud, says the president of TCS in North America, Amit Bajaj, adds that business confidence is robust, but large clients in the US are in wait-and-watch mode ahead of the elections. Naspa's own process writes down its entire Baiju stake worth $493 million to zero, attributes the decision to inadequate information on the edtech firm's edtech firm's financial health, liabilities and future outlook.
मैं नरेंद्र दामोदर दास मोदी.
Prime Minister Modi takes oath as a parliamentarian for the third time in the first sitting of the 18th Lok Sabha. Resurgent opposition demands a debate on the paper leak issues and is already locking horns with the government on the appointment of the pro tem speaker. Student protests intensify in the capital after National Testing Agency delays the NEET postgraduate exam as a precautionary measure after Bihar and Gujarat police in Maharashtra register another case of an alleged NEET paper leak. A 100-day plan for the manufacturing sector is in the works. Sources say the government will take a call on new PLI schemes for footwear, leather and toy sectors, as well as look at modifying 5 other PLI schemes, including textiles and bulk drugs, to attract more investment. A deep tech policy for startups and a second law to remove unnecessary penal provisions impacting businesses also on the cards. Major labour and trade unions asked the finance minister to hike the minimum wage from 15,000 rupees to 26,000 rupees, also called for higher allocation to central schemes like midday meals and child development services. At least 19 killed in Russia's Dagestan province after gunmen attack a synagogue, an Orthodox church and police checkpoints. Russian authorities have called it a terror attack. No one has claimed responsibility so far. Israel's Prime Minister Benjamin Netanyahu says the war will continue even if a ceasefire is agreed on with Hamas. Israeli forces claim to have killed a senior Hamas weapons expert. More than 37,500 Palestinians have died in the last 8 months, according to officials in Gaza. As always, the day's market action to start with. The markets did recover, coming off their opening lows, ending the day finely flat with a slight positive bias. The Nifty managing to stay above the 23,500 mark. So that's it, a very flat close, but as we pointed out, off the intraday lows. 36 points higher for the Nifty mid-cap up by about 147 points. ICICI Bank up by about 1% today. Reliance Industries down by almost 1% this afternoon. So those were some of the key stock movements. Prashant is standing by now to wrap up the day's trading action for us. Prashant, a muted Monday.
A very good session all told by 3:30 today, because the market in the morning looked bad. I mean, we were down about 150, 160 odd points, and by close, we were up almost 40, 50 points. So this is, a big improvement, and through the course of the day, the market looked better and better. Now, the Nifty, of course, will tell you that story on your screen. Nifty Bank maybe a little flatter. The Nifty Bank, remember, last week was the outperformer with a 3.5% gain, but no real follow-through today. Mid-caps and small caps. Mid-caps did better. Small caps, not so much on your screen. Now, the large-cap stocks which did well, Mahindra and Mahindra, I mean, it's basically continuity. M&M has been doing very well. There's more gains there. Shriram Finance, one of the best-performing NBFC names. There was Power Grid, Grasim and Sun Pharma. Sun Pharma, of course, had news flow, which also participated. On the downside, there was Indocent, there was Cipla and Adani Ports, which were 3 other top losers. Now, in the broader markets, advance decline was almost evenly matched, although advances outnumbered declines, but not by much. Holding companies were all up and about between 10 and 20%. Bombay Burma, for example, case in point on your screen. Root Mobile was up big time. There was Exicom, fairly recent listing. Bombay Dyeing was up and about. Tube Investments, there was TBO Tech, there was initiation from a foreign broker, Hikal, D-Link India, Greenply, Zodiac Clothing, out of the blue, but big volumes, up 20% today. On the downside as well, there was a fair bit of volume which was done. SAIL, Container Corporation, RCF are some of the names. Ujjivan Small Finance Bank, they lowered their guidance in the analyst meet. HFCL was down, NFL, some of these fertilizer stocks, actually a lot of them were down and out. Union Bank, Swan Energy, Mapma India had a big last week. It saw some profit booking. Policy Bazaar and Credit Access are some of the other names which also saw small pullbacks. All in all, a decent session given the fact that the market started sharply lower early today. Back to you.
All right, Prashant, many thanks for joining us. A quick check on the monsoon tracker. Meanwhile, the Met Department has predicted heavy rainfall along the western coast over the next few days, and this includes coastal Karnataka, Kerala, Tamil Nadu, Gujarat, Maharashtra and Goa, with the southwest monsoon winds advancing further into Gujarat. Regions of North India and Central India may witness higher rainfall over the next few days, bringing some relief. Now, the market regulator SEBI has conducted search and seizure operations on Sandeep Tandon-owned Quant Mutual Fund as part of a probe into suspected front-running. According to our money control report, citing sources, the search and seizure operations were conducted across 2 locations, Mumbai and Hyderabad, on Friday. Now, Quant dealers and persons connected with the case were also questioned. The case allegedly relates to front-running, but the exact nature of the allegations could not be ascertained. It's also not clear if the management is under investigation or whether the probe relates only to external parties. Quant Mutual Fund is founded by Sandeep Tandon. The fund received a mutual fund license in 2017. It's been the fastest growing mutual fund in the country, with assets rising from 100-odd crores in 2019 to more than 90,000 crore rupees currently. In a statement, Quant said it has received inquiries from SEBI and it is fully committed to cooperate with the regulator. Now, Grow, another company in the dock, has clarified that no fraud took place after a user took to social media alleging that the investment app debited money from his account but did not invest in the mutual fund scheme. In its response, Grow said that no money had been deducted from the customer's bank account, adding that the customer never made the investment in question. In a subsequent post, the user had claimed the matter had been resolved and the money had been refunded. Grow said that they have credited the money to the customer in good faith. Now, the impact of artificial intelligence will be bigger than mobile and cloud. That's the word in from the president of TCS in North America, Amit Bajaj. Speaking to me earlier today, Bajaj said that business confidence is robust, but large clients in the US are in wait-and-watch mode ahead of the elections. TCS also observed that the company's spends on AI remain measured as adoption of the technology will take time to achieve scale. Take a look. You know, this is really the mother market for you, Amit, and you've been here over the last few years running the North American business. What's the sense that you get in terms of business confidence, in terms of a return of discretionary spending capacity, discretionary spending power? Is it looking any different today from the last time that you spoke at the end of the quarter?
I think the overall confidence is quite robust, I would say, Shireen. But in the short term, we're going through an election year. There is fair amount of tailwinds that we have from, good employment rates, good consumer demand, but there are also sense of headwinds with government spending, with inflation, with interest rate environment. So I think while the demand is holding up and businesses' top line is quite strong, they are still taking a cautious approach, investing, but being measured.
And when you say investing, is it incremental investment or is it really redeploying capital from one area to the next?
I would say the latter. So AI is very, very real, and it's everyone wants to invest in that.
So where are they pulling money out of and putting it into AI?
And the AI has both an applicability on the growth side, but also on efficiency and cost side. So at the near term, you can deploy the technology in business as usual activities and fund your innovation and growth cycles from there.
So pause for now, you believe at least through 2024 till the US elections are out of the way, which is November. So it pretty much takes care of this calendar year.
Yeah, I would say measured. We are going to see spending, but there's going to be a dislocation of spend. And it's going to be in certain ways self-funding, at least for now.
Well, you can catch that entire conversation with Amit Bajaj, the president of TCS in North America, at 9:30 p.m. and 7:30 p.m. on CNBC-TV18. Well, speaking of CNBC-TV18 exclusives, here's another. We learned from sources that Bharti Airtel has mega plans in the works to capitalize on its telecom tower vertical, that's Indus Towers. The firm is in talks with Vodafone PLC to buy an additional 3% stake in Indus Towers. Nisha is standing by with all the details. Nisha, what are you picking up?
Thanks for that. Yes, with an eye on telecom sector overall seeing some improvement with high expectations of a tariff hike as well. Well, the direct beneficiary will also be the telecom tower business of Indus Towers, and that gives Bharti Airtel a lot of confidence to come up with mega plans. In fact, sources with direct knowledge have shared with CNBC-TV18 that there is a two-pronged strategy which is at works. First, to consolidate the business of Indus Towers. Remember, they stopped short of 49% stake in the last stake that they bought from Vodafone, and now we gather from sources with direct knowledge that they are in talks to buy out the remaining 3% stake from Vodafone PLC. And not just that, it will also benefit Indus Towers because talks are meandering around a large part of the proceeds of that stake sale, which Vodafone should infuse and pay back some part of the dues to Indus Towers. Remember, Vodafone Idea owes dues to the tune of 5,400 crore rupees. Also to remember that the last block deal by Vodafone exempts the promoters from a lock-in period from the stake sale and buying more shares. The second part of the strategy is the data center Nextra, which is housed in Bharti Airtel at the current moment, dependent on Bharti Airtel for a large part of its business performance. That Bharti Airtel could be looking at merging with Indus Towers is what we gather from sources with direct knowledge. This for three reasons: value unlocking of Nextra, second, giving an exit to Carlyle, which owns 24% stake in the company, and third, also to make Bharti Airtel asset light. Remember, Indus Towers is a cash throwing business and their capital can be utilized for further expansion of high growth potential area of data centers. We reached out to all the companies named in the story. We did not get any comments on the queries that were given, but this is the two-pronged strategy that Bharti Airtel could be working on in capitalizing on Indus Towers' potential going forward as the health of telecom sector is likely to improve with the tariff hikes.
All right, Nisha, many thanks for joining us. Now, the Adani Group held its 32nd annual general meeting today. Group Chairman Gautam Adani claimed that the Hindenburg report was designed to defame the company, terming the allegations baseless once again. The US short seller Hindenburg had accused the Adani Group of manipulating its stock prices, allegedly using tax havens, which triggered a big fall in share prices last year. More than a year on, the Adani Group has regained most of the value that was lost. Take a look.
The attack was a calculated strike. 2 days before the closing of our follow-on on public offer. It was designed to defame us, do maximum damage, and erode our hard-earned market value.
Gautam Adani. Dutch investment firm Proces has marked down its entire investment in embattled edtech company Byju's to zero, citing a significant decrease in value for equity investors. Proces currently holds 9.6% stake in the company, and the development comes amidst the Proces-led group of investors calling for an ouster of the current management and challenging its rights issue. Ritu joins us now with more on these developments. Ritu, Proces now writing down its investment in Byju's, and this of course follows other investors doing the same.
Yes, it does, and it's been process. We've seen Proces, over the course of the last year or so, bringing down the value of its investment. And now Proces, which is the largest external investor, by the way, in Byju's, has written down the value of its 9.6% stake in the company down to zero. And it cited a significant decrease in value for equity investors while doing so. Now, over the course of the last 5 years, Proces had invested about $536 million into Byju's across multiple rounds. And in its latest annual report, it said that it recorded a fair value loss of $493 million on account of this investment that it has made. Now, a Proces spokesperson told us that the write-down was primarily because Byju's had, and I quote, inadequate information on the company's financial health, liabilities and future outlook, end of quote, that it provided to Proces. Now, Proces's move follows BlackRock, which is the world's largest asset manager, also recently writing down its stake in Byju's to zero. The move also comes amid a group of investors led by Prosus seeking to oust Baiju Ravindran and co-founder Divya Gokulnath from the company, changing the management, revamping the board. These investors have also challenged Baiju's recently concluded $200 million rights issue in court, and the company cannot really use these funds until the courts dispose of the matter. Baiju's is also facing an acute financial crunch. It has had to resort to layoffs, not so in the distant past, and it is entangled in multiple legal disputes, including bankruptcy pleas that it is facing from several of its creditors across courts. Baiju's is also in the middle of all of this, seeing an exodus of the senior management, the board members in the past year as well, including from the Prosus representative because of governance and other concerns. And it is amid all of this turbulence that you now have investors like BlackRock and more recently Prosus writing down their investments to zero in what was once the most celebrated edtech company that was at its peak, valued at $22 billion. Now its value being written down to zero.
Well, what a cautionary tale it's turning out to be there as far as Baiju's is concerned. Ritu, many thanks for joining us. We will head into a break, but up next, Prime Minister Modi takes oath as a parliamentarian for the third time in the first sitting of the 18th Lok Sabha. A resurgent opposition demands a debate on the paper leak issue. That and more when we return. The Indian markets have not just grown, they've broken several records in the last 25 years.
India's contribution to incremental global GDP was as low as 0.2% 25 years ago.
Over the last 25 years, CNBC-TV18 has closely followed the remarkable ascent of India's pharmaceutical sector.
There was a time 25 years back that it was all about the FIIs. If FIIs would buy, markets would rally. If FIIs would sell, market would fall.
Earlier, we were net importers of steel.
From IT services to SaaS, from consumer electronics to space tech, from mere programming to AI ML.
Cars, two-wheelers, three-wheelers, commercial vehicles have significantly become much more expensive than they were 2 decades ago.
Discounting is high there, but their focus is squarely on the 125cc segment.
Now it is contributing 16% of incremental global GDP.
Now we are looking at exporting the steel that's made here in India.
Welcome to the first ever India Business Leader Awards.
Cars, two-wheelers and vehicles generally being manufactured today are much lower on emissions and much higher on safety.
India's technology.
The first session of the 18th Lok Sabha began today. Prime Minister Modi took oath as a parliamentarian for the third time along with his council of ministers. In his pre-session remarks, the Prime Minister took a jibe at the opposition over the emergency imposed by the Congress party 50 years ago on the 25th of June. Opposition MPs, including Rahul Gandhi, held copies of the Constitution, while Prime Minister Modi took oath. Ahead of the session, India bloc leaders, including Rajya Sabha lawmakers Mallikarjun Kharge and Sonia Gandhi, were seen protesting with copies of the Constitution. A resurgent opposition is expected to corner the government on the alleged irregularities in the NEET and UGC NET competitive exams. The opposition has already locked horns with the government over the appointment of the pro tem speaker. As per convention, the post is reserved for the Lok Sabha MP with the highest number of terms. The primary role of the pro tem speaker is to administer the oath to new members. The Congress said the post should have gone to 8-term Lok Sabha MP K. Suresh, said the government appointed 7-term MP Bharatwari Mehtab, who switched to the BJP from the Biju Janata Dal ahead of the Lok Sabha elections as the pro tem speaker. Well, the new government's 100-day plan for the manufacturing sector is in the works. Sources tell CNBC-TV18 the government will take a call on new performance-linked incentive schemes for footwear, leather and toy sectors. It may also modify 5 other PLI schemes to try and attract more investment. Parikshit is standing by with the details. Parikshit, take us through what is on the anvil, both in terms of new PLI schemes as well as those that are up for modification.
Well, encouraging manufacturing in new technologies, attracting more investments in PLI-related sectors would be a priority for NDA in its third term. We heard that 3 new PLI proposals have been prepared by the government, and it remains to be seen whether they will be finally approved in the next 100 days or so. So this includes the labor-intensive sectors for footwear, toys, and leather. And this also shows a priority for the government to increase employment in manufacturing. Similarly, there are 5 PLI schemes which could be up for modifications, including textiles, food processing, solar, bulk drugs, and the pharma sector. The government is trying to see if the number of product lines in each of these PLI schemes can be increased so that more applicants can apply, and also the time limit for starting manufacturing can be increased, for example, in textiles from 2 to 3 years. So these are some of the changes that could take place in these 5 PLI schemes. When we speak about food processing, the government is keen on setting up smart food processing hubs across the country and make India an important player in the global value chain for food processing in fruits, vegetables, fish, and dairy products as well. At the same time, when it comes to pharmaceutical sector, the government wants to have a greater focus on manufacturing and research in APIs, and within the existing PLI framework, have an expansion of the research-linked incentive schemes. When we speak about the existing sectors, the government wants to further encourage manufacturing in electronics, automobiles, defense, and mobile, with a greater push for job creation in these sectors. Decriminalizing laws and removing unnecessary penal provisions will be a priority in the 100 days as well. So if there was Jan Vishwas 1 in NDA 2.0, there will be Jan Vishwas 2, which will be ready within the 100 days, and a bill will also be prepared. A deep tech policy for the startup ecosystem is also in the works, and this will be to encourage strategic partnerships, innovation, research, and manufacturing in the startup ecosystem in India.
All right, Parikshit, many thanks for joining us. Finance Minister Nirmala Sitharaman held pre-budget consultations with representatives of the trade unions and labour organisations. The unions presented their list of demands, including a hike in minimum wages from 15,000 rupees to 26,000 rupees. The representatives have sought that wages of Asha, Anganwadi and midday meal workers be increased as well. The unions urged the Finance Minister to ensure statutory minimum support price for all farm produce based on the MS Swaminathan Commission. Student protests have intensified across India after the NEET postgraduate exam was postponed over the weekend. The centre says the decision was taken as a precautionary measure following allegations of irregularities in the NEET UG and UGC NET exams. Meanwhile, the Maharashtra police have registered a case against 4 suspects, including 2 teachers, over the alleged NEET paper leak. Earlier, several suspects were arrested in Bihar and Gujarat, and the probe was handed over to the CBI. Archana is here now with more on what is going on. Archana, many developments have taken place over the weekend. Where do things currently stand? I mean, the ambiguity and uncertainty over the road ahead also continues.
Yes, Shireen, in the wake of the NEET undergraduate entrance exam controversy, the past week was turbulent for millions of students, their anxious parents, and above all, India's education system. Let's quickly update our viewers on the latest developments. The CBI, which filed an FIR in connection with the malpractices in the NEET entrance exam following the allegations of paper leak, mass copying and irregular marking, has sent teams to Patna and Godhra for further investigation. So far, 18 people have been arrested in this case. Now, what is the CBI probing in this controversy? It's investigating conspiracy, cheating, impersonification, breach of trust, and destruction of evidence by candidates, coaching centers, middlemen, and even probing the role of public servants. Now, shocking details have emerged from Bihar so far. The Bihar police, which was investigating the case before the case was taken over by the CBI, has revealed that members of the Mukhiaji gang, which is accused of orchestrating the paper leak, allegedly received the solved answer sheet of the exam a day before it was to be held. The gang allegedly printed the answer sheets and gave them to NEET candidates. Now, in another development on Sunday, out of 1,563 students who were asked to take the NEET retest over grace marks, Out of them, only 813 appeared for the retest. Remember, questions were raised after some students received grace marks, which is unusual. The NTA, or the National Testing Agency, which conducts NEET, justified their move by saying that grace marks were given to candidates to make up for the loss of time at the respective exam centers. There were allegations that this led to the inflation of marks and in turn led to 67 students from the same center receiving a perfect score of 720 marks. 6 students, my apologies, from the same center receiving a perfect score, and overall 67 emerged as toppers. Now, what has the government said so far? While consistently denying any paper leak, the government has maintained that the incidents of malpractices were localized or isolated, and it's not fair to jeopardize the careers of lakhs of candidates who cleared the exam rightfully. Amid mounting pressure, the government has removed NTA chief Subodh Kumar Singh and put him on compulsory wait till further orders. Moreover, the Education Ministry has formed a high-level panel to suggest exam reforms and review the functioning of the National Testing Agency. It's headed by former ISRO chief K. Radhakrishnan. There's even more bad news. The NEET PG entrance exam, which was scheduled to take place yesterday, too has been postponed. Now, as India's Education Minister Dharmendra Pradhan took oath in Parliament today, many eyes will be on him to resolve the massive crisis that has dented the credibility of India's education system. Remember, over 13 lakh candidates out of around 24 lakh qualified in this NEET entrance exam to compete for just 1.8 lakh seats. Back to you.
Ashra, many thanks for joining us. And with that, it is time for us to wrap up this edition of Business 360. But before we go, a quick note, a daily wrap of the top headlines will hit your inbox every day before we call it a night. CNBC-TV18's daily newsletter on LinkedIn features the top 10 stories on markets, corporates, economic insights and financial highlights. So subscribe now, get the CNBC-TV18 edge. The news continues after this short break.
The Samarth Assistive Devices Conclave 2024 was organized under the aegis of Samarth Initiative, which witnessed meaningful conversations about solutions and assistive devices that can significantly improve the lives of people with disabilities, making the world more accessible for everyone.
The idea is to create a narrative that the people have so much of potential, to create some role models. And under the Samarth initiative, we are trying to support so many para-athletes. We are wanting to train them so that they can bring laurels to the country, which will really motivate so many others. The other thing is, how do you really create awareness? How do you really create inclusivity? And amongst that, what we have done is, we have a pledge, and more than 300,000 have already taken this pledge about inclusivity. So we want more and more people to really join this movement. Today, under this program, as you know, we have given 72 assistive devices. Going forward in the next 3 years, we are going to give 684 assistive devices to people so that we can make their lives better. We would never be satisfied until each and every person really joins this movement and makes it upon himself to make sure that each one of us makes this society a very inclusive one.
Been at the forefront of cutting-edge innovation over the last 25 years.
It's the retail which is the driving force for the market right now.
Clearly, we have arrived.
minutes, even as far as UP is concerned.
Things are not looking very good for the ruling regime at this juncture.
Of course, things are changing, but it looks like a formidable victory at this point in time as far as the NDA is concerned.
Harnessing the power of over 25 years of world-class business news journalism.
You're getting all of this analysis live from the CNBC-TV18 election headquarters.
Oral health is often hailed as a window to overall health, revealing hidden signs of diseases like osteoporosis, diabetes, and HIV. From dental caries and gum diseases to orofacial anomalies, these conditions can manifest as early as birth. The World Health Organization estimates that nearly 3.5 billion people worldwide are affected by oral diseases, with 2 billion suffering from tooth decay. 3 out of 4 people with oral diseases are from middle-income countries. Poor oral health wreaks havoc on daily life, causing pain, disability, loss of productivity, and low self-esteem. For children, it disrupts sleep, growth, behavior, and learning, impacting socialization and self-worth. For the elderly, tooth loss and decay affect eating and quality of life. Mental health suffers too, as poor oral health leads to social withdrawal and anxiety. Moreover, poor oral health is linked to serious systemic issues like heart disease, Alzheimer's, digestive problems, bacterial pneumonia, preterm delivery, and cancer. In India, oral diseases are a leading cause of disability, affecting all ages and socioeconomic groups. Quality oral healthcare is largely restricted to urban areas. Statistics reveal that 48 to 86.4% of Indians aged between 35 to 45 suffer from dental caries. Up to 78% of adults and 96% of the elderly battle gum diseases, and 35% experience tooth loss. Shockingly, only 51% of Indians use a toothbrush and toothpaste. 28% brush twice a day, and just 4.5% visit the dentist. Oral cancer is a major concern, ranking amongst the top 3 cancers in India and accounting for over 30% of all cancer cases. Tobacco consumption is the primary cause, responsible for 80% of oral cancers, especially amongst men over the age of 40. Tragically, late-stage diagnosis leads to poor treatment outcomes. Today, we have with us 2 distinguished dentists, Dr. Suchetan Pradhan and Dr. Sunil Bulabai, to discuss the critical issue of oral health. Welcome to the show.
It is absolutely required. It's a mandate that you should brush twice a day.
People who used to live 66, 70 years now are living 80, 85, 90. But their oral health that they looked after when they were in their 20s, 30s and 40s was very poor.
In India, you see a lot of gum disease, which is also promoted by things like tobacco.
The TM joint, the teeth and the gums, okay? They all have to be in harmony.
Dr. Pradhan, let me start with you. Around 60% of Indians have some kind of oral health issues. Only 5% seek proactive care. Why is that?
So there are 2 or 3 reasons for that. Let me keep it extremely short. First of all is the lack of awareness. 2 is the lack of economic abilities to spend on dentistry. And the 3rd is not that much peer pressure, especially in the rural areas. In the urban areas, and there was a study that we did which said that more than 50% of the kids in the slums in Mumbai do it, but they don't get dental health.
Okay, but Dr. Sunil, one of the statistics say that only 50% of Indians brush twice a day. Do you think that's simply because of a lack of awareness? Or do you think it's also a cultural issue where, one of the statistics or reports that I was reading indicated that we just don't feel the need to brush more than once a day?
It's not a question of need. It is absolutely required. It's a mandate that you should brush twice a day. In the morning to remove everything that has been lying in your mouth while you're sleeping at night, and the acidogenic bacteria that work on it and create harmful acids, etc., and to generate freshness. And in the evening, of course, to remove all food debris and material that may be going to remain in your mouth through the night. You clean it up, you rinse it, and then you go to sleep.
Okay, but what happens if you don't? If you can just explain to us what are the risks of not doing so?
So what happens is there's a buildup of what is known as a biofilm on the teeth, and the biofilm contains bacteria, especially bacteria like strep mutans, which is what causes cavities. So, and of course, gum disease has different bacteria, but there is a whole bacterial biofilm that happens in the teeth. So if you don't remove that biofilm, then the bacteria will remain there and they will act on the gums and of course on the teeth. And so the gum disease and the dental caries both will be a factor if you don't remove the biofilm. So it's extremely important, especially at night, because when you've just eaten and then you go to sleep and it has time to act.
Is it more of a rural problem? Is it also as prevalent in the urban population?
So I would assume, looking at the stats, that the rural problem would be slightly more because also availability of toothbrushes, toothpastes, and other oral health aids is much less than in the urban areas. But awareness, and as Sunil said, awareness and knowledge has to be imparted so that people will be more, able to do what they have to do.
What is the most common issue that you see when it comes to oral health in children?
So, of course, first is the initiation of the brushing techniques that the mothers and the parents have to do into their kids. And then, of course, there's a lot of milk bottles caries and those problems that happen. People continue to give milk bottles instead of breastfeeding and then giving whole kind of food. And then you have dental caries, which is again a problem. What we can do is we can prevent this from happening by actually doing sealants and things like that in kids when their molars come out in the oral cavity. So if you intervene at that stage, you can have no dental issues that need treatment at all. And we can remineralize the teeth.
So what age do you think oral health should probably start being looked into very carefully?
I mean, when the teeth come out in the oral cavity, you've got to brush them. So that's at about 6 months.
Okay.
You'll have to start the brushing. You can use your fingers and, you don't have to use toothpaste, for example. And then as you go along, you will be telling the child how to brush by himself, herself, and then take them to the dentist when the molars start erupting out, and then get the sealants done. So that would be a good age to take them.
The incremental amount of junk food that children have been eating has increased. Has that affected dental health in what you've seen in your practice?
Absolutely. And not only just junk food, but sugars. Sugars by themselves don't cause cavities, but the bacteria and sugars are a lethal combination. So when the sugars are present in the oral cavity and bacteria are present, they will cause demineralization of the enamel and then going on to the dentine and so on and so forth. So that's going to happen. So therefore, it's very important that the parents are also instructed in the dietary habits that they should inculcate in their kids. And that's very, very important.
Okay. Well, Dr. Sunil, what about the dental health issues that you see in adults? What is the most common dental health issue that you see?
In India, you see a lot of gum disease, which is also promoted by things like tobacco and supari. You see people who have broken chipped teeth because of betel nut, that is supari again. And of course, regular things like root canals, missing teeth, everything. We have a multitude of problems, but most prevalent would be gum disease.
What is gum disease and what are the symptoms? What are the signs of it?
Right. So gum disease, basically when you, like Suchetan earlier said, there's a biofilm that deposits around the tooth. That then gets infused with microparticles of food. That deposits in the neck area between the tooth and gum. Having done so, it goes on the inside part of the gum. It's like a collar. It goes on the inside part of the gum, causes the gum to break down, get infected, swollen, and bleeding.
Okay.
And when it goes a couple of millimeters deep, it is often impossible to clean with home care. You have to go to a dental office to get that removed properly so that it can regenerate to normal.
Okay.
If you do it at the preliminary stage, it will come back to normal. But if it goes to an advanced stage, it will only come back to normal to a degree and you will lose some gum.
Oh, okay. And what happens if you lose some gum?
As you keep losing gum, along with the gum, the bone underneath the gum, which is supporting the tooth, keeps going down. And then you have a lack of stability. And eventually, with the passage of time, you have the teeth becoming mobile and you have advanced gum disease and stuff, which will need surgical procedures to treat.
Okay, and that can result in tooth loss as well.
Tooth loss, mobility and loss.
Okay, all right. Dr. Pradhan, what do the elderly face when it comes to tooth issues, and what would you recommend when it comes to oral care in the elderly?
So, first of all, I must say that the longevity of the lifespans has increased quite dramatically. So people who used to live 66, 70 years now are living 80, 85, 90. But their oral health that they looked after when they were in their 20s, 30s and 40s was very poor. So we have a lot of elderly with two major issues. One is worn down dentition completely, and that of course leads to a lot of other complications like TMJ issues and stuff like that, the temporomandibular joint issues. And secondly, just loss of teeth. So they are toothless, edentulous, what we call them. And that poses another set of problems because dentures are not a solution. So then we have to go in and do more invasive treatments for them to be able to chew. So function is the most important thing that we have to get back into the elderly, and that we're seeing all the time now.
Okay. Well, Dr. Sunil, you know, one of the key issues which I was reading about in terms of statistics is also bad breath in India. That probably is linked to a lot of the factors that we've already spoken about. But what does one do about it? How can one actively treat it?
The first thing you do, bad breath is called halitosis in technical terms. The first thing you do to prevent bad breath is to make sure that your mouth is clean, is free of debris, because when the bacteria break down food material and food particles, they cause putrefaction and odor. And that odor manifests as bad breath. You also can, you know, frequently, if one is eating at long intervals, one can have a few sips of water in between so that, you know, you are kind of refreshing the oral environment and making it cleaner again so that, you know, the odors don't come out. You can do harmless things like put a clove in your mouth once in a while, because, you know, if you go to Europe, there's coffee drinkers. Now, coffee itself, when you drink black coffee, it can give you bad breath. I mean, you know, it's not the kindest thing to deal with. So the simplest of things can be used to combat bad breath. And then there are hundreds of reasons. You can write a thesis on it, like acidity in the stomach and, you know, sinusitis, and there are hundreds of reasons that can promote bad breath. But the principal reason for bad breath is food deposition, microscopically and otherwise, in the mouth.
But any kind of foods which are helpful for bad breath and which should probably be avoided?
So all detergent foods, when you say detergent foods, you're referring to an apple, you're referring to celery, you're referring to anything that has fiber and is non-sticky. Basically, all detergent foods will cleanse the mouth and help you combat bad breath. Anything that is sticky, be it, you know, the known devils are things like sweets and candies and chocolates, right? The unknown devils are potato wafers, cookies, because they all have refined sugar as the end products that will stick in and around your teeth and gums. And eventually, if it's not cleaned meticulously, you will have bad breath.
Can tooth problems manifest as other symptoms and not just a toothache? Say, for example, a earache or a migraine?
Absolutely. In fact, so the joint, the TM joint, the teeth and the gums, okay, they all have to be in harmony. And if any one of them is disharmonious to the other two, then you will find deleterious effects on the other two, or that particular reason. So what happens is when you have wear of the teeth, you will also find TM joint issues, and that leads to very severe, sometimes very severe earaches and migraines and pain around the temples and things like that. So people don't realize that it's because of the teeth that you're having this, and they go all over the place, and eventually they land up to our doorsteps, and then we can help them out. So we're happy that we can help them out.
We're going to take a short break, but we'll be back with more questions. Stay tuned.
TV18 emerged as the clear leader on television and YouTube on election counting day.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community.
Welcome back. Well, we are discussing oral health today on the Medicine Box. Well, Dr. Pradhan, I'm going to ask you about how important is it to have aligned teeth and what should one do?
Again, aligned teeth are not just for cosmetic reasons. They're also for functional reasons. As I said before, if your teeth, the way they meet, what we call occlusion, is not proper, it can lead to other damage, to the joints, to the gums. We have bone loss around the teeth. So there are other things that can happen. So alignment, people have this misconception that alignment is a cosmetic treatment. It's not only a cosmetic treatment. Of course, it can also be a cosmetic treatment, but it is also a very functional treatment, and alignment is extremely important.
Okay, so can you do that at any stage in life, and how would it be? Would it only be via braces?
Yes, it's mainly via braces, alignment of the teeth. Cosmetically, we can use veneers and stuff, and that's a different issue. But alignment is by, and today we have invisible braces, so to say, which are more digitally orientated, and we have algos which give us the final result before we start, and so those are called aligners. So we have aligner therapy, which will enhance at any age.
Okay. Well, Dr. Sunil, what would you recommend to somebody who has lost their teeth?
If I could replace any missing tooth as a dentist, it would be with an implant. Yeah. Because an implant, which is a screw-like structure made of titanium in most cases, goes into the bone after you analyze the height and the width of bone available. It then takes a permanent tooth as a replacement on it, and it allows somebody to function most normally, rather than do something else which will either involve support from the gum, or you have to grind down an adjacent tooth and make something like a bridge, which is again, in my opinion, not as it is a little bit more mutilating compared to just doing an implant, which will reinstate a tooth for what it is.
Okay, but is it necessary to replace a tooth?
It is 100% necessary to replace a tooth. We were just discussing earlier about tooth alignment, right? When you do, what aligners or braces does is changes root positions in the jaw. When you change root positions, you support your jaw bones better, and your youthful look and your entire projection of your face is far more positive than if you have to just change the position of the crowns with veneers, etc. You know what I mean? Yeah. Because your bones are filled with roots now. Yeah. And to answer your question, yes, aligners will help you and will reposition all the teeth, but to some extent, braces will be the whole full Monty.
Okay. What is probably the most common cosmetic dental procedure which is currently underway, and how safe or unsafe is it?
The most common procedure that I think all of us, Suchetan, I'm sure will agree with me, which we do in our offices to please somebody. You're not always working on all teeth, you're working on some, or maybe a couple of them. The most common procedure is bonding, because you take materials from your rack, you treat the tooth in a specific way, and you apply the material to effect a correction or repair the tooth or do a cosmetic filling where it's very visible. And that bonding can be done simply in a few minutes. Only when the bonding procedure cannot be effected, you think of the next thing. Like, instead of a bullet, you use a cannonball now. You know what? You're using a crown, or you may use a veneer sometimes.
Okay, but what are the long-term implications of it is what I mean.
No, it has to be carefully planned. You can't, function always comes before aesthetics. That means you have to evaluate that the function is going to be properly fulfilled. The client is not going to be left with a disadvantage like sensitivity or TMJ problem or something. And then you plan the teeth, you put it on an artificial articulator, you tell the lab to make sure everything's in balance and then do it.
Okay. Well, Dr. Pradhan, you know, oral health, how indicative is it for other diseases, say such as diabetes, HIV, arthritis, osteoporosis, and yes, oral cancer as well?
So it's, I mean, it's not, you can't really diagnose, say, I can't say this is diabetic, this person is diabetic just by looking at the teeth.
But a red flag.
Yeah, so something is wrong. There's a massive red flag there, you know, and a lot of other issues, acidity, for example, you know, like we said, it's a continuous, the oral cavity with the gut. And that's a microbiome. Today, everybody is talking about it, and it's true. So we can see that something is wrong. Oral cancer, of course, is very obvious because you have lesions that happen in the mouth, and those we'll have to biopsy and check. And other ones we can suspect, and therefore we can investigate further and come to a conclusion.
So what would a red flag be for, say, a layperson who is monitoring their oral health?
So it's not just the teeth, it's also the gums. So you look at the gums, the color of the gums. You're looking at the, you know, the mucosa and the rest of the oral, the cheeks, the tongue. You can see all the way up to the tonsils. So you can see all of those areas. So anything which is inflamed, anything which has ulcerations, those will be red flags.
Okay. And when it comes to oral cancer, what has your experience been? How successful is probably reconstructive surgery? Do we see a lot of oral lesions in, say, the urban population?
I mean, that's one of our biggest problems, isn't it? Because of what we eat, the tobacco products, and also these pan parags or whatever, you know, the trade names that they have, the different trade names. And long-term effects of those starts with submucous fibrosis, then goes into leukoplakic patches, and then goes into full-blown cancer. So if they come to us regularly, we can monitor it and we can tell them, there's a red flag now, you better be careful. If not, if it goes into full-blown cancer, we have some of the best oral cancer surgeons in this country. And because of the prevalence of the disease, because of the very common prevalence of the disease, we have very good surgeons who are doing great reconstructive surgery in the city and in the country.
Okay. All right. Well, we're going to end this conversation by asking a couple of rapid-fire questions. Dr. Pradhan, I'm going to start with you. How often should one visit a dentist?
Every 6 months, and if need be, every 3 months.
Okay. And what should one do after every meal?
At least rinse your mouth. That is the easiest thing to do socially and otherwise.
Okay. Well, Dr. Pradhan, should one use mouthwash? Does it corrode enamel? And if so, how often should it be used and how should it be used?
Mouthwash is very controversial at this point. Alcohol-based mouthwashes should not be used. Rather than that, you can use oral hygiene tools like, you know, water picks and things like that, flossing, of course, which will help you maintain your oral health.
Okay, so you would recommend not using over-the-counter mouthwashes?
Not alcohol-based mouthwashes.
Okay, all right.
Natural mouthwashes are good.
Okay, all right. And what would a natural mouthwash be?
Which does not contain anything which is chemical or alcohol based.
Okay, all right. Dr. Pradhan, what are the signs of gum disease?
Bleeding, bad breath, and you know, bad taste in your mouth.
Okay. Dr. Sunil, are dental x-rays safe?
Yes, absolutely safe. They're low in dosage. Of course, everything has a limit. You can't make them in the hundreds on a client, but you don't ever need to. They're absolutely safe. Even the scan machines we have today, like I have a CAT scan machine in my clinic, it's very low in dose, so there's no problem.
Okay.
And if there's a pregnant woman or something, we wear a lead apron.
Okay. All right. Dr. Pradhan, how can one protect their teeth from damage?
Good oral hygiene and going to the dentist regularly, at least twice a day brushing.
All right. Dr. Sunil, best toothpaste and toothbrush to use?
Toothpaste is basically chosen for flavor globally. Use a over-the-counter toothpaste. Don't use a country-made toothpaste. Use a soft brush. Destroy your brush. Don't destroy your teeth. Brush in a vertical or elliptical motion, not horizontal.
Okay. And electric toothbrushes or normal?
When somebody cannot keep scrupulous oral hygiene by using a normal toothbrush is when one suggests, oh, they have a disability or they, cannot move their hands properly. That's when I would recommend an electric toothbrush. Otherwise, I would much recommend brushing manually and looking after your teeth. We were talking about tobacco and supari in a certain part of our clip.
Yeah.
I often tell my clients, addiction is something that is very easy to brush off, but not easy to give something up.
Yeah.
So if you want to have tobacco, don't pouch it in your mouth, don't keep it there, have it and finish it in 2 or 3 minutes. And supari, you are at the mercy of God, because supari is extremely bad in terms of breaking your teeth down. The number one cause of tooth breakage in India is supari. Number one cause in the West is ice.
And what about smoking?
Smoking will damage your lungs, it will stain your teeth, it will make them dark grey, blue, and often you can clean it up, but the damage is more inflicted in your respiratory system, your lungs.
And what is the worst thing you could do for your teeth?
The worst thing?
Yeah.
There's a lot of people who eat pan and keep it in their mouth, and that orange stain gets into the tooth, and they become unsightly to a point where even tooth whitening won't take it away.
Okay, all right. Dr. Pradhan, Dr. Sunil, it's been a pleasure to listen to all of your insights on oral health. A lot to learn and a lot more to delve into further as well. Thanks very much for taking the time out and speaking with us.
Thank you, Ekta. Thank you very much.
Young Turks at 21. Only on CNBC-TV18 and CNBCTV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market update. Hello and welcome to News Center. This is Parikshit Luthra. The controversy around the NEET undergraduate exam has left lakhs of students and their parents in despair. The cancellation of the NEET postgraduate exam just 10 hours before it was set to take place on Sunday dealt yet another blow to them. Following the move, student protests have intensified across India. The centre said the decision was taken as a precautionary measure. Following allegations of irregularities in the NEET undergraduate and UGC NET exams, the CBI has filed an FIR in connection with the malpractices. Meanwhile, the Maharashtra police registered a case against 4 suspects, including 2 teachers, over the alleged NEET paper leak. Several suspects were also arrested in Bihar and Gujarat, and the probe was handed over to the CBI. Amid mounting pressure, the government has removed National Testing Agency's Director General, Subodh Kumar Singh, and put him on compulsory wait till further orders. However, it has maintained that the incidents of malpractices were localized or isolated. The 18th Lok Sabha's first session began today. India's Education Minister Dharmendra Pradhan, who took oath in Parliament, faced chants of NEET and shame from the opposition.
नीट ये कोई नई चीज़ नहीं है, बीजेपी की पुरानी ये तरीका है। अगर आप पुराना उठा करके इतिहास उठाओगे आप, बीजेपी अपने लोगों को खुश करने के लिए पेपर लीक कराते हैं। और यूपी में ये बड़ा मुद्दा था और अब देखिए दिल्ली तक पहुंच गया ये बात। तो ये कितने करोड़ों परिवार के साथ धोखा किया इन्होंने।
सरकार की तरफ से तमाम बातों को मजबूती से और पूरी निष्पक्षता के साथ सदन के पटल पर रखा जाएगा। सरकार के पास छुपाने के लिए कुछ भी नहीं है। जो ये हुआ है इसमें जो भी दोषी हों, भले वो पेपर लीक हो या जिस तरीके से ग्रेस मार्क्स को लेकर छात्रों में चिंताएं रही हैं, ऐसे में उन तमाम बातों को ध्यान दिया जाएगा। सरकार गंभीरता से इस विषय को मॉनिटर कर रही है।
लाखों लोग बच्चे नाश हो गए, माँ बाप मेहनत उनके पैसे सर्वनाश हो गए, तो और ना आगे जा सक रहे ना पीछे हट सक रहे, तो क्या करें इन बच्चों को। तो आवाज़ तो यहाँ उठाने के लिए तो हमें चुने गए हैं, हम आए हैं सांसद में आम जनता का आवाज़ सुनाने, तो उठाएंगे, बोलेंगे, ये हकीकत है।
I'm now joined by Vrinda Swaroop, former Secretary, Ministry of Education, Vikram Singh, former DGP of Uttar Pradesh, and we're also joined by TD Dogra, former Director at AIIMS, New Delhi. Thank you very much for joining us. Let me go across to Dr. Dogra first. Dr. Dogra, this has put a lot of question marks on the competitive testing system in the country, especially for medical exams. Do you think this was always known that many of these tests are questionable when it comes to protocol? Many have said that the NEET exam was a Ram Bharose exam. For a sense, do you think it's high time we instill confidence about the testing system related to the medical exams?
You say medical examination have been there for a pretty long time. And at no time, very few times, means I have been at AIIMS, and we have been regularly conducting examination at AIIMS. But I have never heard of this, that paper leak was there. Similarly, I have seen that UPSC is conducting so many examinations for such a long time, but I have not heard of any paper leak from the UPSC also and from AIIMS also. The two institutions are available to us where the no leak of the question papers have ever been there or ever been claimed of anybody. The question is that whatever new agency is given the job,